Alright, gang. Good morning. What's up? How's everybody doing today? Clap it up. Sorry for being... I was a little late. Whoa, 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 whoa. Oh, shit. It might get a little wild. Hang on. Hang on. Alright. Sorry. I was a little bit behind. I was using a little tool that I'm about to show y'all here in a little bit. Hope you guys had a good weekend. I ended up not doing a live stream last night because it ended up being a little too late. And I really couldn't come up with anything other than what I was watching, right? I was looking at a few things like Meta and a couple other things, and we'll cover. There's just a lot going on. Yen, all this, all this stuff. Some of the names, like DJT, I'm watching that. Reddit, we will look at some of, come on. I'm still trying to get this stream up. But anyway, long story short, I'm Justin. Welcome to the live stream. If you have questions, post them down below. Look, chat is, you guys see what I got going on here? Look, nothing. All right, so what I got to do is I got to talk to y'all and not act like I am okay. Go to docs. But anyway, welcome. I hope you're having a wonderful morning today. Yo, why is... Give me 1 second.
Now it's your turn to get in early and start building a portfolio of industry leaders, disruptors, and pioneers with the Fundrise Innovation Fund. The future is now open for investment. This is Coop, the most powerful pet owner eliminator in the world.
All right. So I hope you're having a good morning. We got a lot going on. So what we'll do is we'll go through some of the news, we'll go through some of the levels, and we'll go through some of the top gainers. We'll do all that stuff. We'll have some fun here. Thank you for joining. Hit that like button, subscribe. If you want to donate, all that information is right there in the description. Do so now, if you so choose. I have been trading for a long time. Let's just talk about last week a little bit. And what's funny is somebody actually said something. I thought it was real funny, and I said, "Yeah, you do got a point there, right?" They're gonna make a comment on every little one trade you do wrong. But they ain't going to talk about the good ones. They ain't going to talk about the two damn near 1,000%ers we gave y'all last week. They're not going to talk about all the other, what was it? AMD to the downside to 150. I mean, it was just, the analysis was once again spot on. It's all good, I know that I have a deep understanding on reading the markets, and I may be wrong. And here's what happened. And I traded Friday. I didn't live stream because I had a couple of things going on Friday morning, and it was just I wasn't getting it going because it was just too late in the morning. But anyway, I ended up trading Tesla Friday morning. It was just a bunch of chop is what it was, and that's okay. I don't think I did anything else other than that Friday morning, but we'll get into let's get right into it. We got a lot going on this week. It's going to be a busy week. So you can see here Friday Tesla was a bunch of chop. So what happened? So Thursday I did not look at Tesla. So we traded, I gave out Goldman Sachs Monday. If you guys don't know this, I had brought up Goldman Sachs and how I said that I thought Goldman Sachs would be making, I was looking for Goldman Sachs to make a new all-time high. I'm logging into my broker right now. Just give me 1 second. I know. Come on now.
Because he put Ukraine aid on the floor, Democrats are likely to save him. Now, I don't know how sustainable.
So last week, Goldman Sachs was our top play. And the SPY. I guess you could say the SPY to the downside. And Friday, I kind of figured the market was going to go higher. I even think I put it on Twitter Friday for people. I think I put it on Twitter that we need to go higher before we go lower. Maybe I didn't. I didn't get a chance to. But I was looking for 412 to 414, 415 area, which we'll cover. So Goldman Sachs is still making a new high. This was a beautiful trade for a few reasons, right? This is 2 Fridays ago. Now, what you'll see here this Thursday and this Friday, Goldman Sachs was green while the market was pulling back in red. I noticed it Thursday. The market was selling off. Banks started to rear themselves around to the upside Thursday going into Friday. So I also had on top of that, their earnings were the only one that gapped up. And then it pulls back off the gap up. And once again, one more thing. Did anybody take that information that I gave you guys to start looking at what they're pricing in? Go look at Microsoft. I know I'm getting off track because I have ADHD. But guess what? She's making an all-time high. There's our stop loss right there, below Friday's low. Monster trade, $1.80 to $2. It was like $2 to $2.20, but anywhere from $1.80 to $2.50, you could have got in, maybe even $3, and you just got a hell of a trade. $16 they went to, I'm pretty sure. All right, they went to $16 from $2, gang. SPY puts, we got in those Wednesday afternoon for the great gap down. 30-cent entry, just under $3 when they opened up and pulled back off the belt. It was like $2.75 or so. Another almost 1,000 percenter. All right, AMD. So when you come on here and want to comment talking about, I need to do this, I need to do that, I think you motherfucker need to check yourself before you wreck yourself. And if you talk all that smack about what I need to do, why don't you just come right here on that live stream and do it in real time and give the people what they want and what they need, and what they need is winning trades, and that is money. Okay? Money. That's what I do, right? So there's no, I'm not on here like saying, this, that, the third. So, it's just the second time that, the Mark McGuire person has had to come on here. Oh, I need to do this, I need to do that. Okay, well, my friend, if you're sitting there watching Tesla for 3 days while it's doing nothing, and you're not in the banks, you're wasting your time. I look at Tesla one day, and I still, not after today, but I still felt like we were going to pull back to test 154, 155 for upside. We didn't. Okay, big deal. So what? So let's just talk about that, and not the damn 2,000 percenters, the three other trades, the other three other winning trades we gave out. We gave out DJT as well. So stop it. Here's what happens. You got a lot of people out here that want to take your information. They want to, dig in your pockets, and they get mad, when they get a little competition on their heels, right? They get a little mad when they get a little competition on their heels, but it's all good. It's all good. Just don't fall for it. If you fall for it, you might have to learn the hard way, and that's okay too. Let me see here.
Forget about ever having any bipartisan support again, right?
Yeah, and Becky, it shows you that you shouldn't really be willing to take risks in the position, right? I mean, because they said if you put Ukraine on the floor, we will figure out a way to keep you as politically, the crass political.
All right, so let's go into it. Let's go talk about the news. Let's see where futures are. Let's go. Bang, bang. Man, it's going to be hot here where I'm at, and I have not turned the AC on because it's been getting pretty chilly at night. It's been feeling decent, but I might have to today. So if you're new here, please do me a big one. Let me know where you guys are tuning in from. If it's your first time here, what are some of the tickers you guys want to talk about? We have a ton of earnings this morning, so let's go right into the news and what we have going on for the day, and we'll come up with a game plan. I know. First off, we'll talk about this later in a minute. Let's see here. Where are we gonna go to? Where you guys want to go to first? You guys want to go over the earnings first? I have to use the restroom real quick. SoFi will be coming out. There were talks about Shopify being up this morning. And we'll talk about a little bit of what happened last week so we can get a kind of like remember what we had going on last week towards the end of the week, and how we do with coming into this week. Obviously, Amazon, Apple's on its lows. I personally think if there's going to be any directional move, it's going to have to be for Amazon, because Apple's going to have to do really bad, just god awful, to go down any further. So IBM, what is that? Wednesday, Thursday was down, but this morning Shopify was up $2. Tesla was up. So Shopify, I'll have to go over the news here and see what this was. But let me use the restroom really quickly, and then we'll get right into it. It was a lot that I had to cover and start this morning. I will say this. I am looking, if we can start to close up here above this 50-day, I would watch 514, 515 area, 516-ish. This whole area right here, on the S&Ps. Now, you got to be able to close the day up and over that area, in my opinion. All right. So that is what I'll be watching for, right? I expect a little push. I would like a pullback. All right. I would like to start with a little bit of a pullback in the morning today, and then try to get a bounce like maybe lunchtime, afternoon, going into tomorrow. We'll cover some of the news and what's going on here. You have this bank talk now, which is what we didn't have yesterday, which is a given. We've been talking about this for a while now. That I guess all of a sudden everybody forgets that banks they're struggling at these rates, right? So let me use the restroom and we'll cover it. But we need to get up over this 510 level. We need to close here on the S&Ps, and we still have a little bit more room that we need to cover up here at 5. See, why does it change? Like, it feels like it changes every time I look at it. It feels like it changes, right? I guess it will in every other time frame. That's nice. Yeah, 512 and like 516, I guess it is. Let's see if we can get above the 512. Give me 2 minutes. Let me use the restroom real quick. I do apologize.
Saying that there
And
are
I will be right back.
going. And finally, we are looking at Domino's shares moving higher, up 4.5% in the pre-market after the company reported earnings that beat revenues. The pizza maker said increased marketing and targeted promotions have helped drive traffic and improve sales. Shares up this morning and up 60% over the past year. Becky?
Tessa, thank you very much. Pretty good job yourself, making all the bells and whistles out there, interesting us in this stuff. Okay, as fears mount over the economy, that the economy might be heading towards stagflation, our next guest says that the current economic scenario is nothing like the stagflationary environment of the late 1970s. For more on the markets ahead of the busy week that we've got this week with earnings and the Fed's policy meeting, we want to bring in Ed Yardeni. He is the president of Yardeni Research. And Ed, this idea that it's not going to be just like the 1970s stagflation is a pretty good one on a Monday morning. Makes us feel better about this being a Monday. Explain.
Yeah, I want you to feel better. Look,
All right.
I think.
So I want to ask you guys a question too. If there's anybody out there that has one thing they would like to work on or get better at, could you throw it in the chat? Why is Okay, there we go. All right, so let me pull up let me go to my top gainers. Let me get everything going. Again, I just started the stream up pretty quickly, so you'll have to forgive me. So 512 is this area in the 100-day moving or 50-day moving average that I want to look for in the S&Ps. I think you could start to get a little bit of a bounce, and then we get the pullback off of off of the 50-day. If you notice here on the hourly chart, it just, you can just sense and feel that it kind of wants to roll over. And look at the volume. Now, what I want you guys to be aware of on the S&Ps is look at the pressure that we have up there, right? Look at the selling pressure we have up here. So I would take that for what it is, and just understand that this bounce back. Look how low a volume it has been. All right, last week. Yeah, it was nice. It wasn't that low. It wasn't that low, but to compared to what we have up here, I mean, it's pretty weak compared to the selling pressure that we have sitting up there waiting for us. All right. I am curious longer term if this is our bounce back to put in a lower high and we start to try to go lower. Now I don't. Now it's kind of not ironic that we wake up to the first signs of banks. Now what does that mean for the Fed? Right? Did they say, okay, here we are again? They ended the policy, which, listen, this is the number one thing that I talked about. Right? The Fed's been adding liquidity. They've been coming in, helping the banks out, saving the banks so that things can, just operate and go through and give them some time. And things were running smoothly there for a little bit. Now that bank term lending program is over with, right? So if there's banking issues that are coming up, they can't just go to the Fed. So this morning you get news of a bank that's actually around where I'm at, and they got raided. The Feds ended up raiding them. You would think they're drug lords or something. So they took the FDIC took over the bank. Let's see here. And then we're going to get into Tesla. We're going to get into the yen. We're going to get into all that stuff. Okay, they're not going to talk about it? That's so weird. Phillips, let me refresh it again. That's crazy. Oracle boosts its generative AI capabilities as cloud competition heats up. And upgrade headwinds seen for Lululemon and Tesla. Headwinds. Let's see. Sorry that I don't have this up, but I don't know why. Here, it'll be right here. All right. Let's go. Let's see what's up with this. Let's read this article real quick. If you guys don't know, the yen has been, depending on how you want to look at it, the yen's going pretty crazy here the past, I guess, around midnight or so. I don't know too much about this. I'm not an economist. I don't know why. I don't know if this, there's something going on here. There's volatility. So there's always ways that we can play this in the markets. So, all right, let's read this real quick. The Japanese yen weakened further Monday, seeing little relief after middling signals from the Bank of Japan and increased expectations for longer U.S. interest rates put the currency close to levels last seen since 1986. The USD Japan pair, JPY pair, which pegs the number of yen required to buy $1, blew past the 160 level on after seeing what analysis described as a flash crash on Friday. Weakness in the yen came over the Japanese markets closed for this holiday. The U.S.-Japan pair rose as 1% to a 34-year high of $1.6020, 160.20. It was now close to reaching the highest levels last seen since 1986. Oh, hey, good year. When the U.S. had threatened Japan with trade sanctions, the yen's declined before Bank of Japan did not offer any concrete signals on monetary policy and weakness in the currency market. While central bank did hike its inflation outlook for the coming years, it also lowered expectations for economic growth, rising questions over how much Bank of Japan, the BOJ, could potentially tighten monetary policy this year. BOJ had hiked rates for the first time in 17 years, citing an expected increase in inflation on the back of spur wage hikes this year, but the move proved fleeting support. But the move, come on, provided fleeting support for the yen. This negative domestic signals, the biggest point of pressure in the yen, persist concerns over a wide gulf between U.S. Japanese interest rates, U.S. PCE data. The PCE data also pressuring the yen. We'll see what happens here. So Japan needs to sell U.S. debt. No buyers for U.S. debt other than the Fed. It's game over. Either interest rates will rise in U.S. to match lack of buyers, or the Fed will print more currency to buy the debt. Do you believe that? Likely that Japan allows currency to continue sliding. Yep, I'm with them. Alright, so this is one thing we're going to have to watch out for. There's a lot going on this week. Amazon, you have SoFi earnings coming up. Domino's just reported. Phillips, Franklin Temple, TIN, BBVA, RVTY, and Alliance Resource Partnership. Paramount later. MSTR, MicroStrategy also later. One of my favorite stocks to trade other than MSTR is RIG, Transocean. I have not traded RIG in a while. Logitech, CHED, NXP. So, you know, it's going to be a nice couple of days, right? There's opportunity everywhere. PayPal, AMD tomorrow, Coca-Cola, Amazon, Eli Lilly, SMCI, right? McDonald's, Starbucks. You're going to start seeing consumer in restaurants, etc., etc., etc. So we'll cover that as soon as they come out. We'll see what time they get released. NVIDIA, ANET. So let's do this. Let me refresh. Oh shit. Excuse my language. I did not mean to do that. Okay, so they have reported. SoFi has reported. Let's go look at SoFi earnings.
For 10 years or so, starting in 2009, Beijing created what was basically a protective cocoon around the EV industry. There was enormous consumer subsidies. There was enormous producer subsidies. There was enormous protectionism. Only Chinese cars, with very few exceptions later on, were subject to those subsidies. So you had this build-out, government-supported industry.
Yo.
Within 10 years, the industry became very impressive. It's very technologically innovative. Got these great cars, but you got too many companies. You got too much production, and so they're all producing. They got a saturated domestic market. They need to go out. So you've got a price war in China right now. Tesla's caught in the middle of that. So Tesla's got a big job ahead of them. They're trying to get.
I don't understand. Oh, okay, that's why.
Why would China want to help keep you just said keep Tesla in the game? Why do they want to keep them in the game?
Well, I think you look at BYD and others who are slashing prices and are absolutely.
That's insane, bro. To some of these energy names that I've had that I'm looking at. Okay, so let's go right into some of these names. If you guys could throw off some tickers. I don't think we have anybody here like we usually don't. Yeah, we don't have anybody here. So this is why I think I'm going to just not do this really anymore. I feel like it's a waste of time. All right, SoFi. So here we go. SoFi has just reported. I don't know what time their earnings call is. Let me fix all this stuff here.
Technology that Elon brings to the table is pretty impressive. He's got self-driving, autonomous vehicle driving capabilities. They want to put some new technology in the new Teslas there that'll make them somewhat autonomous. There's an upside for China to keep Tesla in there competing against these domestic companies. It creates for a more vibrant ecosystem. And now that Chinese companies have scaled up,
Daily chart. Where are we at? 840.
I think they're comfortable having Tesla compete right now.
All right, so SoFi has gapped up above its 200-day moving average. 856 looks like that gap fill over there. You have the 200-day here. Let's see. All right, so first things first, they expected $1. Now, what I was talking about earlier. Now, I don't mean to get off track here. All right, look at Microsoft and Google. What do you guys notice? And I said this Friday. It did not surprise me. All right, what did you have? If anybody took anything that I said Wednesday and Thursday, going into the markets and going into these earnings, going into the weekend, I'm like, guys, I said it all week last week. Look at what it's pricing in. Look at what it's pricing in. It did over the move, and then what did it do? It moved, and then what did it do? It literally pulled back exactly to what it priced in. Okay? Microsoft. It did the initial move, and then what's it do? It pulls back to the initial price that it priced in. Tesla did not. There's a bunch of other ones that I could come up with, like let's see, Google, Microsoft, Meta. Same thing with Meta. Meta just, like I said, look, it rallied, and then what did you get? You got the immediate bounce back. This was your this is what she was pricing in right here. It was at like 239, 240 because they were pricing in $50 or $40, something like that. So it was like 460 or so, something like that. I think. I know it was like. I know they were pricing in. It was like $40, I thought, right? Yeah, it was like $40. And then, you know, it does it it did it after hours, and then what's it do? It bounces back to that price. Goldman Sachs. Same thing. It did more than what it was, than what the earnings call had said, right? Rallied, and then what did it do? It pulled right back down to the number that it was pricing in. So, I want you guys to watch for this stuff. I'm telling you right now. Watch for it. If you don't know how it's priced in, let me know in the comments. I'll help you with that. I'll help you with, understanding that, but just keep an eye out for it. Like, look, let's go to SoFi again. They were pricing in about $1, a little over $1. Where is she? Oh, come on.
Indeed you do. Indeed Instant Match instantly delivers quality candidates matching your job description. Visit Indeed.
She's gonna start with this now. So SoFi did just report. All right, so she closed Friday at 788, roughly 788. All right, 788. We'll call it 790. 790. And it did not, what is that? 790, it should be around 890. And again, this was Friday. This also may not have volatility priced into it, but we'll see. 1.9. Close at 790, 780. So we'll see. Wait for the earnings call. I mean, if this thing's going to go higher, look for the move to 890 or so. We'll see. It doesn't have to do it. I've said it last week that it doesn't always happen. Doesn't always have to happen, but the majority of these names, especially big cap tech, have made the move. Right, bigger than what it's pricing in, and if they do, they usually will pull back or bounce back to the area that they were pricing in, and that's a next day play. I didn't do it Friday on Google and Microsoft, but Google did it. It rallied, but then it pulled right back to the number that it was pricing in, and then same thing for Microsoft. Literally same exact thing. And they went right to the number. That way, you know, this is what the market prices in. The market makers get their opportunity to, and other individuals that sell spreads and all that fun stuff. So, all right, let's go look at the markets. And, you know, Tesla, you have Tesla this morning. I don't mean to be all over the place, but Tesla ripping and roaring, news off of Baidu. What's Baidu doing? They're using Baidu for, I guess their FSD, or, you know, their AI automotive data stuff. I was looking at Baba last night, trying to come up with a new watch list and look at some new names. And they've all just been on a roll here. Okay, so you can tell there's a little bit of divergence, right? But Baba doesn't have that news, and it's not gapping up above Friday's high. And Baidu is gapped well above Friday's high. All right. Tesla. Tesla. Nice rally. We could see something, guys. I think we're going to start to see something. What I'm going to do is I'm going to take all this off. All right. I like this level here, and I like this level here, even though I don't need it. And I don't need this right now. Let's just get rid of them. Let's just get rid of all this stuff. And then we'll start from scratch, right? We'll start from scratch. I mean, this pre-market move, you can't ignore it. Like, seriously, this pre-market volume is something you ain't had in a while. And remember what just took place, right? 260, right? These guys are short. These ladies and gents are short from 260 or so. I was looking at this level here. It's like 200-ish. And look, we have gapped above 180.50 already. So that's what I'm going to be looking for. I'm going to be looking for a pullback into this level at 180. I was looking for 180 last week. Like, I was kind of mixed. I just thought that I wanted to get Tesla to pull back to this area right there. Last week, I was long Goldman Sachs Monday and into Tuesday going into the week last week. I said, I want to look to get long, have a stop below Friday's low, okay, on Goldman Sachs. Monday into Tuesday, that was the top and first trade idea. Then we looked at AMD, downside 150, Wednesday puts on the SPY. So then I go into Thursday watching Tesla. Now, I have not watched Tesla at all. Okay, so I'm just like, the thing is like, you're not going to understand and see what I see, because I'm not going to say it. All right? But it felt like it needed to pull back to go higher. But this was a really nice area that it held. And it's okay. Right? Just the SPY and the Goldman Sachs trade, those were two close to 1,000% trades. You know, this level right here is what I was looking for, was this area. I'm like, man, if we could get a pullback in here, which was that rally onto their earnings, boy, that would have been that's the entry I was looking at to go long. And I said 158 as well. I said, guys, 158 may hold. It was resistance. It's now made it support. You know, we could go higher, but if 158 does not hold, 154, that's where I want to be long. So we never got it. But anyway, let's keep it moving. So, let's go to a daily chart. That's the first thing we need to do, is know where and what we have ahead of us and below us and what's going on. We have a nice range here. You guys can see this is a really nice level here at 180. We're now above 180. We're at 184.60. She's just a climbing. So right now we're going to be back in between the 50-day and the 100-day moving average. So obviously we need, and I'm going to, you don't have to, I would like a pullback. I would like a pullback to get long. And I don't think we have a problem getting to 210. I want to be long Tesla this week, and this is a trade I want to hold on to. What's funny is Goldman Sachs, right? Coming into the week last week, I wanted to be long Goldman Sachs for a new high. Why? Well, I had two different reasons. They were one of the only stocks that gapped up big on good earnings. Second, the market was pulling back in a decent way the end of last 2 weeks ago. And banks were starting to flatten Thursday, and they were green Friday when the market was red Thursday and Friday of 2 weeks ago. So that made me come into last week in the beginning of the week saying, okay, here we go. I got this. I got this. Let's make a new high. I'm going to go for it. Stop below Friday's low. Okay, bing, bang, boom. What happened last week? I started watching Tesla Thursday. I'm rotating with the market. Right? You guys, like, you may not see this. Now I'm saying it, so now you may recognize it. And you should start to see more of that. So if I get Tesla wrong when I haven't been watching it, don't get upset with me. I'm not always going to be right. All right? I know I'm right. I was only wrong once last week, and that was Tesla. And that was because I was not watching Tesla any other time until Thursday of last week. And what happened? This is when you started to get the rotation. Look at the volume that came in Thursday. That's the day I was looking at it. So, yes, I was wrong on a pullback to 184 or 154. You know, I didn't get the 154. I had to take the double bottom 158. I didn't. Whoop-de-doo. Okay. So, let's do it. All right. Now, you guys are going to be able to see. We're finally, for the first time in this year, the first time this year, we're going to be above the 50-day closing to the upside. You know, we were above it coming into the year, but I mean, that's coming into the year and we're just falling, right? A little bit of support breaks and it just falls. It's been falling all year. Let's see if this thing starts to change. Honestly, we could look for, I'm looking for 210 at least 210. We're already almost there. 200 is definitely going to be in the range. So let's go here. What I'm going to do is I'm going to pull this out. Let's get our levels. Let me move this over. Let's go get the bigger levels first. All right. Most obvious level, 175. We're above it. Okay, that's a major level of support. This to me would be a failed breakdown of this 175, 170 level. All right. All right. This is a nice base there. It broke down, quickly recovered, rallied off of it. You have this area right here. Right. Really nice support level here. See, that is 180. And what I'm looking at is this, right? This area, you have 180, and then you have, what is that, 197.75-ish? See, I'm trying to connect the dots as best as possible. I guess we could use opening price. Yeah. So this is our new range. That's good. I feel like we're up in here now. We're into 180. This should be our new range. All right. What I'm going to do as well, you know, and honestly, the resistance level is going to be up there at 220. That's where I would look to see, okay, we get a real pullback. And look, what do you have coming in up there at 220? You have the 200-day moving average coming in up there. So let's get rid of this. What I can also do is I can just go here, and we'll make this a whole lot easier. We're going to make this a whole lot easier on us. All right. So $199.50. Let me make this a 2. All right. So that's $199.50. This is a longer term trend. This is going to be really nice, guys. This should be a really nice trade here. In time, I'm actually looking to hold on to this. I'm going to be looking to hold on to this. All right. Let's go to a 4-hour chart real quick. Now this is pretty simple. Pretty simple. You know, I don't think you're going to get the shot at 180. Maybe we do. Maybe it takes a couple days. That's going to have to be up to us to say, you know, what are we going to do? Are we okay with, like, just getting in and going long because there's news, this thing's been shorted? You know, we'll have to just watch the volume. And watch the volume from last week on Tesla. I think that's also going to be key. I think the volume from last week is going to be key to deciding how we play this week. At least how I'm going to play it. See, look, you're just ripping. Look, they're making this move like without anybody because they're getting out. They know, like this is right now is telling you, hey, it's on. Okay, it's on. They're covering. Look at the volume pre-market. Let's pull up a 15-minute chart. Look at this. I need to pull back to somewhere, and we got to find out where that pullback's going to be. Why is my charts doing that, bro? I don't. We're not going to get. It's not going to give us 180. Maybe we do get 180, but this is a parabolic move. This is relative strength, kind of. You know, you could look at it however you want. This is demand, right? Some people look at supply and demand as levels, but this isn't supply. This is demand, right? There is a demand to buy the stock for a few different reasons, right? So I gotta watch what I say because some people look at it one way depending on if you're a retail or an institutional trader, right? Some people are like, oh, supply and demand as support and resistance levels, when really others look at it as like somewhat like you would call this a relative strength type of day. No, this would be demand, right? There is demand for this stock because they need to get out and people want in. Demand. All right, so let's go to an hourly chart. What I will do first, let's go to, we'll keep this up. We'll keep the hourly chart up. This looks like it has to be the, man, look at that beautiful, man. I was so mad we never were able to get that breakout on that inverse head and shoulders there. I think this is the first level we got to look for is 189.95 to 190. Let me do this one more time. I want to make sure it's correct. I know you guys can probably see things better on what. You know what's crazy is I see things a lot better when I am I see things a lot better when I look at it through my phone or through a different device because I somehow see it, like it just helps me see things better. Okay, so we have our target. This we can get rid of. Alright, here's the next thing we're going to do. Man, everything is so it's just... Listen, when stocks are oversold, they can remain oversold. Just remember that. Just remember that. That's where I got in trouble Thursday, wanting to see if I could get that pullback into 184 or 154 instead of 158. All right, so 185. We are right here. I wish I could pull that up. Yeah, guys, I'm going to need a pullback into here. Why is the 15-minute chart doing this on Tesla? Yeah, I was going to say, you should give me more. All right, so I'm looking for a pullback into this area, guys. That's what I'm going to look for. You know, I think you can get it off the bell. I think off the bell you'll get it. But, sucks, man. I should have just got long this name. And I didn't, but it's all good. It's all good.
And when you're supported by someone who's space though too, it's much easier. It's more than tech, more than service.
This is a huge level. 180 is a huge level. I think we got to wait for a pullback into it on Tesla. I do. The thing is we have nothing really here. If you guys notice, if I take you to an hourly chart, you're going to notice that even just on the month, there's nothing there. Let's go to a chart real quick and look at the volume profile. Let's see if I can guess it on a chart. I would say that the level would be like, it's probably going to be here. Let's see if any of my levels here add up to the volume profile, which should be right around there at 210.50. 210.50. Ready? Let's see. 210.50. Anything? Nope. Damn. 296. 296. That's the lower range. So if we look here at your volume profile, you have a little bit of price action here. You're getting into a little bit of chop there. But if we can test this level up here at 189.50, I got to try for the pullback. Right? Even if I make a few bucks, even if I can pick up a few dimes to go long and make, like, give myself a little bit of insurance for the 180 long if I'm able to get it. Because I'm telling you guys right now, this is a trade I was thinking about this morning. They had the Barron's guy come on Thursday, and I said this. I said, we could start to see Tesla really go. It feels like the sentiment is really changing right now for Tesla. It does. And I want to be long, and I want to stay long. Bro, no. Okay, so that's my 100-day moving average. So we're going to come in with a gap up today. A nice gap up.
Well, I think you raised something that people aren't talking about. Kids on college campuses, adults on college campuses, they do feel that the protesters of the 60s and 70s, I mean, I've been on campus a long time, were heroes. They were people who sort of changed our...
Yeah, that 179, that was nice. So that's Tesla, guys. Like, I have to say that I think we need to wait for a pullback. I think a pullback is in order to get long. And we're going to have to really keep an eye out for this volume. We're going to have to keep an eye out for the volume, because if this, because this could continue. I'm telling you. It could just have, you could get that first pullback, bang. Algorithms, trigger, and this thing could squeeze. I got involved in this back in last January, back here, and you kind of got the same thing. It just went, goes. Listen, when Tesla figures out where it's going, it goes, and it doesn't stop. So, with that said, the first pullback I get, I will be going after it. Maybe we can get into 220s. I don't know. Maybe I'm stretching it too far, but 200 to 210. Let's get to 200 first to see if we can get that. We still have gaps ahead of us. We still have some gap fills way up at even all-time highs from 2-3 years ago. Okay. Where's the 100-day? So we have the 100-day up here. Man, all that stuff is probably going to meet around 195. Dude, they're going to get... Look at this, guys. Like, look. Tesla is already at is going to open up around 190. Look at it. 186.65. There is a massive short squeeze going on right now. I should just buy the stock. I'm not going to buy it right now, but I should have bought it earlier this morning. Unfortunately, I did not. I mean, look at that, guys. Look at that. So where are we going to buy this at? What are some buy points? What can we look for? 182.65. Let's say, boom. This thing's going to shoot. This thing's really going to rip. God damn it, bro. Well, it is what it is.
One employee who was anti-Semitic. The second, there was somebody who was anti-Semitic or somebody who was against
situation. And yes, it would hurt innocence, if you will, but it would probably create real pressure on the head of that executive search firm or the head of the university, the administration of the university, because the other students, who by the way have been sitting on the sideline not saying much either, would start calling up the administration saying, you know what, we're all getting hurt here by this situation because our entire brand is being impacted, and we are.
Yeah, guys, I think
If this whole situation doesn't get fixed, I would also think, by the way, you're Apollo, but you know, in private equity land, venture capital land, think about passive managers who manage the endowments of these universities.
I'm going to put this level here as my first entry point. I think they know this. I mean, they're not stupid. They do know. But 185 area is going to be the first place that I look for an entry. I mean, this is such a huge move. We were at 170. We're up $14. So, you know, this might be one that we have to give a few days before we even take it, but I got to look for a pullback into the 50-day. I don't get it. I don't get it. What I will do is, the last time I'm going to say it, I will just watch the intraday volume to give me an inclination on whether this trend continues, and I think it will. All right, but I don't want to buy it, come in with the gap down, and be like, damn, I really fudged up. All right, because Tesla, when you guys know, when she goes, she goes. You can see it now. She's doing it now. So there was our first pullback there at 185. Let's see if it gives it to us again. I highly doubt it will, but we could be hopeful, right? 180, 190.
Now, in the business community, Andrew, I don't think that you should ask every student. I look at my students in my class at Penn.
Yep.
I don't think I should be standing in front of them while they're working 60 hours a week and saying, you know what you got to do? You got to go out and make those, 1% protesters in the yard.
Yeah, I think I might I'm going to take this trade out a few weeks, guys. If I go long here, which I will be going long. Don't get it twisted. I will be going long. I'm gonna put this trade on for a few weeks out. I'm gonna be putting this trade on for a few weeks out. All right, let's go see what else we have moving. So right now we have 180, 185 as a possible buy point for us on Tesla. Let's go through some more of the news because I don't want to just waste all my time watching Tesla because we already know where we want to go and what it is we're going to do. Let me actually throw up the
calling the administration and saying this is crazy, we can't have this going on. And by the way, you have some of those students doing that because there are Jews and others who have been harassed and they're calling an administration.
Oh, we can't. Oh my God. All right, so that's Tesla 185 pullbacks to 185.
If a person is engaged in anti-Semitic behavior, I think it's like Bill Ackman on your show said it's perfectly
All right.
appropriate to say.
Says Russia targeted gas facilities that secure EU supply. Yeah, they did target it because you did the same thing. Of course they are. All right, SoFi. And there's something I wanted to show you guys too, that I was looking at. If you guys could let me know what it is, that you'd like to learn here. What are some of the stuff you guys want to talk about? Tickers. If there's anything you're struggling with. If there's anything you want to know about me, all that fun stuff, just say hi. Let me know where you're tuning in from. If you're new here, let me know. All right, Western Digital receives investment bank analyst rating update. WDC. Let's go look at WDC real quick. WDC. Nothing. Ain't it not a none. Ain't it not a none. All right. You know what I could do is I could go here. And what we'll do is we'll open this up. All right, we'll open this one up. 1, 2, 3, 4. Let's go to a 5-minute chart. All right, so we got Tesla. And then we'll put up the S&Ps. I want to look for a pullback in the 509.50. I'm going to tell you that right now.
Hey, Chuck. How are you? What can I do for you?
All right, so DJT, I will say, is on the list. There were talks about this thing this morning. So what I was looking at is I was using. Do any of you guys use Google Trends? Do any of you guys know what that is? Does anybody here use Google Trends or know what it is? Stock chart, AMD. Let's go look here. DJT, 3-minute. Oh, that sucks. Wow. Well, that's actually not bad. So look at Nvidia here, guys, and you can keep an eye out for AMD too. But AMD does have earnings. This level here on AMD looks like a really nice area that it pulled back to, and I would look for this 880 to see if you can climb it, or 875, and see if you could climb to 900. See if you can climb to 900. You gotta break up through 880 though. Just want to hear this. I hope we can get by. If it just feels like we're the enemies with this guy that's in office now, takes it out on us and ships it over to other places. All right, so why did that just leave? Oh, because I was looking at an hourly chart. Okay. Okay, pullback 871.50. That is a good area. All right, whatever.
So you can see that somewhere in there is probably a compromise between Democrats and Republicans.
Scott, that may be true, and maybe Robert wants to weigh in on that, but we also heard his plans for capital gains taxes.
Yeah, yup, capital gains. That's crazy. More than double capital gains. Like, this is crazy. We didn't put ourselves in the war. You did it. You need to go handle it, gang. You're the one who got yourself back involved with this NATO, Ukraine, get a bunch of other countries in there. So stop taking it out on the American people. You know what's crazy is the only president that Russia has actually done this really is Obama. They started to, they never did, and Biden. And it's not a coincidence that Trump, Bill Clinton, George Bush, Russia never invaded Ukraine then. There's a reason why. And people need to know this. So, anyway, I digress. So, let's see here. The people look at Kava. Kava had a really good day Friday. So what I was getting at was this Google Docs here, and I'm going to go back to the news, and levels and stuff. But I started using this, and you can get trends, right, on what's been looked at over the past, week, 7 days, forever, where, what, when, and where. So
base revenues or tax increases to offset keeping those tax cuts in place permanently.
Cannabis drug company what?
And oftentimes what
Robinhood, Reddit stocks, breakout, Tesla, breakout, marijuana stocks.
tax cuts permanent,
Wait.
either higher deficits
So this is actually pretty good to use. Oh, 2016. This thing is poop. Nevada, Wyoming. That's so funny it's in Wyoming. That's hilarious. You know why that's so funny that this is in Wyoming? That's so funny. That's so funny. Alright, let me keep it. So Google Trends, I've been using this. You can really hone in on where, who, what, when, and where, and what they're looking at. Alright, what's being typed, like what is... what people are wanting to look at.
Do you support a tax increase, let's say going from 37 to 39.6? Do you think some give on capital gains? I mean, what are your balancers that you would propose?
Well, this wouldn't be popular in New Jersey or New York, but I would eliminate the SALT deduction, the state and local tax deduction.
What would that save? What would that give us revenue-wise?
A couple $100 billion over the next decade, which would
It's crazy. Like, this is your answer. This is what I want you all to see for anybody that is watching. Okay? Like, this is the problem. Get these mother truckers out.
How would you
Listen.
allow those to continue and then pay for them?
Listen.
I mean, either
Listen
side,
to
how would you
his
allow those
answer.
to continue and then pay for them at the
I
top.
want y'all to hear this out.
Do you support a tax increase, let's say going from 37 to 39.6? Do you think some give on capital gains? I mean, what are your
This is the problem.
balancers that you would propose?
Well, this wouldn't be popular in New Jersey or New York, but I would eliminate the SALT deduction, the state and local tax deduction.
What would that save? What would that give us revenue-wise?
A couple $100 billion over the next decade, which would allow us to keep some of these tax rates at a lower level. It would certainly, in some
That's
ways,
the problem.
offset,
Did it miss? Did it miss
increasing
you?
Or keeping in place the child tax credit?
Did it go
the
over your
higher
head?
Standard deduction. Let's not.
Not let's solve the problem in Ukraine and the other issues. Not let's solve the problem. Let's get together, come up with the peace treaty so we can stop spending money on a fucking useless war. No, let's just keep it. No, we don't want to do that. Nope, we don't want to do that. No, not that idea. Like these are the politicians y'all put in office. It's crazy. And that right there slipped by so many freaking viewers. I'll just eliminate some. No. Well, the first thing I'd like to do is go to fucking Ukraine and get Europe, Australia, Canada, Mexico, Xi Jinping. Let's all get together and get this peace treaty and get this shit straightened out. What do we need to do? Won't happen. Oh, salt tax. You fucking retards, man. Anyway, let's go to the charts. Let's go to the charts. So, SoFi earnings. We already talked about that. They seem to have been taken decent. Let's see if they're pulling back. Now they're back pretty much just shy above where they opened. It's pulled back. Waiting for the earnings call. Right? Obvious there. Secondly, let's go look at, and I'm going to continue to go through the news. Let's go. So this morning, Tesla rallying. So obviously ARK, ARKK, any of your names for technology are probably be going. Not that Tesla's kind of been doing the opposite. It's just like its own thing. I would like to see another pullback to 506, but I don't think we'll get it. You might.
Harry and David makes Mother's Day easy. Share a gift made with love with the mom in your life. Choose from hundreds of stunning baskets and towers. It's the perfect way to say thank you for everything. Harry and David, life is a gift. Share more.
All right.
This Mother's Day, help mom take it in stride with thoughtful gifts from WeatherTech. From playing in the rain with money.
So I'm going to be watching 512, obviously, like I told you guys, and 514, 516, 15-ish. This here is your 20-day moving average. Okay, that's your 20-day and 50-day all right there together. All right, short-term crossing below a longer-term trend line. So I want to see. I don't think we'll get through it the first try. Maybe we do. I'm not sure that we do, but if we do, just in case we do, I want to look for a pullback off of that level up there on the 50-day. All right, this is what I mean by look at the volume that we had up here. Look at all that. Look at that. If I draw the box from the highest buy day, look at that. Selling outdoes it. So I do want to see if this is eventually going to be a lower high up there at 514. All right. But right now, what I'm looking for. On the SPY and the overall markets is to see which one is leading and which one is lagging. Okay.
billion in the last cycle capex, and we're starting to see the benefit of that right now. We looked at the Microsoft and Google Cloud.
507 pullbacks to 507. That could be a really nice area for a pullback to make support, right? That actually wouldn't be a bad idea. Even though we've made that. See, I'm going to have way too many lines on my chart. I am. I'm going to have way too many lines on my chart. Fuck. I'm going to look for... How about this? I'll do that. And then I'm going to do this. This range right there. 507.
What do you think, just in terms of the Magnificent Seven's ability to continue to kind of lead things, or is it a lot tougher this year?
Well, there's really two camps in the Mag 7. If you have double-digit growth, you've got digital monetization models, you've got a competitive moat, and an AI story, you're going to be doing well. If you have a China exposure...
All right, those levels are the levels I'm going to be looking for a pullback off of the 50-day up there at 512 or so to see if we can get down to 507, 508. All right, 508, 507. Right now, you're doing a great job of holding this Friday level, that flat top resistance there at 509. So far, it's doing okay. I think it's got a little higher to go, but we'll see. So QQQ is up at the 20-day. Same thing. I did not fool with this, I don't think, Friday.
rolling on. Among today's top stories, Tesla shares surging 10% following a surprise visit to China by CEO Elon Musk. Wall Street Journal says Chinese officials have told Tesla that the government tentatively approved plans for the company to roll out advanced driver assistance functions. Meanwhile, sources tell CNBC that the board of entertainment giant Paramount Global is preparing to fire Bob Backus, the CEO, as soon as this morning. Paramount is currently negotiating a possible merger with Skydance Media.
I was just watching that real quick on CNBC. Meta. All right, so you can see the Qs are doing a really good job of holding support. Same thing, the Qs. What I want to look for is it's not really divergence, but what part of the market is leading and which one is lagging right now. So if I go to like if I go over to ARC, Qs, SPY, IWM.
Andrew, shares of medical device maker Philips are soaring this morning. The company settled a lawsuit in the U.S. for less than expected. Look at that, up 40% in the pre-market.
Oh my gosh.
Agreed to pay
So PYG, Philips.
linked to the recall of some of its sleep apnea devices. The company did not have to admit any fault or liability and said the settlement would end the uncertainty over the
Oh, PHG. I don't have the scanners up right this second.
which says there is a mismatch between the company's
I mean, I do. I just have to go over.
in its growth quality and execution. Analysts point specifically to record low rates of churn across
So here it is.
and its investment in fiber, which fuels subscribers.
There was a stock I was looking at yesterday. I think it was like VRG or something. VR.
Upgrade to buy from Citi, increasing its price target to
I didn't know that Philips was publicly traded like that.
been resilient. Shopify is taking share upmarket. Plus, it's launching new products and features which Citi believes will go mainstream, leading to even greater results in 2025. Citi says with shares off 20% from February highs, this is a good entry point, and right now the shares look like they're up 3.33%. Andrew.
Contessa, thank you. Our next guest says that the Fed has painted itself into a corner and it's too soon to say the central bank's
Okay, so look. Take notice. Meta is pulling back below Friday's close, right? What is the market doing? The market's rallying. Or like kinda. It's like it's trying to hold Friday's highs. So therefore, you know, Meta is below Friday's close.
The bar for the Fed making a move either way is pretty high, and the bar for the Fed to hike here is
Right.
pretty high as opposed to them.
You guys can see.
But since
Man, I need to get
sort of transitory 2.0,
I gotta do something with this.
to this wishful thinking that inflation is
There we go.
down towards their target.
I'll just leave it like that.
Realizing that in reality, the R-star for this economy is sort of that
So we got a little bit of resistance up there, 433. All right, the Dow. The Dow is not above the highs.
moving towards that realization. But ironically, for them to be able to,
So you can see it's actually trying to make Friday's high
and that's just not
resistance. IWM. It's not too bad. It's not too good, but it's also not too bad. I would want to see this 199 hold, 198.96 hold. And then ARKK. I have not looked at Roku actually. That's a valid point. Look, nice big gap up, right? Gap and go. Maybe look at Tesla or ARK for a play if Tesla's going to go.
seeing. But this entire sort of journey has shown us that they don't really know what they're going to do. And in terms of
Come on.
the equity market, I think, have tried.
So, you know, if Tesla, if you want to play options or, you know, I don't know what you guys have and don't have. If you want to play options and you want to look for other opportunities, you could always play ARK, right? You could always play ARK. So let's go look at some of the ARK names. ARK could start to have a really good couple days. We don't, you know. Oh my gosh.
Three ways to get out of MMT way of looking at the difference between 2 and 3 is significant, and 3 is much
It's
worse.
significant, yes, because at the very least, our
Okay.
10-year is still
ARKK.
for a 2% world, and so I think even
Massive resistance level up here
even if we were to get some,
at 49.70.
doesn't mean that the long end rallies from here because the long end is still very
49.70.
much anchored to 2% world.
And we're going to go into individual names. We're getting there.
If we think of the 10-year
All right.
as really a compilation of
But
growth,
if we're looking for a nice trade,
kind of a long-term premium,
we got to get in while it's hot.
long-term premium we can
All right.
what it is when
Got to get in while it's hot.
inflation gets us to 5%, even with the weaker
Um,
number we got.
I'm sticking with that 49.55 level.
I think the ramifications of moving from 2 to 3
49.50.
3 quarters is still significant.
Nothing
and
personal. It's
unprecedented and
just
has very
business.
meaningful implications for prices
Left
in the
shoulder,
stock market.
head, right shoulder.
So what do you, so just for those who are watching or saying, okay, I hear all of this, what am I supposed to do about it?
Yeah. So I think we are seeing resilience to earnings, which is a welcome development, and it's important to see if it's going to
Sorry, guys. I was
shared by the technology
watching this. I can always turn this on for you guys if you guys want. CNBC. All right, so you have the 200-day up here. You have the 20-day, oddly enough, trying to cross below it.
trying to extend maturities, extend duration, right, move out on the yield curve with the hope that that long rate is going to fall and generate returns, and that's been absolutely not the trade. And so our view remains that there's so much
I might have to grab a.
whether that long-term rate falls, even in the event of the cut.
I might have to grab something
Clip that 5% at the 2-year,
real
nothing wrong
quick.
with that, and look for brushfire fires that will come up as the higher for longer world is going to start impacting some lower rated credit balance sheets that are definitely going to start struggling.
What is the unemployment rate from inflation?
It would be very significant, and I think that's one of the hurdles, frankly, to the Fed executing the kind of aggressive policy that would get us to 2.
I'm not exactly sure of all of the holdings on ARK, but I would watch in case you have not only Tesla, but Roku and all these other names start to go. Let me look at this real quick.
Very important point, because now that the possibility of a June cut is kind of off the table, right? They're not going to move. In the absence of something very, very dramatic happening, they're not moving around the election. And so our next point of action is likely December, and it's really hard to say whether that's going to be a cut.
Roxanne, thank you. Appreciate it. Nice to see you.
Yeah, I'm going to stick with that.
Is next for TikTok. Will it
I'm going to stick with that. You got another level up there at 48.
Congressman Raja Krishnamurthy
But the real support level is really there at 47.25. 47. Yeah. And that's more so a minor level.
By next month? Hey, we won't know unless we try, right?
All right.
How long have we waited for something like this? We'll have to alert suppliers, coordinate shipments. Already alerted.
And you can see that they are trying to anchor up correctly. Like the 200-day is down below. The 100-day that is not supposed to be above the 50-day. But we're getting there. It's getting there. It's trying. I don't know why it did that.
Great logo and a beautiful website. Just start with a domain and a few clicks and you're in business. Make now the future at godaddy.com/arrow.
Rose Sparks, engineered for the spontaneous. A dual action formula with the active ingredients of Viagra and Cialis. Faster action.
Fuck it. Oh shit! I didn't have it on live. Are you serious?
Get started at ro.co/sparks.
We put our heart into celebrating moms, where local farmers, bakers,
I know. I was clicking it too much. All right. So I would look for that 200-day moving average on ARKK. That's what I'd be watching for. The 200-day and the 9 EMA. Wanted to make sure Yeah, this level right here, that's a good level to look at. That level is perfect. That's a good level too. Bada bing, bada boom. Stay with your levels. Why don't you trust them? Why don't you trust your levels? Because I don't trust anybody.
Harris Plumbing Heating, Air and Electric is offering an early bird institute for just $29. Regular tune-ups help your air conditioner last longer and prevent breakdowns, saving you money in the long run. For just $29, we'll check the most important parts of your air conditioning system, ensuring it's ready for the summer ahead.
All right, so there's Tesla. Look, it's a fucking. That's so insane, man. That's so insane. Like, are you kidding me?
Welcome back to Squawk Box on Monday morning. The futures right now in the green. The Dow up about 70 points. The Nasdaq up about 72 points. The S&P 500 up about 13 points.
Illinois Democratic Congressman Raja Krishnamurthy is speaking out about why he co-authored the TikTok bill that the president signed. In an MSNBC op-ed, the congressman explains that while he enjoys TikTok videos, the U.S. is drawing a hard line against China using social media to control.
Dude, what is going on here?
Congressman Krishnamurthy joins us right now. He is, of course, the ranking member of the Select Committee on China. And, sir, thank you for being here.
Sorry, guys, it's just taking me a minute. All right, let's go back. All right. Oh shit! On Semiconductor, I didn't know that they had earnings as well. They beat by 4 cents revenue and they top estimates. Let's look at On. So On Semiconductor. Better than expected Q1 results issued Q2 guidance. Awesome. Let's go look at this. Q1 adjusted EPS $1.08. That is a beat of $1.04 estimate. Sales 1.8 billion versus 1.86 billion versus 1.85 billion. Very nice. Q2 revenue of 1.6 to 1.7 versus 1.8 adjusted. EPS of 86 to 98 versus $1 estimate. All right, so we have On Semiconductor. So this could give us another catalyst and another look into like AMD and other the semiconductor sector. What I didn't say earlier was that what did we have Thursday and Friday of last week? Okay, NVIDIA. That's why I brought NVIDIA up in the trade section of this. Shit. I did not mean to do that.
Yes, and not only that, but the TikTok CEO has come to Capitol Hill repeatedly and testified before Congress.
Come on, what's going on here?
Misrepresentations about TikTok, its relation to ByteDance and to the CCP. I'll just give you two. One is that he said that American user data is not accessible to people in China, and that turned out to be false. It's regularly accessed by.
All right, sorry guys, I didn't know what was going on there. So Kava had a really nice day Friday. It looks like this was a really nice area to go long at 59.50. A little bit of resistance up there in the 70s, so watch out for that.
These journalists had basically been covering TikTok, and in ByteDance's view, had been providing unfavorable coverage.
Congressman, let me ask you a separate question. One of the other authors of this bill is Michael McCall, Congressman Michael McCall, and there are reports that he bought $150,000 worth of Meta shares just about 2 weeks after this bill. What do you make of that?
I have no idea, but that's why I have called for banning the trading of stocks. I and bipartisan.
That's so fucking stupid. I have called for the banning of trading stocks.
Trading of individual securities because it raises questions like the one you just had.
And just going back to Becky's question, I don't know if you can put any color on it.
Because most people find it really, really hard to just buy low and sell high, when in fact that's all that they do. They get a discounted price, they go long.
The Chinese government is doing currently that you believe is genuinely nefarious and threatens our security, as opposed to something prospectively, which is to say that yes, it's very possible, I think, in the future.
Man, there is so much to go over. Like, there really is. There's so much going on here. Tesla ripping and roaring. So Nvidia. So on semiconductor, let me get back to that. I'm sorry. So last week, right? Look here. Wednesday, Thursday, Friday, nice day, right? Well, at least for like Nvidia, right? Thursday, Friday, rally. Coming in, finishing the end of the week pretty strong. Take it into the beginning of this week. Let's look at AMD. Kind of the same thing, right? Still, has earnings coming up tomorrow afternoon, but that level up there, TSM, right? Thursday, Friday, nice day. Pullback Wednesday, Thursday, Friday, rally. And now today we get on semiconductors. You have AMD tomorrow. So here's on. So they are pricing in a $6 move for the most part. You have to wait for their earnings call, too. All right? Watch. I know. They're taking Tesla away. It's crazy, bro. It really is. I know. It's wild. It's such a crazy... It's not a crazy move because this is what Tesla does. When she makes up her mind and she goes, she goes. So this is good for us. We already went over kind of the plan for Tesla, but we'll recap it. We will recap it. All right, so they're pricing in $6 on this name. So you closed, if I'm correct, $68. 68. And you went to 71. That's not anywhere close, right? 68, 69, 70, 71, 72. We'll say roughly 72. So, not all of them are going to do it, but 72, 86. So they raised guidance and beat, all right, for on semiconductor. You could look for, if anybody wants to look at this name, I don't know how liquid. Yeah, these spreads are probably pretty wide. Not for the stock.
Yes, I can't get into it, but can I just point out one other thing?
296, 315.
FBI's director basically said this particular concern screams out with national security concerns. It's like a gun pointed at our head. And while
all right.
I don't want to wait for that trigger to be pulled. We don't want that gun to be pulled in order for us to understand that there's a national security threat here.
But you just said yes when Andrew asked you if you know things. You said yes, you won't discuss it, but you do know things that have been at play right now, not for the future?
Yeah, and I think this is something that has been discussed in classified settings. That is in part why you have such a huge bipartisan coalition of folks. Can I just say two other things real quick?
What does he say?
Repeatedly says that they don't want to sell. They also say that they're going to initiate litigation. I think there are a couple factors that weigh against it. One is that there are people in the intelligence community salivating at the chance of litigation in this particular case. Why? Because they can conduct discovery against
Support. Some nice resistance up here at 75, which is also the 50-day. You could get a nice little move up here, 72. We're still at 69. closed 68. So this thing has not put in a move at all. So I'm not really, I'll wait a little bit. It's got some nice volume for anybody that wants to trade it. You could probably get a nice rally on this thing. I would watch 75. It's pricing in $6. It's at 68. So 68, 69. So that kind of adds up. Right? ARC, just gap and go. Let's look at Roku. Does anybody know? Does anybody know the ARC holdings? Does anybody know ARC holdings? So I got SPY. We went through that. QQQ. I gotta stand up. Okay, here we go. Here we go. ProShares Bitcoin stock. I have ARC, W, Square, Twilio. Okay, so Kathy Wood's ARC sheds block and ProShares Bitcoin stock. Kathy Wood's ARC ETF published their daily trades Thursday, April 25th, 2024, showcasing a series of strategic sell-offs across various sectors. The most significant transaction of the day was a sale of Block Inc. NYSE SQ, with ARC divesting 715,000 shares through two of its funds, ARKK and ARKF, for a total dollar amount of $15.7 million. Another substantial trade involved ProShares Bitcoin Strategy ETF, BITO, with ARC selling 237,983 shares, just under 338,000 shares, through ARCW, totaling 6.6 million, as it's following a pattern of reducing exposure to crypto-related assets. Keep an eye out. Why is that? Why would they start to do that? Is this Twilio? The educational technology company 2U. Oh, 2U. I thought it was Twilio. Also saw a reduction with ARC selling 788,561,000 shares across the ETFs for a total of just under 200,000, 197,000 to be exact. This follows consistent pattern. And that's all I see right now for that. Alright. So, let's go to some of the pre-market movers. Alright, you had Microsoft and Google, right, last week? Microsoft and Google last week. All right. Tesla this morning, we've been talking about that, up 11%. They Wall Street Journal revealed that, revealed that it received a tentative approval from Beijing to launch its driver assistance software in China, leveraging mapping and navigation technology from Baidu, BIDU, a Chinese tech giant, also up 6%, which we did look at. All right. I also was looking at Didi, I think it was. Yes, Didi. Didi. Oh, that's why we looked it up. Didi. Did he do it? Did he not do it? Did he do it? Didi Global. It's not coming up. Let me use the restroom real quick. Let me go shut this fan off.
Viciously.
Give me 1 second.
Paramount Global reports first quarter results after the bell today. Look for them. But even more important, maybe, than the latest numbers is what the company is saying about its future. And Julia Borson joins us now to weigh in with more. Hey, Julia.
Hey, Joe, that's right. Well, source close to the situation tells me that Skydance made its best and final offer to Paramount Global's controlling shareholder, Sherry Redstone, yesterday, and that Paramount Global's board could out CEO Bob Bakish and could announce a new leadership committee to replace him as early as today. Now, in terms of earnings, Paramount is expected to grow its revenue 6.5% to nearly triple earnings per share from the year-ago period. But investors will be most focused on the deal that chair and controlling shareholder.
If you guys have
Sherry
tickers,
Redstone
throw them in the
will
chat.
make for the company. Right now, Paramount is in an exclusive negotiating period with David Ellison's Skydance and its consortium. Now, if that deal goes through, Ellison would be CEO of the new company, and former NBC Universal CEO Jeff Shell would be its president. Now, investor Matrix Asset Advisors sent a letter to Paramount Global on Friday flagging concerns, saying, quote, "We believe that outside of Sherry Redstone, there is near universal agreement among the Paramount shareholders that the Skydance deal is a bad deal and not in their interests." Bernstein agreeing, writing in a note saying, quote, "I reiterate, this deal stinks. Unfortunately for shareholders, it looks like it will close in May." Now, as the controlling shareholder, Sherry Redstone has the power to make whatever deal she wants. Shares are down about 30% since the news first broke on December 10th that Sherry Redstone was looking to sell her stake. But now sources tell me Sony and Apollo could submit their alternative proposal to Skydance's bid sometime this week, but Paramount would not be able to respond until its exclusive negotiating period with Skydance ends. Now, there's this other key thing that we're watching right now. Paramount's negotiations with Charter to, they hope, secure payment
So this will be
increases for
some news
distribution
that's
of all
coming
their
up.
channels. That deal is...
All right, so Microsoft. I want to see where Microsoft pulls back to and where she's headed. I'm really curious. You know, I think, you know, this level down here, I'm kind of wondering if it's going to hold.
And we'll hear about Bacchus this morning.
I don't know, Joe, but we're watching it and ready for news.
405.50.
Coming up, what you watch from the Federal Reserve this week with
405.50. Okay. Let's see if 405 can be support.
Top analyst Tony Sacconaghi from Bernstein upgrading the stock to outperform from market perform. That's ahead of earnings. We're going to hear later this week saying, among other things, recent China weakness likely more cyclical than structural. Stay tuned. You're watching Squawk on CNBC.
So if you guys see this, this says JP Morgan analyst Harlan Sur has offered important insights into current trends in cloud hyperscale data center infrastructure spending. On Sunday, he emphasized the increased focus on AI and accelerated computing. This trend, as supported by insights from major players like Microsoft, Alphabet, and Meta, points towards a robust multi-year spending cycle for AI infrastructure build-out. Per their latest earnings reports, these companies are directing their investments toward GPUs, custom AI computing processors, and networking infrastructure. This spells good news for chip manufacturers like Broadcom, Marvell, and probably Micron. But look, more as soon as I read that off. All right, so I want to look here to see if we can hold this 405 area. I feel like this has had a really nice pullback. It's had a nice enough pullback.
IMAX, IMAX, and SM Cinema expand long-standing partnership with 10 IMAX laser systems in the Philippines.
Let's look for 405, 405.50 to hold. Looks like we're getting a little tail off of here. And then we'll see if we can't take it back to 510. Alright, I think it's kind of a bit overdone. It may have a little bit more to go, but I just think, you know, I don't think Microsoft earnings were a total disaster. But I will say this. Right? So that's what I'll look for. Real quick, that's what I'll look for. 505. If this 505 does not hold, then you obviously got to look for 402 to 400, right? 402.50 to 400. This level right here, if we do, for whatever reason, start to break, I will make it this, and I'll make it this color. I'll make it like turquoise or something. I don't know. Like right there, right? There, we shouldn't get there, but if we do, maybe that's your area of support. So, Apple. Okay, Apple has been leading us to the downside. Leaders lead, laggards lag. There's a sign here. So, Google has been doing okay, right? It just had to pull back off of its earnings. That's okay. No big deal. All right. Amazon has yet to report. But these mega cap tech names were starting to pull back just a little bit. I think you need to keep an eye on them. And I'm curious to know if Apple is telling us something. That it's kind of doing the leading, if you know what I'm saying. I'm not saying that that's the case. I don't know what the case would be, but whether it's due to banks, recession scare, leaders lead, laggards lag. It'll always hold true. You know, I know that, you could say they kind of slacked off on AI, this, that, the third. You're right. They have. I'm going to get rid of all this. I'm not even going to play Amazon, so I don't even know why I'm doing this, because they have earnings in a couple days. Sorry, I'm just not getting any communication or anything. I just, you know what I mean? I don't know. So it's a little, kind of gets a little boring for me. I would look for a pullback on the 50-day moving average here on Amazon. You had a nice breakout. If you guys notice, Amazon has an ascending wedge, or what looked like it was putting in an ascending wedge. Right. I think it was that right there, right?
Why do we need to do anything right now? Now, the balance sheet's another story. And I can see them, I don't know, what everybody expects the number to go down to $30 billion a month gradually over time. We'll have to see what they do. But they're running $60 billion a month on treasury accumulation. The biggest problem right now, Joe, are the treasury auctions. Everything's been front-loaded. Obviously,
I don't know.
assuming rates might come down, if that's what Elon was.
Maybe that's it right there. Flat top resistance. It's a little wedge.
That's expensive money.
A breakout, and now it's up and underneath of that level. I would watch 180 for Amazon. I would watch 180 for Amazon.
We all wish that maybe the economy was free to do it.
Oh, wow.
And maybe the Fed wasn't such a big part of our lives.
Look at that gap up.
In general, in the last
Holy cow.
7 years, has the Fed
Okay. 20-day moving average. Never mind. 20-day moving average. We're going to look for possible long up here, guys. Back to 185. I'm not sure what's going on. But
to try and get the Fed to be more rules-based and less seat of the pants. And I'm not saying that President Trump knows what the right thing to do is.
and you'll have to excuse me. I know I'm taking a little while.
Probably like lower rates too. I don't think anyone should be able to influence the Fed, but I don't think the Fed is a great system either.
I argued when I was at the table at the FOMC that cutting rates to zero, keeping them on too long, a third round of quantitative easing, which I voted against, and I had to vote, would end up in tears because you distort price discovery. So rules-based is one thing, but that's not what I'm hearing. Whoever wrote that paper for Trump. Yeah.
I love how they take that stuff so serious. Oh my God, he said he wants to set rates himself. I mean, you guys know he's not that stupid, right? You know that he knows that he can't do that. Right? And there's times when we need rates to be higher. Man, look at that, guys. If that's not a beautiful just wedge, I don't know if I've ever seen one. Look at that. That is just beautiful. Ping, pow, boom, bang, slam, crack. Amazon 182. Pull back to the green box. Hold the 20-day moving average. Look for a move back up to 185, 184. That's what I'd be looking for on Amazon. I think you need to wait for a pullback. I think you have to also be careful. Okay? There's still a lot of headline risks. I feel like this might get everybody all bulled up just to swipe the floor up and underneath of you. It's kind of funny how we started to just get bank talk. Now, it wasn't a lot, but wait till all you need is one that really means something. And what's funny is I just started. I haven't really looked at credit spread at 5-year credit default swaps, and I was doing it about 3-4 weeks ago. So I'll have to go back to doing that. I guess we're going right back to where we were about a year ago. That's Amazon. So if you guys don't know, I want to see what happens here with DJT. I am neutral on this. I look at this as like Reddit, Carvana, DJT, maybe AI. You categorize it in there. I put this with the other small cap names. If you start to get a little bit of a squeeze today, it's not going to happen. But DJT is on the list. We did not close above the 50-day moving average, but we did hold $40. So now it's like, okay, we made 45 area resistance, right here. Support, this area right here. If you guys don't see it. See that? Resistance, support, resistance, above, don't know what I want to do, breaks out. Pulls back, you make 38.50, resistance, you break it, you get a bounce here at $36, 38.50 resistance. Alright, we have the 20-day meets down there at 38.50, we break up through it. Alright, bounce, resistance, break. Alright, so I want to look for a pullback, honestly, but I don't know, like, all it takes is a short squeeze, right? You have Tesla kind of squeezing right now. Look at the volume starting to increase. You know, I'm not sure how I want to play this, but I am watching it. I am watching it. I think you could get a bounce here. And I want to look to see at 45, if we can get back to 45. If we get back there, does it act as resistance again? All All right. 45 is what I'm watching for. If we hold 40 to 45, if we break 40, I'm looking to get short at 40, and I'm looking to take it back down to like 38. All right. We can talk about this real time, as we go to trade it. You guys have any tickers? Throw them in the chat. All right, so did I go over Microsoft with you or no? Did I just completely slack off because I was getting tired? I did. I said watch this level here. I want to see 504 hold. All right, 504 hold. Let's look for a rally back into the 50-day moving average. Even if we have one day, even a test of the 100 wouldn't be bad. We pull back to the earnings price, right? And then we find support. It's exactly what Goldman Sachs did. But Goldman Sachs had a really good earnings report, right? They gapped up. Earnings, right? They gap up. What do? They 2-day pullback. Also, an area that was resistance that we broke out from. We traded it also on this day right here. We were on Goldman that day too. All right. We took Goldman right there. Huge trade. $2. Sorry. Right there. That was us. We were right there. $1.80 to 220, 225. Yeah. They went all the way up to $1,600 or $16. Those calls. 410 calls. Anyway, would have stopped below Friday. Anyway, sorry. So you had the pullback, the gap up, the pullback to the earnings, and then the rally. So let's see if we kind of get the same with Microsoft, but it just feels like this is just, this level up here at 415 and Apple, it just feels like they're weakening up a little bit. It feels like it's just a little bit weaker, but we'll see. Again, I'll look for a pullback. So I'm not going to, if we get down to 400, this 100-day moving average, I'm not going to be, scared. I'll let it do what it needs to do. I may not even trade Microsoft just yet, but you are getting some more semiconductor earnings today. You had ON this morning. And AI talk left and right. I'm hearing AI like 4 or 5 times this morning, so it would only be natural to pull back. Again, 405 longs, and I'm looking to get back to the 50-day up there at 415 or so, 413.50, 414. This pullback is really nice. This is a really nice pullback. Even if it continues, I'm not going to get scared. I'm also not blind to some weakness. So I'm I'm not going to just sit here and be one-sided. It's the beginning of the week. I'm going to take my time. I'm going to let these things come to me, and we'll get it going. All these mother truckers stopping by and not hitting the fucking like button, man. I would really like this. I don't think we'll get it. It would be nice if we were able to get this. Would be really nice to get this long over here at 405 going into the bell. don't know why Microsoft has the lowest volume. Every time I look at it, it makes me want to puke. Just looking at it. Like, what is this? There's no volume.
Deals with cancer. Here with us is Bruce Ratner, who's a former New York City real estate developer who led the revival in Manhattan's Times Square, also downtown Brooklyn. We were just talking off camera about Barclays and his new book, which is Early Detection, Catching Cancer When It Is Curable. And we want to talk about that as well. Good morning to you. Good morning. Thank you for having me on. It's great to have you. Can we talk real estate?
This could set up for a really, really nice long, guys. Off of Thursday, off that 400 level and that 100-day moving average. This could be a really, really nice long.
In the business, out of the business, but maybe then you can speak freely.
Yeah, I can always speak freely.
So what do you think?
So first of all, let's talk commercial real estate. Commercial real estate is in terrible trouble. I mean, you'll hear people say it's, you know, it's bottomed out. It's not going to bottom out. When you have vacancy rates in the city of 25% and occupancy rates of almost 50% or less than 50%, it can't recover. And that's because our whole nature of work has changed. And so whether it be Los Angeles or New York or Texas, the commercial buildings in general, unless talking about new ones.
Why is that?
You don't believe so? We've had a lot of your colleagues and peers, if you will, come on the broadcast who own a lot of stuff in New York and in a lot of big cities, and they say it's coming back. Don't worry. And you're saying it's not coming. I mean, we didn't have a camera.
Can it come back? It used to be that 11 or 12% vacancy was a disaster for our industry. We now have 25% vacancy.
Okay, we broke 405, right? No, we are still holding 405 here.
That does not look like it's likely to change. 3 days a week as opposed to 5 days a week. And in case of law firms, probably 20% of the people come.
What do you think happens with the congestion pricing on top of that?
I'm sorry, what?
The congestion pricing taxing
I
on
don't
top of
think
that?
that.
Not a big impact?
Not compared to the real problem. The real problem is people not coming to work. And when you have that, if you have a company where only, you know, you got 49% occupancy as opposed to vacancy, it's not coming back.
Conduit spiking and now pulling back. It was something high.
Investor class out there who's thinking
You know what? For Microsoft, I am going to put a little level here.
shorting commercial real estate REITs,
Even though selling pressure is decently up,
they should be what?
that 402 level is definitely a level that you want to watch. For a little bit of support if you do break 405. But I'll wait for 405 to break. And I mean, that 100 day is going to curl up there anyway. So, and we already said 402. It's not going to like scare us if it does break 405. It'll be a little sign of weakness. I mean, it's I think it needs to consolidate for a little bit. Right? Meta and some of these other names have just rip and roared, made highs, only to go on to make more new highs after new highs after new highs after new highs. Let it consolidate for a little bit. It pull back to 400 wouldn't hurt. Let it pull back to the 100-day 400, 402, and that's what I'm watching for. All right, I will watch for a pullback down to here if 504 breaks, but I'm sticking with 504 right now because it has shown me right now that it's holding. All right. Unfortunately, I will also say that Friday's low, that double bottom, I guess you could call it, also broke from Friday morning and Friday afternoon. We broke that. That's broke too. Once you break that, you're going to need a new transmission. No, I'm just playing. So 406, a bounce back into 406 if you have a little bit of trouble right there. I'm not going to like throw out a whole bunch of levels, but look, you can see that Microsoft's already resistance. Oh goodness, come on. Come on, man. Right, you can already see what's going on here. You can already see what it is. Right? You've already pre-market 407. You just made that resistance. So, something going on with it. But anyway, 405, 402, 100-day moving average. That's all I got for you right there on Microsoft. We'll worry about the 406, the 408 area later on. Watch for a pop back into the close, only to go lower. We'll see. But if the overall markets, and that's the thing, right? What did we say with the SPY? We said watch for the SPY to, try to bounce into that 50-day, and then, maybe it, it doesn't get through it on the first try because it doesn't really have, the catalyst to support a break of the 50-day the first time it gets to it. We haven't touched it in a while. What is that? 2023.
And basically, I had a science background once in my life, and I was consumer affairs commissioner, so I care a lot about these things. And the answer is that you must get early detection. We need to do a lot more of it. We don't spend any money on it. What kind of cancer was it? They never really found out. He woke up.
Yeah, 20 and 50 day. So if you get a rejection off of that, then maybe Microsoft does get back down to 400. Meta. Meta. I just wanted to see what old Tessie was doing. So she's still hanging out up here at 190. Unbelievable. What a huge move. So this thing is up, I guess, like close to 10% right now. Unfortunately, I was a little bit late on this move. But I still will be there for the pullback. And I will be waiting patiently. If we don't get it, we don't get it. As long as we have the volume, I will go long and I'll get some time on it. Because I don't think this thing is done. I think it's just getting started, if you ask me. And that's why you're seeing such a big move. Alright. Meta.
And where they're located, and the true stage shifting. Instead of catching you stage 4, you're catching stage 1 or 2. Now, it's not perfect yet.
And the problem is the false positives that you have.
Sorry, I don't mean to chew on the mic. If you guys hear me, just let me know and I will I'll stop. Alright, so holding the 20-day, that's a good job. Little pullback, no big deal. Alright, what's going on here? Hold on. Alright, so Tesla, talked about Baidu, we'll cover Apple, rose 2.4 after Bernstein upgraded its stance on the iPhone, making it outperform. Encouraging investors to buy the fear surrounding the world's second most valuable stock. Well, I mentioned that also that I was buying a little bit as well. I own it much lower, but I always just like to buy the dip. Google fell 1.5%, handing back some of Friday's chunky gains, which saw the Google parent breach 2 trillion market value for the first time since November 2021. That's awesome. SoFi rose 2.2% after personal finance company lifted its 2024 guidance following stronger than expected first quarter earnings, with loan origination growing 22% year over year in the quarter. Domino's rose 5.3% after the pizza chain beat its first quarter sales estimates as customers made use of company's loyalty programs. Paramount rose 5% following reports entertainment giant CEO Bob Bakish may be set to leave as it explores a sale. Philips PHG ADRs soared over 40% after the Dutch medical device manufacturer announced that it has reached a $1.1 billion settlement to resolve legal claims regarding the safety of its recalled respiratory devices in the U.S. Oh, that was that CPAP jaunt stuff. Coinbase, oh wow, stock fell 2.5% after cryptocurrency exchange weighted by lower prices of Bitcoin, the world's most popular digital currency. Alright, and if you guys have tickers, throw them in the chat. You know, I could just sit here and fall asleep sitting here talking to myself. The criminally manufactured, unjustified rally continues. Man, put down the crack pipe, bro. Mitchell, take another hit. The criminally manufactured, unjustified rally. It's unjustified. It's unjustified. We didn't just get $7 to $10 trillion over the past 4 years that circulate. Anyway. Wait, did I just lose it? I did, didn't I? All good. All good. I was wanting to look at Uber. Okay. Come on. Alright, so we got to get it going. Alright, markets, we have a half hour. It's game time, gang. It's gang time. Or game time. Remember, SMCI does have earnings. So we Southwest Airlines were doing okay last week as well. American Airlines, Southwest Airlines, I think we're down. Southwest Airlines dipped 1.2% after Jefferies downgraded the shares to underperform from hold. An analyst, she said that it is time to throw the baby out with the bathwater. Oh, wow. After the company missed its lowered guidance for first quarter revenue per available seat mile. Wow. Lululemon slipped 1.6% after being downgraded by Barclays. The firm cited shifting consumer spending trends and higher competition for the call. Makes sense. AMC shares slipped more than 1% after the movie theater giant pre-announced a first quarter loss of 62 cents per share compared to FactSet estimates of 79 cents per share. The company said it also expects box office performance for the second quarter to remain pressured by last year's strikes. Good luck. Y'all keep buying them things. They fucking trash, man. AMD stock target cut at Morgan Stanley amid longer term concerns. Phillips provides update on Okay, we already talked about the litigation stuff. SoFi waiting for the earnings call. We talked about that. All right. Let's go see where the dollar is. Still just hanging out. It's really volatile. It's really volatile. Wow. See, that's crazy, man. That That's right. That's right.
For Tesla, I do have an offer, and it's at 195. Let's see how high Tesla can get.
All right, let's get into everything else we need to know here. To start things off on Monday, who's going to lead us off and look at the market? 51.31, guys.
I would be watching for Thursday's low on Meta to see if you can hold this level. That's what I would be looking for. All right, Thursday's low.
Visit to China, the company winning approval to roll out its full self-driving technology in that country.
BINO, Gaucho, Group, and now stock split, Victor, Indian November Oscar, BIMO.
As we were just seeing there with Sean. Skyrocketing, I don't know about that, but according to this story anyways, more than 10%. Now, if you're just joining a little bit late, again,
And if you guys don't know,
lifted, or Tesla getting a restriction lifted from Chinese officials on
Alibaba was also a stock that I had on watch, and I'm keeping in my back pocket to see if we get pullbacks on this. And
okay for moving full self-driving, at least into the Chinese market. You're also well aware that BYD continues to be able to lower the price of its entry model to well below half of what Tesla charges.
MULN, Mullen, California issues HBI to approval. Mullen class 3 EV trucks at $45,000 cash and voucher for vehicles sold. That's my beautiful.
Drunk driving. And yeah, and don't texting, forget that, or watching television. Forget texting. I mean, you see people fully engaged with their phone without, I mean, watching a movie all the time.
That's why I want self-driving.
Yeah.
Now, I always gauge it these days by looking at the price of FCX. You need more copper when you buy Tesla, and FCX has been telling the truth. FCX says that more Teslas are going to be sold. FCX goes down, it's going to be fewer Teslas. I wish that there were more to it than that, but that's the algorithm that people want to understand, how much Tesla is being valued at a given time. And watch copper first.
Copper highest since April of 2022.
Meaningful.
Today, yeah. Meantime, more broadly, Jim, about the market, we mentioned best week in a 6 months or so. Nice piece out of Morgan Stanley today. Strong aggregate earnings surprises, up 9% upside, best in about 3 years.
That was a very positive piece. Let's say Costin's a little bit more tempers that by saying that it's really the companies with the highest quality growth that are going up, and of course the highest quality growth is mega cap. So the broader range of the Morgan Stanley could trump everything. David, we do have animal spirits last week that were quite impressive. You report Google, and Google goes up, and then it goes up, and then it goes up. I mean, it has like 3 waves of go up. And that's very
well,
bullish.
as the week ended, of course, on the strength of both Alphabet's and Microsoft's earnings.
Right.
You think that was animal spirits there?
Yes, I did think it. Now I wonder whether someone's going to give back if Apple really is going to have a tie-up with Chat and not Google, as the New York Times and actually the whole thing started with Bloomberg reporting that there was going to be a tie-up. Remember? And Apple jumped 7?
I do remember that.
Apple was up 2 and sagging upgrade.
I know those kinds of stories are always hard. These things are dynamic. And
because they're sourced?
I don't know why. It's always hard to know what.
That was a softball. You were supposed to see, Jim, though. You see that they're not sourced, but there's no. Remember, there's no penalty for if you screw up.
No, there isn't. But on Apple, it's always hard, just because
Apple's impossible.
They're just very
I'd like
difficult.
to think I'm close to Apple. I never know what they're going to do.
This is the upgrade from Tony Sacconaghi. Today goes to outperform 195. Jim, stock's been derated. The premium is low by history. China weakness is cyclical, not structural. Look, and more AI could be a tailwind.
Look, I know. I mean, but I saw us going over at Ben Stoto. I mean, you know what I'm going to say.
Yes, I do.
How do you call top in Apple? What's the way you call top in Apple? You have a guy who's not even going to identify as being the biggest bear, but it's the biggest bear. Switch direction and go positive. That's what's called a top. So I hope that's not the case because my Channel Trust owns it. We say own it, don't trade it. But we were upset to see him join it ahead of the quarter, as if somehow, even when you read him, he doesn't say this quarter's the breakout. But to have him on board has a bad feel. But that's like having, when Sports Illustrated existed, it was like having the Sports Illustrated.
Yes, the curse.
Right? The curse of Sports Illustrated. Remember that? Or was that Sporting News? Which one went away?
I do.
Which one went away?
Sports with the curse or Sports Illustrated?
Sports Illustrated.
Yeah, Sports Illustrated is kind of no longer, yeah.
Right.
Sadly.
Since they bought the street, I managed to throw in
a
gratuitous reference.
Yeah. I can remember, obviously, a long, long time ago, really being excited every time that showed my mailbox.
It came out Friday.
Reading it cover to cover.
It was like the greatest. I always checked faces in the crowd for David's kid. What do you have, a 95-mile-an-hour softball? What do you have?
That was, that
no,
was...
No, I'm joking about it.
Great journalism, but that's a long time ago, Jim.
Well,
a long time ago.
Because, all right, but Jamie Salter is a very smart guy, and he has the intellectual property. I love that guy. But I will say that what's happened, Carlos, when I read it, I feel there's a jinx. And what time is he booked? On this 9 and the 12 and the 7 and the 15? He's on the 15.
You want to talk? I mean, Amazon reports later in the week talking about
breaking up the Shark Tank for him.
And is there a possibility they're going to institute some sort of dividend, Jim? You've been hearing
that's
this
the
at
new
all?
thing.
Because there's a rumor. There's apparently there was a Bloomberg page that had an ex-dividend date, and people are like, "What's going on here?" And the stock is actually
if they
up
add a dividend,
1.5%.
stocks would go up 10 because that's what people want. I mean, Alphabet. When you talk to people behind the scenes, Alphabet, they were like, "Hey, you wanted a dividend, you wanted transparency. Well, we gave you everything you need, and you know what? It worked." It was an amazing call. The Alphabet call actually talked about how they make money.
That's another reason why you had this conversation, or at least why this rumor would have some traction, which is that that Alphabet, a very small dividend, but nonetheless first time.
It's going to give back some, but it was incredible to find out how they make money, because they make money in everything. It was much more bullish than I thought. When I went through Alphabet's quarter, when I parsed it, so to speak, I saw that they make money. They're even losing money in these other bets. I bet you they bring back other bets and just make another line item. Because other bets was an excuse to lose money, and I don't think they're going to tolerate that anymore. I think that they have a new intolerance toward losses of money. I wish they would talk about Fitbit as like the analog for what we shouldn't have done. A little remonstration.
Well, that sort of ties in with what Wilson said in that note this morning, that the reaction to these nice upside surprises has been pretty muted because they think the street's being discerning on efficiency, operation-wise, discipline, expense-wise.
Well, I mean, I do think. Look, I think he represents now mainstream. That's true and good, and good.
Who represents Main Street? What?
Wilson. Wilson's come around.
Wilson. Price on Wilson? Which Mike Wilson we're talking about here. Morgan
Dennis
Stanley.
Menace and Wilson.
All right, sometimes it's a little hard, guys, to keep up, okay?
Well, if you focus on what we're doing, it wouldn't be. Instead of focusing on tiny Skydancer.
Believe me, I got so much on that.
I just think Wilson's represented mainstream. Saganagi is the curse of Apple. I mean, where are the guys who you counted on to be negative? What happened to them? Where are the Bears? Where's Jellystone National Park? Hey, boo-boo.
Hey, boo-boo.
Hey, boo. Hey,
Let's go get some picnic baskets.
I'll tell you.
We could go full Hanna-Barbera. We could do the whole show in Hanna-Barbera.
Absolutely, why not? Yeah. Who was Zaslav have the intellectual
rights
property
to
then?
Warner? Yeah, I believe that's.
Yeah,
I believe that's a Warner Brothers property.
And who has the rights to Tiny Skydancer? The Journal. What a great piece this morning.
Well, Paramount did do the Elton John movie.
That's true.
Yes, they did.
David has it covered.
Are we going to get to it after
yeah,
a break?
we're gonna get to that.
But can I just say that we have a good quarter from Domino's this morning?
Yes.
If you want to know
what else?
Who has good quarters.
Okay, good.
We have another slash and burn of Charter. They underperform every single lineup except for the ability to be able to produce something. I don't know. I'm trying to find
stock is down 35% this year for a
everybody
reason.
loves, but I question when you get him on because he has to. Every time he issues equity, it's positive, but when you issue a convert, Anthony, you should know you can short against a convert from now the cows come home. I got 2 cows.
We are going to talk to him in the next hour. Decent guidance.
You have 2 cows?
I got 2 cows. Yeah, they're really.
Are they new?
Yeah, I just got them.
You just got them?
Yeah.
Really? Would you mail order? How do you get a cow these days, Jim?
Yeah, you get
on
them from,
Amazon.
You get them from Omaha Steak. That's how you get them. Oh no, we gotta go.
Oh, I want pictures of him.
I
are they dairy cows or are they?
No,
are you raising
they're they're a little older.
Oh, that's very sweet.
Look at these two, Lucy and Massey. But they told me to call it Macy. But Macy's is like,
we're gonna get this picture. We're gonna get it on TV to show people. Those
Macy?
are 2 beautiful cows.
They're beautiful. You can't do anything other than feed them.
They
love donuts.
We will get to Kramer's Cows. We'll get to Paramount, SoFi. Got some calls today on Lulu, AT&T, Southwest. Take a look at the pre-market. Back in a moment.
GoDaddy.com.
All right, let's talk some Paramount, shall we? Going through my endless number of notes here, much of which have not actually, the reporting of which has not made air. But, you know, this morning, instead of going through we've already been through sort of the substance of the Ellison Skydance offer in terms of how potentially it would work. But let me bring you up to date, at least based on what I know, having spoken to any number of people who are around this process, both on the special committee side, the company side, on the Ellison Group side. And there you take a look at Paramount shares, which are up. By the way, waiting for the stepping down of Bob Bakish, the CEO. That not going to happen this morning, but very much anticipated after the close. I believe the company also reporting after the close. So we're waiting for that. As for the process under which this company may have a change in control, that is certainly a focus for many shareholders who have been less than enthused with the idea of control shareholder Sherry Redstone through National Amusements getting a large premium for her shares, while they got nothing except the promise of a higher stock price based on a merger with the Paramount Studio and Skydance itself. What I can tell you is they have moved along here in terms of this exclusive negotiation that's been going on between the special committee and the Ellison Group. To the point where it is my understanding, at least, that they've gotten to basically kind of what they would call expect to be a final offer from Skydance. Now, things can always change. You can always tweak things. It doesn't appear that they're going to have a deal in hand as of the end of exclusivity on Friday. But perhaps they will get very close to at least having something that is close to that deal that could be signed up, brought to the control shareholder, namely that being Sherry Redstone. It does include, is my understanding, and this is an important component here and one that the special committee has been pushing for, what is essentially a premium that would be paid at least to B shareholders for some percentage of their shares, meaning, yes, you merge in Skydance through buying Skydance at roughly a $5 billion value. Then, as I've been reporting for weeks now, there would be a large issuance of stock, primary shares from the company that would be bought by Larry Ellison, by Redbird, by KKR, which also owns a part of Skydance right now, and potentially some other investors. But what would also be bought at a premium is some percentage of B holders' ownings. Can't imagine it's a large percent. I don't know what the number is. Would it be 10%? Who knows? But that is apparently part of what is essentially their sort of the offer that they have made to try to meet the objections of, or at least the worries of the special committee that feels like, hey, we have to offer some form of liquidity to the B holders so they feel like they've gotten something out of this, other than, of course, the merits of the transaction themselves, which, again, as I've reported in the past, include delevering, include what they believe would be a significant amount of cost savings to the tune of at least $1 billion, perhaps $2 billion, and to the prospect of having Larry Ellison as your essentially controlling shareholder in many ways, which wouldn't be a bad thing. Certainly he has very deep pockets. All of that, of course, is something the special committee, Jim, has to figure out as they weigh whether to sign this up, whether to see if they can get something out of Apollo and Sony that's real. Yes, I hear Sony would love to be there in some fashion, would love to own the studio as so many others would. Nothing has come in yet. Even though there's exclusivity, nothing stops the Sony from sending a letter in with some granularity and detail. Under what I'm hearing, at least the plan would be with Apollo and Sony teamed up. Sony would be the majority owner. They would merge, obviously, Paramount and Sony together. They'd throw Legendary in, which is controlled by Apollo. But all these things have a lot of regulatory risk. Well, Sony does. Okay. And by the way, I brought up the idea of the Japanese, whether they would be there for Sony USA in the end in terms of signing off on a deal that would require a lot of cash from them. But regulatory-wise, it's like, I mean, Apollo owns stations. What do you do with the station group? Do you have to get rid of that too? So really you're just buying the studio there, because asset sales are a huge part of that potential transaction if it were to even come to the fore. And again, nothing has been sent into the special committee of any level of granularity, let alone at all from Sony, is what I'm understanding at this point. And then if you are the Ellison Group, Jim, you've got an FCC review. It's going to take some time. You've committed to a deal in which you're buying stock at a premium, by the way, over the current price. You're going to sit out there for 9 months while
As
your
the cash
capital is
flow
at
goes
risk,
down?
as the cash flow goes down, as you're dealing with an over-levered company that has yet to do that carriage agreement with Charter, which could end up in a not particularly good place. It's got a lot of risk to it.
That is fabulous reporting. Okay, so I listen to you and I think, okay, you mentioned.
Sorry about that. All right, let's go. I had to get up. I had to move around a little bit. Some of the movers from Friday, Kava, semiconductors did really well, so we'll keep our eyes out for these. Look for Friday's highs to be resistance again. They were already resistance. NVIDIA, I haven't really analyzed like that, which we can go to. Okay, this looks a little different. That area there does look like a little bit of a support level we'll look at for the month. Your value area high for the month is up there at 902. So there's a look. I got to be honest with this. This could be, you know, you could get into a little bit of chop here. Okay, there may not be much moving around, but there could be some killing of the preem if you know what I mean. All right, there could be some killing of the preem if you know what I mean. All right. So, good luck today. You know, DJT, obviously Tesla is a given. We're going to be watching. We're going to be watching semiconductors. So I've been up since 4 o'clock this morning. Well, like 4:45, 4:30ish. And like I said, remember this bounce back. That was nice Friday. You had some nice volume, but look at that selling pressure you have up there. You did clear it, which is good. That's good. You know, this, I think this is a major support level right here for NVIDIA. Shoot. Down here at 850s. I did not get a chance to look at Coinbase either. Let's see, where should we put that level? Should we bring it down a little bit? What do you guys think? Or is that good? What do you guys think? 850? Yeah, 850. Psychological 850. I mean, honestly, though, you do have this pivot high there that you did clear. So I would probably watch that. We'll throw it at 850 as far as the range is concerned. We can make this a mild level too. We'll watch for it. Let me actually take it over here. Let me pull the... Bro, come on. I don't want to do this going into it. We have just a couple minutes. Let me set my charts up so that... Okay, so that's good. I like that. Bang, apply. I want to know why this isn't saving. I would like to know that answer. Oh, okay, here we go. See, this is... Bro, what is going on with my charts?
Improved methods for recovery are vital. LFI has developed a post-treatment serum formulated to accelerate healing.
Oh, that's a 5-minute. That's why it didn't save. Because of... It's not a 3... Usually I keep it as a 3-minute.
Procedures that improve your skin. Ask for LFI. Trusted by doctors, loved by your skin.
Can Sugar Ray Leonard do everyday tasks?
Watch a pullback to here as well. 840. 840 on NVIDIA. Let's see here. Where are we going to open up at? Are we going to open up a little bit lower or higher, right around where we closed? Yep, you're getting a nice little pop there. I'm going to watch that level.
CCB, Postal Financial, reporting their results. Net earnings of $6.8 million.
DPZ with the beat. U.S. comps up almost 6, looking for 4. Opening
bell is coming up in just about 4 minutes. Don't go anywhere.
Yeah, I would watch. I'm going to make it this level, guys. I feel like I was right the first time. Not necessarily the first time, but that's a huge move from Friday. You have a mild level right here. 860. All right. Let me zoom this into where I exactly want it, and I can just zoom out if I need to.
To truly help those around us, we must advance technology to meet society's biggest challenges. Researchers at Drexel University's College of Engineering have discovered solutions on the nanoscale with vaccines. Now studied by tens of thousands of researchers from more than 100 countries around the world. Vaccines are a family of nanomaterials poised to become the next building block of technology and solve today's most complex issues.
Trading with Schwab is now powered by Ameritrade, unlocking the power of...
All right, right there. I'm just going to keep it right there. Time axis, keep price in. Daily chart is still good. So there we go. We're good. So that's NVIDIA. Look at Tesla. We got 2 minutes, guys. All right, we said we found a nice little buyable dip there at 185 if we can still get that. Tesla's going to look a little funky, all right? Things are going to be a little whack. It's up above, it briefly got up above 190. So we need our pullbacks. All right, we need a pullback to get long. This is also another possible buy entry. Now watch the volume today comparable till tomorrow. It may get away from you. It's already up a hell of a lot, but remember, they are short from 260. Stuff could really hit the fan here. Shit could really start to hit the fan. You did not get a pullback into 186, 186.50, 186, 185.75, whatever this level is. I don't know how you would want to look at that, but
1 minute for the U.S. market open.
But good luck today. I'm gonna take my time. I'm taking my time for the most part today. And we'll take it as it comes. All right. If you guys have questions, just throw them down below. And look, there you go. You're getting a bounce. We'll see if I'm gonna take my time. That's a lot of pre-market volume, obviously. I think you'll get a quick bounce and then another rejection up here. Possible. I don't know at all. I know a little bit, but I don't know exactly. God, I'm sorry that was so loud, guys. I did not go through Shopify. I'm sorry. I got a little tired on the stream. There wasn't really anyone here. Looks like Shopify is going to break that 73. Looks like it's trying to break that 73.50 level. It's trying. Could probably get a pullback back down to 72.50 on Shopify. All right. So I'm going to keep some semiconductors on watch. There's some profit taking. We're watching 85, 185, flexible grade. Let's go. I got to throw a 3-minute on here. I know there's a lot of stuff on the overall markets.
Back a bit here now, 185.88, up about
Come on.
7.5%.
I still want to see. Well, the market already did pull back to 509. So we're looking 5012. Not 5012, but 512. 50-day moving average on the SPY. Take your time today. That's so wild.
To select cities, which is going to weigh on capacity, which might weigh on airfares as we watch that contribution to CPI.
Yeah, well, we need that. We need that down, and that could help.
This is proof that stocks can always go higher. They can always go higher. So you've entered into the gap. It looks like, yeah, things are going a little crazy. I got a lot going on here between the stream and the stocks on the other chart. 183.25. Watch this area here. See if we can't. See if you can't get a bounce here back to that 192 level. See, I knew it. Right in front of that level. Let's see. Look at that volume, guys. That's insane. 6 million shares. You have, oh my gosh. That's wild. Are we just going to go right to the 100-day? DJT. All right, DJT bumping back into the 50-day moving average, guys, as well. It did. We said we're looking for another rally attempt and then possible fail if it can't break up there at like 44.59 or so, 55. 45, I mean. Oh, come on, man. Sorry. If you guys have anything y'all are watching, throw it out in this chat. Unless you want to keep it to yourself, that's fine too. Look, NVIDIA holding that level nicely right there at 870. Trying to, if you get a break under 870, look for 860. There it is. There's the break. There's the break. You should have room down to 840 if 860 breaks, but find out why the markets are going higher like the SPY. If it's because of energy or if it's because of tech. NASDAQ's pulling back. Sharp tail on the NASDAQ. Let's see. Do I have the 50-day on there? I'll have to probably look at it to move it. SIGA was one of the stocks that were a lot of people did look up this week. Not sure why, but
Well, David, if they need money, what are they going to do? Shake down European companies? The European companies going to give them anything? Give me a break. You've already eliminated competition there. Right. Well, it's just the who's new. Like they said, who have we hit? Like, oh, we haven't hit Amazon. Like, they have something on Amazon.
Very cynical.
Cynical.
A very cynical view of antitrust and of broader regulation. Yeah, very. They have a different approach in Europe. That is true. It's not all about the consumer as well, as you know.
No, it's about the EU needing money. Hey, maybe they'll fund Ukraine with Amazon fines.
Ooh, wow. Meantime, Jim mentions Jensen Huang on 60 Minutes with Bill Whitaker over the weekend. Talked about the future of AI and the potential impact.
did anybody get that bounce on Tesla off of 185?
We're hoping that it does things that surprise us. That's the whole point. In some areas like drug discovery, designing better materials.
I just want to get my moving averages done on the overall markets.
The universe in places that we could have never done ourselves.
Yeah, my stuff's acting up because of I have a lot of stuff going on here. I probably need to get and run this stuff on 2 computers because it's the one can't handle it.
An answer for, again, not even, all right, the robots taking over and reaching general intelligence and deciding that we're all superfluous, but the bad actors, that one, bad actors.
Bad actors is real.
That's real. And when you have open source, you're just mentioning Meta, Llama 3 open source, when you have the ability for the bad actors to have access to the same level of technology.
Bad actors can do anything. We have look at the upgrade today. The news piece on Palo Alto Networks. The bad actors got into your UNH. If one more person knows my healthcare records, I'll
Baidu shares hitting more highs now, 107.58, following report of that collaboration with Tesla.
That they can undertake as a result of access to the highest levels.
Kramer is crazy. He said, if somebody else finds out my medical records, I'm gonna kill him.
Right. So at the same time, our enemies are trying to figure out what's the best way to eliminate as many people as we can and screw up their economy as best we can. We're going to have to
By TikTok, owning TikTok, and doing disinformation.
And doing disinformation. How do you do disinformation? I use TikTok.
I use everything, yeah, because I'm trying to be, cool.
Yeah.
You saw me this weekend. I was cool.
Yes, you were.
The White House correspondence there, David.
I wasn't invited.
Oh boy,
Yeah.
David, you would have seen coolness.
I bet I would have seen a lot.
You would have seen the 4 a.m. pizza.
Alright, so let's scan around here. There's a rejection up there on DJT. Pulling back. TSLA. Making progress. Slowly. MSFT. What's Meta do? Oh, Microsoft, guys, fallen. We said 402. It's already broke 402, man. Wow. Sorry, I did not have the top. Oh my gosh, why do I not have the chat up? Are you kidding me? Dang, gang. My fault. My fault, guys. Scanner. Let's see here. Why is everything so messed up this morning? I'm not sure why everything's running like it is. I really don't. I have no answers for that.
Those are all weakening. I think the Fed sees that. Fed watches the show. They hear the stuff. Hey, I know Treasury does.
CAUD hitting new highs now, collective audience. Shares up about 90%.
You could also play Tesla with possibly looking at ARC as well. ACB. Popping up there.
Or sleepy. Frankie or sleepy. That's, yeah. I'm all the seven dwarfs.
Look, I think
IBRX and Immunity Bio popping here on heavy volume now, $9.42 up 26 cents. India Bravo Romeo X-ray.
Universe of 7 stocks that are up, and everything else is down.
IMMX, MX Biopharma awarded European Union Orphan Drug designation for its multiple myeloma treatment. That's India Michael X-ray. IMMX.
Ever since Peltz has been going down, how about that Disney? What is that?
What about Disney?
Well, it's up.
Yeah, okay.
It hasn't really been up since Peltz went away.
Oh, yeah. I know, you're still chafing at that one, aren't you? You're still upset.
I'm chafing?
Yeah.
Yeah, I'm chafing. How about Oracle and the Trojan horse? How's that doing today?
Oracle and the Trojan horse.
Jonathan Cantor's ready to stop that deal at Heartbeat.
There's no
A lot of people are talking about Mullen this morning. I'm not sure why. This thing's poop. Like, I don't mean to be the bearer of bad news, but it's below pre-market lows. Why would you? I don't know why anybody would want that. That's a double top there. I don't think it's time for. IBRX is breaking out right now. A lot of small cap names here.
Unless it was just a non-deal, then Paramount just stays out there. But any deal, CBS stations, they all have the networks. All anybody really wants is the studio.
It's got room to 10. You get through $10, then I would look for 12. It's a 20% move there.
For just national amusements that don't involve any of the difficulties that we're talking about, difficulties of complex transactions we're talking about. Maybe if they're real, takes one. And then there's somebody else who's a control shareholder of the company and they can try and figure it out. But, Jim, there's no antitrust there.
Meanwhile, I'll tell you, if you want something that's really relevant today,
There's a lot going on this morning, guys. A lot going on.
Full year was good. They did trim
the cancellations do the most matter? How much is that convert that they did that is people are just leading on and banging it down? That's going to be a very big interview that I have because there's a lot of individuals that are on that stuff.
Any concerns about Republic First or the regionals today?
I think that's one and done. Bad management. I know people would like to read through, but that's a very small throw off the bank.
Dude, Microsoft's getting hammered, y'all. What's going on with Microsoft? Apple's doing great. What?
Was up about 7 pre-market. Reiterates the long-term guide. Comp speed. We'll get McDonald's this week.
Russell Wiener's done a remarkable job. They have a loyalty program. The pickup has been really strong. The domestic has been a major turn. We got used for a while to having 1+, 2+. Forget that. I happen to think that Restaurant Brands is going to be fantastic. That's Pat Doyle.
Okay, Meta's pulling back here. Oh, okay. SPY pulling back. There it is. So there's the pullback. 509.50. We said 509-ish. What's going on right now? Can I ask?
I don't have an opinion, Jim. How about you do? No, but we got a big one coming this week, Viking. I've been hearing a number of things about that. There does seem to be a good deal of enthusiasm potentially for the IPO of the cruise
Caribbean has been fantastic.
Viking. Although I do recall last week, I thought you said sold to you, but maybe I misheard you.
All right, so here's what I would look for. If the SPY tries to bounce back, if the SPY tries to bounce back, like I said, I wanted to see a small little rally and then a pullback. Oh gosh, come on.
3x the year ago. Not bad. You're getting somewhere.
Look, I think that the people want them.
See if it can bounce and start to reject. If it doesn't, look for a straight shot right down into 508, 509 area. Let's see here. No, I don't want to scan. This level right there. Yeah, right there, 509. That was the level.
Well, because Reddit's people are liking it.
I guess thank you for that keen observation.
Yeah, I'm a keen eye for the obvious like you did last year. I will say
Yeah, right there, 509.
from a Reddit user that Steve Hoffman has infused it with ads. Now, there's some people who don't like that, but you know what? It's not a charity, and the ads are good.
Well, one of the big knocks was you've been around for 20 years. Why haven't you ever been able to become profitable?
Because
he obviously said, hey,
the user experience where they were unwilling to compromise. Now they're willing to compromise. I know so many people get the news from Reddit. It's incredible. They prefer that to say like ABC News.
Fuck. Did not mean to do that. Sorry for my language, guys. Sorry for the language. Alright, DJT trying to make a recovery here. Reddit, huge rally. Huge rally on Reddit. Kava's pulling back. Nvidia, big pullback, guys, on semiconductors. On what looks to be volume too. What looks to be some nice volume there. Charts. Wow, they're getting it out of the way again. Mother trucker, bro. All right, 840. Okay, look, Nvidia's pulling into the 50-day. All right, that's a. Listen, here's something I want to say about this Hamas truce stuff. They're not giving them back because they're probably not alive. Let's just all be honest. It's been this long. If they had them in good health and they were still alive and good, they'd already be giving them back. Like, let's just be real and call it for what it is. Like, it's sad, but that's why. We know that's why. They don't have anything to give back. Because they tortured the shit out of them, I'm sure.
And told me, hey, that guy Siebert's really cool. What does he do for a living? Said he runs T-Mobile. She says, well, he was much cooler than McConney. McConney went to talk about socks. Siebert went to talk about music.
All right, NVIDIA. Nice bounce off of that 50-day moving average, y'all. Nice bounce off the 50-day. All right, look for 840 if you cannot break above 858. Let's look here. I'm going to throw up a lot. Not 130, but let's see. Come on, man. Let's see. Okay, 1350 for puts. That's crazy. There's no way. What about calls? There's still 905. There's no way. I mean, I get that it's expensive, but
Yeah, never underestimate Elon Musk. And SpaceX, what, 180 billion market value?
I gotta start selling these. I gotta start selling. I gotta start selling some NVIDIA spreads.
Dave, I'm sorry, I can't. Dave, me? What? From 2001.
I can't do that.
Starlink.
Daisy. Crazy.
All right, 512.50. You got a little resistance here at 510, 509.75 ish.
And Q1 productivity all headed our way in the coming days. Don't go anywhere.
ANVS, Anna Vispile halted for news. Alpha November Victor Sandy halted pending news.
The report is brought to you by PIMCO, a global leader in active fixed income.
I wonder what the implied volatility is for Tesla.
At Mizuho Americas, we know this course. And this one. And this one. And definitely this one. We know them well because we're experts in banking in global markets. Mizuho
GIFI, Gulf Island Fabrication, popping here. Gulf India Factored India.
Do you have a life insurance
on
policy
light volume.
you no longer need? Now you can sell your policy, even a term policy, for an immediate cash payment. Call Coventry Direct to learn more.
We thought we had planned carefully for our retirement.
But we quickly realized we needed a way to supplement our income.
Our friends sold their policy to help pay their medical bills. And that got me thinking. Maybe selling our policy could help with our retirement.
I'm skeptical. So I did some research and called Coventry. They explained life insurance is a valuable asset that can be sold.
We learned we could sell
TBNK, Territorial Bancorp shares resumed trading.
Good news. We sold our policy.
After
Now we can relax and enjoy our retirement as we had planned.
If you have $100,000 or more of life insurance, you may qualify to sell your policy.
Hope Bancorp and Territorial Bancorp announcing definitive merger agreement.
Visit CoventryDirect.com.
That's TBNK, HOPE.
Or call 1-800-514-7800. Coventry Direct, redefining insurance.
Man, I seriously am thinking.
Real Choice Financing now gives you more ways to afford a home, like down payment assistance programs in your area.
So the SPY just got. Oh, it could not hold. Look how volatile it got there. Wow. That was a pretty wicked move. It tried to hold and then it broke and now it just tested it. It should start to go down now. That's rough. What's Microsoft doing? Breaking the 100 day. So I'm really curious why there's weakness in some areas and strength in the other.
With E-Trade from Morgan Stanley, we're ready for whatever gets served up.
Dude, you gotta work on your trash talk. I'd rather work on saving for retirement.
Or college, since you like to get schooled. It's a pretty good burn, right?
GIFI, Gulf Island Fabrication, copy here, Gulf Island Mike Volume.
All right, $3.99.
Soaring in the market today as the Dutch medical devices maker finally gets a settlement on that personal injury issue regarding to the global recall of its ventilators that were used to treat sleep apnea. $1.1 billion and will not admit any fault or liability. Shares, as you can see, for the month, up more than 40%. Dow's up 120. Stop Trading with Jim is up next.
What do you guys see? Does anybody see anything out there that's really looking like a like an opportunity? We'll see here if Microsoft can hold.
Identify the goal. Match power with precision. Reach new heights. CME Group, where risk meets opportunity.
Thank you for calling. Please hold.
When you talk to your custodian, does it feel like you're not being heard?
Thank you for calling. Please hold.
Now that's better. TradeVMR doesn't have a massive call center. Instead, your calls are answered by real people who know you by name and are empowered to help. Like me. Hey Chuck, how are you? What can I do for you? The windows come down. The shoes go off. Sleeves go up. The coast is there with open arms. Leave it all behind. And settle in.
Meta doesn't have hardly any volume. It's actually one of the lowest volume names that I'm seeing today. Come on, man.
The future is now open for investment.
Every day, I'm reading extensively, I'm checking the markets throughout the trading session, working the phones, talking to sources, and doing my own reporting to share insights, information, and all of the details that you need to be able to make money.
I don't want you to move. I'm gonna miss you so much. You realize we'll have internet waiting for us at the new place, right? We know. We're just like making a scene.
Transferring your services has never been easier. Get connected on the day of your move with the Xfinity app.
Could I sleep over at your new place? Can Katie sleep over tonight?
This generation is so dramatic.
Move with Xfinity.
Harris Plumbing Heating
Natural instinct is to buy there, isn't it?
for just $29.
Look how they're really pushing it down.
Last longer and prevent breakdowns, saving you
It's
money.
not time.
For just $29, we'll check the most important parts of your air conditioning system, ensuring it's ready for the summer ahead. Act now and save big before it's gone.
Let's get to Jim and stop trading.
Sometimes you get it and something hits your desk and it just seems like a clean upgrade. Jeffrey's upgrading. General Dynamics really good. Talking about Gulfstream doing really, really well. Bottom line inflection. So people should look at this because the defense stocks have been kind of left for dead, and General Dynamics has just been going down during this period where the defense budget was actually below what we thought it would be. I like this call because of Gulfstream, not because of the defense budget.
Jim, what's coming up tonight?
I have ResMed, which is this is also sleep apnea, and a lot of it is going to be about, we'll talk about Royal Philips, whether they'll really get back in the scrum. I don't think so. Mick is really, really good. He's a great CEO and also a terrific guy who understands illness. Most of these guys just understand device. He understands illness. I've been involved with him, and he's gotten involved with me in some things. He's really fabulous.
Who thinks we can get that 180? You guys think we'll get down to 180 here on Tesla? Think we'll get a test of 180 and do the 50-day, or is that about it? Is that all we getting?
Meantime, we got the VIX almost back to 15.
Google makes people feel we're going to get a good number from Amazon.
Oh shit, I didn't look at Google.
And then Apple, remember, the jinx is on.
Can we end with the cows?
What, Macy and...
What's the names again?
Lucy and Mason.
There they are.
That's Lucy on the left. Mason on the right. And NVIDIA's not pictured.
At least it wasn't a house this time. Just a couple of cows.
Look, these are beautiful cows. I tell you, once you name them, can't eat them. So that's it. They're now pets.
They're safe.
By the way, you cannot feed them tomatoes. They hate anything red there.
Interesting, Jim.
And when you throw them a bale, they tend to like try to get their head underneath it, and their tongues are so big. They can, David, you can give them candy.
You learn something
So
new
much.
every day.
I know cows. I know cows.
Yes. Agrarian.
Cows love corn. They prefer Indian corn.
Farmer Jim.
All right, DJ T on some volume today, guys.
Mad Money, 6 p.m. Eastern Time. They're SoFi sinking despite this beat. Anthony Newman will join us in the next hour.
Look at the volume in comparison to the past couple days. I've said to keep an eye on it. It's pretty, it looks decent, right?
Rose Sparks, engineered for the spontaneous. A dual-action formula with the active ingredients of Viagra and Cialis. Faster acting and long-lasting. Grab the moment. Get started at ro.co/sparks.
This is a keepsake frame. This is actually a photo from my wedding. I'm Adam Weiss, founder and CEO of Keepsake, the mobile app that makes it easy to have your photos printed, framed, and shipped to your doorstep. You just choose a photo that you love, you can preview it in over 100 frames, and in a couple of days, you're going to receive your photo in a beautiful handmade frame. So if you've got a special photo on your phone, install the free Keepsake.
FIHL,
We'd love a chance
Dallas
to frame.
Insurance, getting a pop here on line coming in.
Look, there was our shit.
Solar stocks are up 20% with the additional hour in the day.
With the extra hour, I'm thinking a PY power now. Let's put it to a vote.
This is going to wreak havoc on overtime approvals.
Anything can change the world. From HR to payroll, ADP designs forward-thinking solutions to take on the next anything.
We need a small business loan fast.
I got this.
Loan Falcons! There's a better way to get a fast small business loan. Go to ondeck.com, and if approved, get your funds as soon as the same day. Your loan is on deck.
Damn, those are already up.
I grew up in Washington, D.C. That really fueled my ambition to want to know about the world and what were the key economic engines of growth. Access to energy is critical to the
Pharmaceuticals makes available phase 2 data from tacrolimus inhalation powder for prevention of lung transplant rejection, presented at
No.
recent ICE HLP annual meeting, TFFP.
Oh my gosh, come on.
BA Boeing gets contract with 7 added MH-139A helicopters at Bravo Alpha.
Boeing, something about helicopters. Let me make sure that.
Take a look at stocks. We are building on last week's gains, starting off the week in the green. There, the S&P up a third of 1%. It's consumer discretionary that's leading today, thanks in part to Tesla.
They said consumer discretionary leading today.
But real estate, utilities, materials, industrials, they're all higher. Energy and financials also up. The only thing weaker right now is communication services and consumer staples. And on the communication services, it's Alphabet that's weighing on the group, along with Meta, Netflix, some of the big earnings numbers last week. Take a look at treasuries. They're getting bid this morning after a big sell-off.
See, even if we could get a bounce back into like 190, 189.
The two-year yield just below 5% ahead of a huge week of catalysts in the macro world. We're 30 minutes here into the trading session. Here are three big movers we're watching. Another big day of gains for Tesla, as mentioned, one of the top gainers in the S&P this morning. The stock coming off its best week since January of last year. As CEO Elon Musk makes a surprise trip to China. We're going to head to Beijing for the latest headlines in just a moment. Domino's also in the green.
She said we're gonna head to Beijing for the latest headlines. I don't know. It just sounded funny to me.
And then shares of SoFi dropping despite beating earnings estimates and raising full-year guidance. The company seeing personal loan
Surprise
originations
trip.
up 11%. Student loan originations rose more than 40%, and then home loans surging more than
Could we get him to come over down to 180? I just, oh man. Who thinks, can I do a poll to see if anybody thinks we're gonna get down to 180 on Tesla? Anybody think that that's possible?
How much they're going to be borrowing this quarter. Obviously, that's in focus, but the refunding announcement comes Wednesday, where they actually break down the coupon sizes of the auctions. You know, a lot of people aren't expecting too much of a difference here from the 200 or so billion that the Treasury forecast for the quarter. Even though our debt needs are way up, as we know, because to finance these deficits, you know, the Treasury market has been strong. We had strong auctions last week. We're going to have more next week, but so far it's been pretty firm. So that's something that's helping cause a bid. As far as what else we look forward to this week, you know, the Fed is out on Wednesday, and the key question there is how Powell sounds on the sticky inflation readings and how much tolerance he's going to have for it. Does he downplay the weaker GDP because he's worried about the inflation pressure, as he has been, but obviously he pivoted in the last time we heard from him. We're also going to get a ton of earnings on the consumer, and then jobs. And interestingly, jobs might be the biggest market mover of all, because we kind of know where the Fed is, and they're not expected to change policy. We kind of know what's happening in the bond market.
All right, 180. Let's see.
March was kind of benign, up 0.3%, and yet we still had some stronger inflation numbers. So I think the market will be carefully watching that earnings figure within the report.
GDP number from last week. Do we have any questions at all as a result of just how strong job growth will be in this economy?
By most accounts, I mean, by jobless claims, which is the most sort of real-time indicator, they were fine. And they fell last week. So it doesn't suggest that there's any big jobless problem. The unemployment rate has remained around below 4% for, what, years now?
We're going to tie the record, if we get it in April, the record that was set back in the 1960s, late 60s, in terms of consecutive months below 4. I think Goldman's at 275. You saw today Goldman GDP is running 3.
All right, let's go look at the heat map. Let's run it up. Google, Meta, both down. Tesla up. Amazon flat. Microsoft down. Apple's really the only FANG name outside of Tesla. I don't see Netflix right now, but it looks like you are getting a nice pullback today.
The sticky inflation and that sort of the thing. So as far as the 10-year levels to watch, you know, the upper end of the range last week we got was 4.735%. Today we're seeing some relief.
Uber. Uber. All right, this level here on Uber, I would watch.
If we can show the intraday chart, it really shows the drama of what traders on the desk were dealing with in foreign exchange, because they intervened, at least according to people familiar with the method. They didn't come out and say we intervened, but it had all the hallmarks of intervention. And now they've walked it back down to 156. The problem is, this is being driven by U.S. interest rate differentials with Japan and with Europe, by the way, and with the UK, and so it's going to be hard for them to unilaterally. This is a market that trades like $5.5 trillion a day. Central banks are going to have to spend a lot of money, and a lot of people think even more than 2022, which is the last time Bank of Japan intervened, if they really want to reverse the trend. So far, they've done it a little bit, but we'll see if they're able to succeed on that front. That's going to be a question. It could also,
Coming up at 10:30, the Dallas Fed
selling dollars
Manufacturing Business
ultimately
index for April expecting.
I'm gonna look at Microsoft here. You know, I don't think it's safe. I gotta be honest. I don't think it's safe to buy here. Oddly enough. It's cool until it isn't cool. Right? It holds until it doesn't hold. I think
last week passed the first part of the test, which is market had 3 straight down weeks. You were oversold. You should have bounced. We did bounce. And then I think as we get through the mega cap earnings season, there's this very familiar pattern where earnings season starts off and it's like, well, sure, everyone's beating by a lot, but we expected it. Market's not rewarding it. And then you get to the mega cap earnings, and at least if nothing else,
I know I click around way too much. That's what I was thinking. I noticed that this weekend. Like today, I'm kind of tired. I got up really early this morning. Kind of just sitting here. Haven't had any comments or anything really other than the one, and it gets kind of boring and sleepy, you know. I'd like to know how everybody's weekend was. And what everyone is watching. DJT, guys, with volume. DJT with raw volume. Reddit also. Never mind. Reddit actually pulled back a lot. There it goes. It's back up through $45. Back up through 45. Where are we going? Looking like it's headed to 50.
And that's worrisome.
You don't necessarily want inflation to be more than half of your nominal growth, right? I mean, if you think about it that way, if you have 5% nominal growth, it's 2.5 inflation, 2.5 real, that's fine. I think in general the market starts to worry if it's more inflation, and I think stagflation is probably overused, and people think of it as double-digit, inflation and nominal and real growth is kind of negligible alongside of it. But nonetheless, to your point, yeah, you don't want it to be mostly about sticky prices. I think you're still going to have a contingent out there saying, look, the Fed's being too cute here. We're under 3. Historically, under 3 is fine for the markets, for the economy. You don't necessarily have to, speed your way to the 2% target, but you don't want to backslide too much against that.
I was taken by the comments from the Capital One chief. Consumer is still a source of strength.
FIHL more highs now.
Bank balance is still above pre-pandemic. Rising incomes, debt manageable. I mean, that's what
Capital One. Think about what you just said, Carl Cantanilla. You just said Capital One. The worst place you should be having a credit card and or taking information from. Capital One. Jesus Lord. Oh, well, we got all this and that in the third. Yeah, I know. Carl's so funny. Again, I'm taking my time, kind of just watching what the markets do today.
We would worry about it. They want to spin it as, in aggregate, the entire pool of borrowers looks okay. There is this vintage of auto loans and of credit card balances that have become a problem, and maybe you've already realized that. Maybe they've already soured to the degree they're going to sour. We're just back to pre-pandemic levels. So I'm not talking about the consumer is going to peter out, but it is something in terms of you look at where the strength is relatively and where you sort of say, what's the risk of staying at these rates and kind of betting that you can
keep unemployment in check along the way, that's where the risk is.
Well, I think the risk is the Fed makes a mistake and they stay
that
too
would
long.
Exactly be the mistake.
Which
right.
is sort of the irony now. Everybody's saying, oh, the Fed can't lose its independence, right after that journal report about the Trump administration, some comments from the Biden administration too.
Like, this is the thing. They give it, like they even entertain it. It's so stupid.
An election year, keep inflation.
I keep saying, like,
low.
what's your inference from how they made the mistake the last time? Was it that they were insufficiently vigilant about inflation and said it was going to be transitory? Or was the real mistake not looking forward at the turn and saying, okay, things are changing here. We've kind of done our job on growth. We now have to fight inflation. Maybe now the thing is we've done most of our job on inflation. Let's make sure we can preserve the soft landing.
Yeah, also Arthur Burns' mistake, who's trying to please Nixon and juice that economy at the expense of inflation.
Yeah.
Mike, thank you.
Right, yep.
Mike Santoli. Let's move on to Tesla now. The shares of the EV maker, as you see, up over 11% this morning, right near a $600 billion market value yet again. Elon Musk made a surprise visit to Beijing.
I did not get that
officials
pullback
there,
like I
including
wanted to.
China's Premier Li. Let's get over to Eunice Yoon. She has the latest on what they talked about and what is behind, obviously, in part, that rally in the stock. Eunice.
Thanks, David. Well, here are the three big takeaways you need to know
Damn,
this
it did
hour.
put in a nice
First,
double bottom off that 50
after
there,
Musk
guys, but
visited
it's
with
too
the Chinese
expensive.
premier, Tesla flagged
You
that
know?
Beijing deemed it compliant with new data security rules. As a result, the statement said that local governments that had restricted where Tesla cars were allowed to go are lifting those restrictions. Two, in the past hour, official media Cailian said that its reporter confirmed with Tesla in China that its full self-driving or FSD software would launch in China, quote, soon. And three, there is no confirmation, though plenty of reports, that Chinese tech giant Baidu would provide the map, and that Tesla's Musk is looking still to get approval from Beijing to have data transferred overseas, which would potentially be good for training of its autonomous driving algorithm. Guys?
How long, I mean, where does the FSD world stand overall in China right now, Eunice? In terms of the potential entry, it's over time of Tesla, but, where does the technology stand?
Well, so far the technology isn't here. And that's been one of the big advantages of its Chinese rivals. So Chinese rivals, such as XPeng, have often touted that they have their own driver assistance service, which is, they say, much better than FSD. And so for Tesla, this would be what some analysts say a game changer. Because it would allow them to offer this type of service. And as you know, Chinese people really like a lot of these new technologies.
And the government potentially is in a position to move it forward, I don't know, more quickly than might be the case, for example, in the U.S., or we simply don't know?
Well, I think if the government wants it to be here, they will allow it to be here, because I think what's also interesting is that from the Chinese perspective, Tesla is helping it reach its long-term goals. The government here wants to be dominant in several areas, such as AI, autonomous, EVs. Tesla is strong in all of those areas. And there's also something else that's been interesting here. State media have been using Musk's visit as a bit of a marketing tool, saying that his commitment to China is just proof that the West's complaints about the overcapacity in China are hyped. Of course, those same state media don't really mention that Tesla isn't really the one with the overcapacity problem.
I was just going to ask Eunice how his visit compares with Secretary Blinken's visit, Secretary Yellen's visit in China. They both came in the last few weeks. We covered it pretty heavily. What was the reception like, just from everything from the state meetings to the media coverage to how he was welcomed?
Well, he was definitely very welcome. I mean, I started getting alerts right away that he was in town, and so that from a public standpoint, people think he's an incredible business person. They have a lot of respect for him. From a state media perspective, also, it's been very splashy, and people have been talking about how he's had this wonderful meetings with the Chinese premier, who said that the relationship is win-win. I mean, compared to Blinken and Yellen, it's also a little bit different. Secretary Blinken is seen as one with a much harsher tone, but I mean, as you probably noticed, Secretary Yellen is also a rock star here.
Yeah.
People are really interested in everything that she does, like even the way she uses her chopsticks.
I know, that was fun to see. Thank you, Eunice Yoon in Beijing for us. As we had to break, here's our roadmap for the rest of the hour. Chip stocks coming off big gains, posting their first weekly gain in 6, setting up to be a big earnings week for the group. We'll get you ready.
Plus, there are some potential new fears about regional banks. We do have another bank failure. We'll tell you what investors need to know.
And SoFi's chief Anthony Noto will join us first on CNBC, talk about what's ahead for the fintech giant
did
following
anybody
its earnings
watch
beat.
the
Stock is
fight?
lower today. Big show still ahead as Squawk on the Street continues.
Did anybody watch UFC this weekend? Like the fights Saturday night? If I ever seen a staged fight, it was Saturday. Like, they were literally, like, you could see them looking at each other. And, like, you know, like, even, and when the guy went down, he didn't want to hit him to knock him out. But he's like, yo, why is the ref not stepping in? And it was so fake. It was so fake. It wasn't even funny. Kava double topping up there. I'm trying to think of a way to play NVIDIA if it does intend on holding. Come on. I'm just tired. There's nobody here. Oh, damn, I was talking the whole time, and that sucks.
Perhaps at some point, China has to come up with a strategy around AI, and that potentially is a threat. But I think that's some ways out because they're handicapped by the restrictions the U.S. has put on their ability to get high-end chip equipment, and so to make advanced AI silicon.
Matt, when you talk about, a slowdown in demand at some point, is that dependent on whether or not the enterprise comes up with enough applications to make it worth companies' pursuit of these things in terms of spending the money?
And that's exactly it. So you look at the applications that we see right now. I think AI has changed the coding industry, but beyond that, everything is very company or industry specific. So you see applications around visual tests for motherboards, for instance. That really doesn't benefit all of us. On 60 Minutes, they had a number of segments around how, for instance, it's benefiting robotics, but those robots aren't in production environments yet. And so I think we need another major application that's ubiquitous in our lives. So something like an Uber to show up. And I think that will be developed. It's just no one knew that ride sharing was going to be a thing before ride sharing was a thing.
Got it. Matt, appreciate it. Thank you.
Thank you.
Meanwhile, still to come, the U.S. seeing its first high-profile bank failure this year, and the fourth since last spring. We'll get you some details, talk about the potential impact on
BYND,
financials.
Beyond Meat, popping here, Bravo Yankee November Delta, BYND.
Real-time exchange sector sort is sponsored by...
Yeah, BYND does have some nice volume. Oh, man. Let's see. All right, AMD trying to go red, Nvidia trying to go green, or not red, but trying to go green. Communication. Healthcare is doing nice today. BIIB, Biotech, Biogen, BIIB. That's a nice rally.
Is this your dream of retirement? How about this sweet deal? I like fishing. Or is this a little more your style? Retiring well isn't a guarantee, it's a goal. It's easy when markets are going up. But what about when they're not? That's why you need...
Okay, so what do we want to look for? What do we want to look for here? On like the S&Ps and the overall market. We're above. We held the 20-day. Do we start running it? Do we start trying to get to the 50? The Qs are below. Are we getting a bit of separation today? A bit of rotation? Rotation nation? And our fees are structured. If your retirement portfolio is a $500,000 or more, give us a call. If not, we'll call you. We try to make some money, gang. Utilities. IBN. Moderna's up nicely today. Bouncing back. Along with all of these. What was up with Moderna today? Does anybody know?
Welcome back. As we said, the U.S. seeing its first bank failure of 2024. Let's get to our Leslie Picker talk about some of the...
A breakthrough in fighting cancer. You know what that reminds me of? Is the one guy, I fight cancer on South Park. Yeah. Yeah, I know, ain't nobody here. I'm fucking tired. I'm getting ready to, I might call it a day here in a little bit. I really just don't see nothing. I could look at the SPY.
Exactly a year ago. The contours of Republic's demise are similar to last year's larger failures.
12. Let's see here. Okay, so we're up through this level here.
On Republic's balance sheet and profitability was on the decline. However, a more recent
I think we go for it. They have earnings though coming up, I thought.
2022 and 2023, causing it to be delisted. And it was unable to solidify outside capital injections that were helpful in boosting other beleaguered banks like PacWest and New York Community Bancorp. The FDIC estimates that the cost to the deposit insurance fund related to the failure of Republic First will be $667 million of the responsibility largely borne by the banking system itself. The regional banks shrugging off the news as well. With the KRE, you can see basically flat today. Not too much reaction there.
ANVS shares were halted on a circuit breaker. Alpha November Victor Sandy.
Leslie Becker.
Shares at a high of $20 and pulled back.
We could probably look for 114. It's a nice hold here. Look for pullbacks. I'm not currently in anything just yet.
As a builder, it just makes sense. When we decided to take our old deck down, we knew right away we were going in with TimberTech. The longevity, the sustainability.
The thing about it, it doesn't look like plastic. It's beautiful. I mean, you can really create the custom deck of your dreams.
Your record label is taking off, but so is your sound engineer. You need to hire.
Indeed.
Indeed you do. Indeed Instant Match instantly delivers quality candidates.
It's a tough level here.
Visit Indeed.com/hire.
I know you guys can see this level right here. If we're able to get a... Oh, I already have it marked. Good.
There's no surefire way to prevent accidents at work. So talk to your agent about workers' comp insurance from Pi. Or visit piinsurance.com and get a quote. Safety first, then Pi Insurance.
No application fee if you apply by May 31st at University of Maryland Global Campus, an accredited university that's transformed adult lives for 75 years. You're not waiting to win. You're ready to succeed again at umgc.edu.
Raising you with no bed of roses. Are you getting me anything for Mother's Day? Go to 1-800-Flowers.com.
Oh my goodness, wow. Gorgeous.
I feel like royalty.
Thank you.
1-800-Flowers.com. Happy Mother's Day.
Happy Mother's Day.
So you have diabetes and your glucose is heading low. Dexcom G7, the most accurate CGM, can alert you before you go too low. Now that's more peace of mind with Dexcom G7.
Hey, let's check out this park. Oh, wow, that's really cool.
To find a great local park or forest near you, go to discovertheforest.org.
Why choose a Sleep Number smart bed?
Can it keep me warm when I'm cold?
Wait, no, I'm always hot.
Sleep Number does that.
Can I make my side softer?
I like my side firmer. Sleep Number does that.
Can it help us sleep better and better?
Please.
Sleep Number does that.
94% of smart sleepers report better sleep. Save 40% on the Sleep Number limited edition smart bed or 0%.
I'm gonna look for another opportunity at like... See if you can't get 109 on Moderna. Okay, so Microsoft is bouncing back.
We'll look for that eagerly because we can't get enough oohing and awing. Carl.
I know you like
Microsoft bounced back.
Some surprising eco data last week changed the outlook for many ahead of the Fed's decision on rates this week. Let's get to our senior.
I might try and take this to 105 or so, unless I'm not seeing.
Inflation is now seen ending the year above 3%, up from 2.7 in the prior year. Now that number is still in line with the Fed's forecast for core PCE for 2024.
ME23 and main shares popping here.
Above the target range, and for that, you just figure that.
Let's see. Let me look at the S&Ps.
About half of respondents
Shares up about 10%.
is just a blip. Half say it could be the beginning of a longer-term stall in inflation that's going to keep inflation stuck around 3 if the Fed doesn't act. And there's growing pessimism. The Fed can hit the target of 2%. Barry Knapp from Ironside's macroeconomics writing, inflation is likely to run above target unless and until there's a fiscal policy tightening. Says you don't get there with 7% debt to GDP ratios. Unemployment seen rising steadily from a current rate of 3.8 to 4.1, 4.3 by the end of next year. So gradually creeping up. And 50% of our respondents say the Fed cannot get to the target without growth running below potential and at least a half-point increase in the unemployment rate. Only 20% think we can get there from here without that kind of.
See if we can't get this 512, 512.57. We got really low volume today, though.
Is that the consensus, Steve, in the economics community now, that it's fiscal spending that's keeping the economy doing so well and inflation running so hot?
I don't know that it's consensus. I think some people see it as a part of it. Some people see it as all of it. But Barry Knapp makes a compelling case. I wish I could read you the full quote here if I can find it. What he basically said is, when I went to study economics, here it is right here, okay, I'm going to put my glasses on. When I studied economics in the early 80s, no economist would have forecast a recession with 7% budget deficit and spending near...
Okay, the S&Ps. Watch this level up here, pre-market highs. It's pulling into it now. Bang, it just ripped through it. Wow. Yeah, 509.75. That's the level. I was just looking at it on the S&Ps.
It's a lot of government spending for goods and labor that may or may not be available to provide that government spending. So what bothers me and what Biden did...
Yo, how are...
that perhaps we need roads, bridges, infrastructure, things like that.
Go have some lunch, go about your day, you come back and it's like 3 ticks in profit. It's like, wow.
So I think for sure, I don't think there's a consensus around this, but there is a consensus around is that the fiscal spending...
you need some more like Zen attitude, right?
Yeah,
right.
About that Zen attitude. I can sit and trade for 2 hours, but there is a cutoff point to my Zen where I'm just, sitting there and going, come on.
Former Dallas Fed president. It's a big debate. I doubt we'll hear the Fed talk about it, though.
I love the troll level in the chat too.
To deal with it.
Get the JD now. You're nice people. You're all very nice people, but you have no idea what you're doing. You nailed it, my man. You're right. Between the three of us, we have close to 80 years of trading experience. I mean, just between the three of us, right?
I love when people say that. Fucking goofballs. Let's see here.
Steve Leisman. We get earnings from Apple and Amazon this week. Amazon is the first up. That's tomorrow. Kate Rooney gives us a closer look at what investors need to watch. Kate.
Hey, David,
Yep, so there it was. It just pulled back and it held, guys. That's a double top, though. That's a double top, lower high there. What I would do is I'd start finding what I would start looking to see which indice is going to lead you lower or higher. What do I mean by that? Look at the Dow, look at the IWM. Obviously, ARC should be up a little bit. And see if any of them are still leading us lower. The Dow is hanging on. It actually looks nice for a nice little bounce. I'd put more. I would feel better about the Dow. So then we'll go to the Qs, which should look a little weaker, and it looks a lot weaker, doesn't it? Well, wouldn't you know? The SPY was kind of telling us that. It's not that it looks weaker, but it does. It's right. The Dow is up here holding as support. It's turning that into resistance. So IWM doing okay. Let's find out. Let's see what happens here. And again, I'm just looking at the SPY and saying, okay, what's going on here? Because it broke down a little, just a little bit a little bit further than I would have liked to have seen it, but it's still there. It's still holding. It just got real. Listen, that breakdown was real quick, and then it got real volatile down there at 509.80. We could still hold it, but look what you have above you. So what do you think the direction is, right? Look, 1, 2, right? You could even call it 1, 2, 3. How many more times do you think that this market's going to go before they're going to say, you know what, I ain't even trying, right? Before the sellers or buyers just step away and you have a low volume pullback, right? They're like, okay, I'll just give me another shot at 507, 508, which is where we're looking at today, right? These dotted lines. We're looking at these levels. And what's that look like to you? You know, look, we did a nice job of holding the 20-day. It could be an inside-out day too, guys. All right, you know, but I wouldn't mind a pullback down to 508. So, but we want to know if that's the case, then where do we look for it? Where do we want to be? Probably short technology names, but semiconductors were doing okay. At least it looked like. Why are my charts messed up? I apologize that my charts and everything looks messed up today. Just unsure why. I did not make a trade yet. I did not make a trade. Tesla's still. I should have. Gave me another. It gave me another opportunity there. Oh, god damn it. Let's see what happens here if you get a pullback. See if we can pull back to VWAP at 187, and I might try to take the long. It may not give it to us. That might be it. We might be trying to test high a day now. Unfortunately. Fuck. That sucks. I've been wanting to go long. I took my eye off of it for just a second. Oh, goodness gracious. It's technically still just sitting sideways from 185 to 189.50 or 190, whatever you want to call it. It's not going to give us the pullback. I was wanting to look for a buy like right around here. See if it would pull back there. You're going to start getting algorithms that are just going to start covering. They're up a lot, guys. This thing could still go up 14, 18% today. Shit. I'm really frustrated about that. Yeah, I have to try and get a pullback to try and go long. And you only have a couple dollars you're working with there to see if it can break out.
Joining us now exclusively is SoFi CEO Anthony Noto. Anthony, welcome back. Good to see you.
Good to see you as well.
Are you serious? Oh my God. Yo, these were $1.50, y'all. These were $1.50. So Tesla's I'm not even watching it anymore. I'm not even gonna watch it. They might have been like $1.70. Yeah, they were $1.55. They were $1.50 to $1.70 a contract. $1.75 to $1.50. They went to like 180, 190. Now they're up to 215. Like, I'm good. I missed my shot. Unless it gives me another opportunity later on. I was kind of just going over the markets there, and I missed that, unfortunately. It is out of the money, but look at that move. You know what I'm saying? It's got, you have the momentum on your side. I don't want to sit through that drawdown in case it does pull back again. Because if this thing pulls back, even just from up here down to here, those contracts would be about $1.80, $1.90, maybe, you know. So $1.80, $1.85, I would expect it, and maybe I'll think about it there. But anything $2 and above, some people like to pay up for things. I don't like it in this case. You guys can. I think we can get to 200 in that 100-day moving average. Let's see. What would that be? Would that be our 20%?
Yeah, what we've said is that credit will
Just under.
pre-COVID levels, and we're on track to do that. Our life of loan loss targets for our unsecured personal loans are 7 to 8%, and we remain comfortable with those expectations. We are hiring
230. It didn't even move, and look, they just went to 230 because I know it's about to go. Those contracts are ripping, man. Damn it. Anybody play anything today? Let's go look at Microsoft. So I got the SPY there. I need to go.
Allows us to be more conservative in lending and much more aggressive in technology platform in our financial services business. A lot of people don't realize that in our financial services business we have SoFi Money, SoFi Invest,
Just one second.
SoFi Insurance, SoFi Credit Cards.
Microsoft is another one, guys, that if the markets can hold up, you could probably look for this name to look for a bounce. But I would mainly focus Tesla, Nvidia, some of your semiconductors. I'll tell you right now, Moderna. All right, BIIB. These things are all up. Okay. Just go look at the heat map, get an idea for what's going on. All right, so it looks like technology's pulling back. Some of your banks are pulling back. Obviously, Tesla, Apple, Intuit, I don't know what's going on there. ANET or Cloudflare, not sure what's going on there either. But you can see some of your tech names starting to pull back red a little bit. Some strength in healthcare, biotech area, energy, gold, steel, utilities, right? Industrials. AG, CCJ.
We gave a forecast for our lending business to be 95 to 92% of 2023, primarily because we don't want to grow our balance sheet in this environment that aggressively. And so while we're growing strong growth in tech platform financial services, it's still carrying strong overall top line growth for the company at 26% revenue growth year over year in Q1. And that's our 12th consecutive quarter with more than 25%.
So you could, I'm wondering if we're going to see energy go higher this week on the back of, if any of you guys don't know, Ukraine and Russia have been going after one another in the energy space. They have been hitting their refineries and they've been building. Good morning, Matt. What's up, buddy? They've been hitting their refineries and they've been building these cages around them. to, you know, try to stop some of the drones from flying into them and ruining it. So we could still see energy get priced in, and you know, you could start to see some more, how do I say this, like some price pressures on energy. We could see it. That was a major topic this weekend, was them both going back and forth on, you know, energy resources, taking them out and stuff like that. Exxon 119. That's a nice pullback to Friday's high. Again, I'm a little tired this morning, so I do apologize. Let me do this.
You mentioned the growth in the tech platform as one of the drivers for you and why you feel so confident. And I wonder, Anthony, what is your competitive advantage there that other banks and financial
Why are my charts not saving here?
Tech platform, it grew 21% year over year on a revenue basis, which is an acceleration compared to the last 2 quarters. Our strength there is that SoFi is a one-stop shop for all your digital financial services needs. And because we are a one-stop shop, we have greater demands on technology innovation, the ability to use data, the ability to integrate personalization capabilities, fraud protection capabilities. And because SoFi needs all those
Come on. So my charts, like, because I have to keep clicking and doing all this stuff.
And payment processing and issuing. And because we need those things and we're the leader, the only company.
Okay, so is that a rejection off the 20-day today? So Exxon, you have a rejection off the 20-day moving average.
Just like Amazon did with AWS.
We're at this level right here.
Thanks for joining us.
Thank you, Sarah.
Providing some clarity for the viewers. Appreciate it. CEO of SoFi.
Appreciate it as well. Take care.
You too. Coming up on the next hour, CEO of Dutch medical device giant Philips. As shares surge, look at the move today, up 31%. The company agreeing to a $1.1 billion.
I'm not going to look at this.
In the U.S. for personal injury cases linked to the recall of some of its sleep apnea devices. We're going to get the CEO's take on what's next for the company. That's coming.
It looks like my computer or something's going on here because it's lagging. I don't know why. I never really have an issue with. Come on. Watch Exxon if it's able to hold up.
During the Jeep celebration event, get the 2024 Jeep Grand Cherokee starting at $38,000.
I want to go back to Tesla and Microsoft.
This financial services company counts on CrowdStrike for all their cybersecurity needs. But what if they hadn't?
How was everybody's weekend? Did everybody have a good weekend?
This is what it would feel like if cyber criminals breached your network. With CrowdStrike, you get AI and industry-leading intelligence that keep you ahead of modern adversaries by detecting threats and preventing breaches before they happen. When it comes to cybersecurity, who are you going to put stock in? CrowdStrike. We stop breaches.
Amelia, turn off the alarm. Amelia, weather?
70 degrees and sunny today.
Amelia, unlock the door.
I'm afraid I can't do that, Jen.
Why not?
Did you forget something?
My protein shake.
The future isn't scary. Not investing in it is.
You're so dramatic, Amelia.
Bye, Jen.
NASDAQ 100 innovators, one ETF. Before investing carefully,
Come on, we can break through that. We can break through that.
All of that is about understanding what just happened in the markets that day and preparing for tomorrow. I'm looking to talk to all investors, sophisticated investors, beginning investors. I'm always learning.
Closing bell over time. 4 Eastern, CNBC. Y2, Sleep Number Smart Bed.
Can it keep me warm when I'm cold?
Wait, no, I'm always hot.
Sleep Number does that.
Can I make my side softer?
I think my side firmer. Sleep Number does that.
2:30. Gosh, man.
Can it help us sleep better and better?
Sleep Number does that.
I don't think it's going to give me a pullback. I really don't. I think that was my pullback. I think that was my last shot down there at 185. I wonder where Mark McGuire is. I think he's going to say, I told everybody to buy it at 185. You should have bought it. Come on, baby. Give me a pullback.
Few things going on with Paramount. Heavy negotiating going on right now between the special committee for the board of directors and the bidder they are in exclusive talks with, namely that group.
That was a nice job of identifying where we wanted to buy that pullback pre-market. Right here at this 185 level. 184.90, 185 level. That was nice. Let's see if we can still get a pullback to VWAP. We still, you know, last time we tried to hold VWAP, you guys will notice right here. See, it shouldn't be doing that. You guys will see, last time we tried to hold VWAP right there, it pulled back into it. You got your balance and it immediately failed. We have been making nice quick recoveries. Now we just got to get above this level and start to break out to a new high. So Tesla, DJT was on the watch list up there at at 45, but that broke out. Not sure what Goldman Sachs is doing. Still making new highs, 430. Doesn't surprise me. Don't fight it. Just ride along. This thing will probably be 450. It could be at 500. Who knows? You know. What time is it? 10:57. I'm gonna have to just step away for a few minutes. I gotta run an errand real quick in a little bit.
Apple shares up 3.37% on that upgrade from Bernstein. A lot more market coverage for you straight ahead.
I can't believe you corporate types are still calling each other rock stars.
You're a rock star.
Look at that volume.
Rock stars. Look at my data-driven insights. I'm a rock star.
Great job putting finance HR on one platform at Workday.
Thank you.
So yeah, guys, that's really Nvidia never held. I would look for I want to say look for a pullback, but I wouldn't go that far, but just, you know, it could be one of those days. I would look for another test of 860. Maybe SOXL, you could look for a pullback. We mentioned that, you know, the SPY did not hold. You had a double top. Call it a triple top, whatever you want to call it. Bang, bang, bang. Rejection. What I think you'll see is buyers step away for a little bit. And you'll have like a little low volume pullback, which is all good.
Stay cool while you cook and breathe easy as it humidifies your room. Plus, our True Shield filter removes odors. Get your Arctic Air products online or at these fine retailers.
508 would be a nice pullback, wouldn't it?
Did I read this?
Oh, that's why it looks like this. It looks funky because of being Sunday. Just give me 1 second, guys. I'm sorry. I'm just trying to get this stuff so it looks half decent. It's too small as it is. You know what? Whatever.
We are so excited to welcome you to our community. Today is all about you.
See if you get a rejection here. Come on, Tesla, pull back. What's everybody watching today? Does anybody have anything that they see? It's just one of those days. There were some small caps that were going. ANVS halted to the upside.
Quick Logic getting a pop here to the highs, 1588.
Then shares of Philips had a 2-year high after a slower than expected settlement over its sleep apnea devices. The CEO joins us.
One of Morgan Stanley's top IPO bankers after leading the public offerings for Reddit and Astera Labs, his first ever interview on CNBC this hour as well. As we hang on to some green arrows to start the week, a lot headed our way in the next 5 sessions, 4.5, but we're 5110. Let's bring in CNBC senior markets commentator Mike Santoli as we await, most importantly this week, Mike, a Fed decision on Wednesday.
Yeah, it seems like it, Carl. You know, I've been for months on team. The stock market doesn't really need rate cuts soon or deep rate cuts. We are getting to a point here where, you know, we're 10 months into a Fed pause. I think almost
Is that really MindMed? Yeah, MindMed's going higher. Let's see here. Okay, there's that. SoFi pulling back. Okay, so look here. Closed around 788, and we said it was pulling in $1. It was pricing in $1 Friday from the close. What it do? Pulled back, gave you the $1. I said watch for the either the rally or the pullback. See if it goes to where the market priced it in at, and it pretty much did. 788 to $7, just under $1.
Trying to figure out if it's just consolidating before another move up in rates, or if we've seen the worst of it.
Yeah, I think that's in fact the more immediate issue is trying to figure out exactly what level we're going to be contending with on market yields on the long term.
Let's go look at the heat map real quick because I gotta go. I have to go run real quick. I have to go run an errand. It'll only be a couple minutes. You can see semiconductors pulling back, right? Energy pulling back. But healthcare was nice and green, pulling back. Banks pulling back. Looks like we might start to go red. Can you feel it? Did you guys feel that with me after looking at this? Right? Even though this could be a pullback and then we go green, either this is more than a pullback. We'll find out. Your steel, copper names are nice and green. So
Shares of Roblox getting a pop here. 36.
I was actually wanting to look at Roblox this week. It's so funny. So so yeah, I'm gonna go run real quick. I'll be back in about 15-20 minutes. I won't be long at all. I appreciate you guys. If you could hit that like button, subscribe. I'm ready to have another killer week. A little frustrated I did not get that Tesla call there, but it's whatever. No big deal. No big deal. They're almost up, damn near. They're up a good amount, I know that.
Joining us now is Oaktree head of liquid performing credit, David Rosenberg. Oaktree has $192 billion under management. It's good to see you.
Thanks for having me.
Welcome. How do you see this current cycle of rates and whether we've sort of reached the top?
You know, I think the key here really is a lot of people have this conversation. We're in this new normal of rates, and our chairman has made this comment a lot that this really isn't the new normal. He likes to call it the old normal. The abnormal part being zero interest rates that just lasted over 10 years and everyone got used to it. Rates at this level are, if you go back long enough, normal. So this whole narrative that they have to go back to where they were just isn't true. They can go back to where they were with a catalyst, but without the catalyst, they could stay roughly where they are for some time.
Isn't the catalyst that the Fed will start
Well, the question is, why does the Fed cut? And everybody's been waiting for this Fed pivot. And what I remind people is that the Fed cut, something bad has to happen to justify a Fed cut. So I have this conversation all the time where I say,
There we
the Fed's
go.
not necessarily in the business of propping up stock.
This guy, he's saying, oh, the Fed cuts for something bad. Well, yeah, you just had GDP just get tanked. You know, the Fed raised it, what was it, like 1 something? I don't know. Everybody's got something to say. So here's that NVIDIA pullback we were talking about. Again, just a pullback. If anybody's looking for any type of trade ideas or anything, you have Microsoft. That is, I think, a possible good look. Microsoft and Meta. So Microsoft's back down to the 100-day moving average. I'd have to go through this market. Man, it sucks that I have to go. All right, guys, I'll be right back. I don't mean to go, but I have to. I'll throw some stuff on here. I don't know if you guys want anything to listen to or not. But again, I'll be back in like 10-15 minutes. Well, like 15-20 minutes. I won't be long.
Getting into a point where I would have expected consumer spending to slow down, and it still seems to be charging ahead.
Although with labor strength and home equity and stock market returns, why would it be surprising that they continue to spend?
I think it's at the rate that they're spending, right? And so I think that at some point you can only borrow for so long to keep spending before you're starting to see credit card delinquencies pick up, auto loan delinquencies pick up, and so I think there's reasons to believe that trees don't grow to the sky and people can't do this forever.
There is also a demographic theory that we're witnessing a wave of final spending by baby boomers on things that matter, like healthcare, right? Yes. And then that's going to, at least in the next, say, 5 to 10 years, make getting to target more of an issue.
I think it's fair. You also saw a shift in spending, right? So, during COVID, it was a lot of goods people were buying. Now they're shifting to services, and you have revenge spending and travel spending. And
all right, guys, I'll be right back.
You think about which ones are rate sensitive or economically sensitive, and waste is waste. I mean, I know you need this all the time, and it has had a nice run from 149 up to 214 recently. It's since pulled back a bit, but some of your thoughts there.
So again, you said it, waste is waste. We Americans are really good at producing garbage. That garbage has got to get picked up. It's got to be taken to landfills. It's got to be disposed of. But Waste Management is another well-run company that I can tell you as a client of them myself, I've always had a great experience with them. I think this is a company that really values their clients, their employees, and their shareholders. And the stock has done tremendously, not only this year, but for 5 years, this company has been doing fantastic. So we're big fans of Waste Management.
Yeah, it's great to see you, Ed. Thank you so much, Ed Cofrancisco, International.
I wouldn't mind looking
Advisor.
at some of these Microsoft calls and trying to see if it can hold
Plenty
on
more
there.
to come here on Trading 360. Up next, it's the big three.
I gotta wait
Stocks
till
and
I get
charts and
back.
Trades. Ben Lichtenstein goes to the technicals, and Jessica Inskip of Options Play takes us through the trades for First Solar, American Express, and Alphabet Google. Trading 360, Schwab Network. We will be right back.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Sorry, folks. It's spring season. Welcome back to Trading 360. I'm Nicole Petalides. Thanks for being with me. It's time for the Big Three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Jessica Inskip, Director of Product Education at Options Play. Thank you both for being with me on this Monday. So Jessica, how are you feeling about the markets? I mean, you see today, pretty, great day. Most of the sectors are higher. I'm seeing consumer discretionary, utilities, real estate leading the way. The S&P is gaining. Some of your thoughts.
Absolutely. I think we certainly have a very big week in the market after a very big week last week. So lots of potential catalyst, but I find it's really a Fed week. We've got to wait on that. It's going to be interesting to see Amazon earnings and of course Apple earnings, but I am excited still about AI, the CapEx spending. I think companies are more efficient and lean, and there's more control of the narrative, meaning even if there is better than earnings, but any misses really, it's not from unforeseen circumstances. It's we're spending more, so it's more of control within companies, and I see that really as a positive.
Right, understood. And then, so now your first name that you're following here today is First Solar. Some of your thoughts. It's sort of had a choppy trade of late, hit a low in November. Where do you think it's headed and why?
Absolutely. So First Solar was actually a technical scan that I ran this morning. And normally I don't come to you with too many technical scans. So interesting. Nonetheless, I'm showing it as a trend reversal. And so I want to structure a neutral to bullish trade. And the way that I look at markets technically is really what I like to call a qualitative, quantitative view. So I look at the 13, 26, and 40 weekly moving averages. Those are indicative of 1, 2, and 3 quarters worth of prices. And since we look at the market quarterly, I want to see prices increase, and we'll see it relative to earnings. So that's how it's qualitative, quantitative. Just looking at it, if markets are truly fundamentally driven from that technical perspective, then that should be reflected with the 13, 26, and 40 weekly moving averages. So I see that rolling over and going above my support line or support zone of 175 to about 177. And on top of that, due to the increased implied volatility from earnings that are coming up with First Solar, there is a really good high probability trade that I know we'll get to in a moment.
All right, good. I want to hear all about it. Ben, take a look at the charts for us, please.
Yeah, Nicole, good morning. Jessica as well. First Solar's been shining bright for the most part as of recent. It's been rewarding the bulls across multiple timeframes. I'm seeing a bullish pattern playing out here and a pretty well-defined trend up. This is exactly what I like to look for. I like to look for patterns that repeat themselves and then ways to make money while trading even when you're wrong. Let's start with the move up that we've seen just since the beginning of February, end of January. We found a bit of a double bottom around this 135 level. You can see a big move up in reaction to earnings. Sideways consolidation here, and then again that move higher to 188 where we started to balance out a bit at this upper level here. Let's just take a look again. We've got a 60-minute candle chart up, and I've identified 2 areas of consolidation that have formed here. We're talking around 150 and then currently balancing around this 180 area. So kind of random, not a lot of conviction within this range, overlapping, horizontal, but you can see value moving higher here, right? And for me, when I look at a chart, Nicole, Jessica, as a technician, you don't really care so much about the symbol in the top left corner or the product that you're looking at. This is what you're trying to identify, trend and value. Take a snapshot of this image here and remember it, because, well, as we add a little time on, you're going to see almost a similar pattern. Now, we're actually adding quite a bit of time on going all the way back to the beginning of 2021. But again, similarly, two areas of value that have formed here. And you can see, again, that area mentioned here around 180, but you can also see that area down around the $80 level here that was into the summer of last year. High conviction to the upside. You can see we posted new highs into June, July of last year, and then have come off a bit since. So not necessarily what the bulls want to see, but getting back above this pivot line I think is significant, and it opens up a door for a retest of that high that we saw again last year up around 230, 240. I just wanted to show you one more chart to kind of zoom in on the last year of price activity. We're holding above the 200 day moving average, holding above the 50. The stock is currently up around 5% year to date, but we're also seeing some good strength here in this RSI, the relative strength index. So suggesting there could be potential upside momentum here still to come, Nicole.
All right, thank you for that. I'm curious about the trade here, Jessica.
Yeah, absolutely. So this is a neutral to bullish trade, the way that I'm structuring it. So we're selling premium. There is a heightened implied volatility. And normally when I'm selling premium and I'm creating a credit spread, so this is a bull put spread, I look to capture 30% of my overall risk, which is the difference of the two strike prices. I'm actually able to get 44%. So that's very much more high conviction, which makes it a high probability success trade. The way I'm structuring it is I'm selling the June 7th 175s and buying the 165s. I'm able to collect about $445 altogether. So that there is 44% of premium that I'm capturing relative to the risk. I just need first seller to stay above that line of conviction that Ben pointed out, 175, and this trade would be successful. Just need to stay where it is.
Next up.
Yes.
Yeah, right. Next up, we're watching American Express, Evercore ISI, and also Wells Fargo recently upping the price target for American Express, which right now is at 236. Some of your thoughts on where this could be headed and why?
Yeah, absolutely. And you're so right, as always, Nicole. It is a great earnings beat. They've got that high credit quality consumer base. Their build businesses are reaccelerating, which is interesting because we see that across the airlines as well with return back to work and a lot of corporate spend. And they have the fee-based cards that's adding to their revenue. Their U.S. consumers saw an 8% increase year over year, and large and global enterprise was 5% year over year. So I really think that high credit quality consumer base is something that we're going to see strengthen, especially as we're talking about this restrictive Fed environment. American Express seems to be coming out on top, and I still see them doing that as well.
Right, understood. I mean, look, and you're still seeing this very resilient consumer. Ben, some of your thoughts on the technicals here for American Express today?
Yeah, they have been coming out on top, that's for sure, Jessica and Nicole. This chart, very bullish across multiple timeframes. Let's dive right into it. Exactly what I look for, the two phases of development and the well-defined transition between the two. For that, we can begin with a 15-minute candle chart. You can see sideways consolidation into earnings, and then a big move up here in reaction to the results. That imbalance that gets created transitions back into a balance where we have now value, which is being formed at a higher level. So again, 15-minute candle chart, just looking at the last few weeks of price activity and the event that we saw in reaction to earnings. You can see two areas of consolidation that have formed, 218. 237 is currently where we're balancing right now. So you've got a well-defined upper extreme around 240. We could broaden this out a little bit. I'd be keeping an eye on that lower level around 228. That might be the lower extreme of this range here. But let's take a step back. We don't want to put too much weight into this 15-minute candle chart. When you add a little time on here now, a daily candle chart going all the way back to, we're talking June of 2022, you're going to see a very similar pattern playing out. Migration of value to the upside. You're going to see key areas of value that actually held, and you can see how we're now in a vertical phase trying to break out of this range that we just recently were forming around 220. You can also see this extremely mature area consolidation that formed around 165. We're talking multi-months of just random overlapping and just not a lot of conviction. Well-defined upper extreme that gets established and even a pretty well-defined lower extreme. So range-bound trade transition to high conviction, back into that horizontal, and now again we're trying to break out here and establish something higher, or extend this range at the very least. But hey, no matter how you slice it, a very bullish pattern here as well. Let's take a step back, looking at the 50-day, the 200-day moving average, and again a daily candle chart. You're going to see RSI is somewhat limited in terms of this move to the upside relative to what we're seeing in price. So a bit of a divergence here, which is going to be something to watch this week, right? But let's keep an eye on that. Holding above the 50, holding above the 200-day moving average. Look at the stock here, up 26% year to date, Nicole. Again, a major win in many ways for the bulls here across multiple time frames, signaling the technicals adding up to and suggesting that the fundamentals Jessica was just talking about are really being supported here.
Yeah, I mean, look, when we see the fundamentals here and you watch the moving averages, you see that it is a strong player. Final thoughts on this one, Jessica?
Absolutely. Trade structure, I'm looking at a covered call for this one. So owning this security, it's a great way to add yield while participating in capital appreciation with that bullish thesis. So selling a June 21st 260 covered call, that gives me room all the way up to 260. So I'm capping my upward potential there. I'm okay selling American Express if it goes to my strike price. I'm collecting $117 altogether. Now that seems minimal when considering yield, but if you were to annualize that and consider doing this consistently over 45-day periods, that actually adds a yield of about 3.49% to my overall portfolio in comparison to their dividend, which I think is a little above 1%. So it's a way to participate in capital appreciation while also adding yield to your longer-term portfolio.
All right, and last but not least, we look at Alphabet, which jumped up to new highs recently of as high as 174 and change. We had the strong earnings last week, which really helped to turn the market. Where do you think it's headed now and why?
Absolutely. You know, Nicole, how much I love AI, and I try my best not to talk about it all the time, but it's inevitable because of the huge amount that it's playing in the market right now. But this is promising because the beat that it had on search and an uptick that it had in search generative experiences. And of course, the TikTok discourse, there is a beneficiary that Google will be. I do spend a lot of time on TikTok and I have a presence there, and the creators are definitely saying that they're moving over to YouTube. So I'm going to listen to where they're going and also see that reflected within the numbers, seeing an increase on YouTube with 21% increase year over year. Their search was 14% quarter over quarter, and they beat on cloud. So that's 3 revenue streams that they beat on. Cloud was 28% year over year. Now, the big concern I see with Google is they had a big CapEx spend. Their increase was actually 91%, which is really, really big. And that was year over year from their spend comparison to last year. But that means the AI race is on. They are investing. We saw that Meta is doing it. Last year was the year of efficiency. There's free cash flow, and that's important to know, especially with this higher rate environment that we're with. But beating on those revenues, it's a big player. It's a mega cap. I really think there's a lot more we're going to see within generative AI and Google specifically.
All right, thank you for all of that. And we're going to take a look now with Ben, looking at the charts here. Some of your thoughts on the charts, Ben?
Yeah, Nicole, Jessica's not alone on this one. It seems like the broader market feeling the same way, or at least buying into the recent narrative. You can see the move behind me. It's a 5-minute candle chart, and it really speaks to some of the strength we've seen just as of recent. The high conviction move up, and we're kind of leaking lower here, but recently trading up to just shy of 182. Stock was trading down around 151 prior to earnings last week. And this was a big part of that broader market rally we saw, right, as the market kind of pushed back on some of those, that rate cut sort of dark cloud or push back on some of those cut expectations cloud that was hanging over us. And earnings really helped that out here. Let's take a step back away from this 5-minute candle chart and take a look at the significance associated with that move last week relative to the longer-term trend, which has been pretty well defined to the upside here, bottom left to top right. You can also see the gap up here that's playing out here. Look at this on a daily candle chart. You're going to see, again, a high conviction trade to the upside. Now, this move that we just saw, this gap, higher highs, higher lows here, kind of reminds me of the move up that you saw back in July of last year, if you remember. High conviction move up through that 125 level, balanced out around 130. The bulls wouldn't mind seeing a little consolidation at this new upper level that forms value after, again, imbalance and ultimately in continuation of the trend we've seen. That's what they're looking for, right, is something to form above this 155 level. So they're on the right track here, that's for sure. Let's take a step back here. I wanted to show you where we are on the longer term, where we are relative to the 50 and the 200-day moving average, and also the RSI, which is starting to join in here. It's going to be key to watch today. and this week to see if we can get some follow through in terms of price, if we can hold this upper level. But yeah, a big move away from the 200-day moving average, a big move away from the 50, and a reflection of that bullish sentiment as well. These are three names that I can, again, understand why Jessica's very bullish across the board on all of them.
Wow, it's nice when you get some affirmation like that. Final thoughts, Jessica?
Of course. So this one as well is neutral to bullish. So selling the June 7th 165 puts, and I'm collecting a premium of about $3.19, so $319 total. And the intent of this is I'm utilizing the obligation found within the short put. I'm obligated to buy if this moves down adversely. And I'm okay with that because I want to add it to my longer term portfolio, but I reduced my overall risk exposure in comparison to buying the stock because of the premium that I'm collecting. So it's a way that I utilize options, and oftentimes options traders do by buying and selling stocks is selling puts to buy and selling calls to sell.
All right. Great to see you both. Thank you for kicking it off this Monday. Really appreciate it. Jessica and Skip at Options Play and our own Ben Lichtenstein. They're on the charts for the big three today. Thank you. Coming up next, we will spotlight BWLPG. The company rang the opening bell today. It has its listing here at the New York Stock Exchange. There they are. We look around the world of shipping, and they'll be here to explain. We'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. All so you can trade brilliantly.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
To Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. A special guest here for you. Time to spotlight BWLPG. Rang the opening bell this morning, listing here at the New York Stock Exchange. This is a dual listing, also listed in Norway. Joining me right now is CEO Christian Sorensen, CEO of BWLPG. Thank you for being here. We saw your great video and the team there ringing the bell. You have a dual listing, certainly great exposure here at the New York Stock Exchange. Why now? Why the dual listing?
For us, we've been listed on the Oslo Stock Exchange for 10 years. As we could see that our market cap reached a certain level, we're close to $2 billion now. We had increased interest from US investors over the last, I would say, 3 years. But they wanted to, they kind of encouraged us to also list here in New York.
Right.
So that they can get, we can become more investable for a broader US investor base than what you do if you're just listed in Oslo.
Yeah, I mean, you're in good company. There's certainly a lot of shipping companies here at the New York Stock Exchange. And if you have money on the sidelines or people who would like to invest in the company and they want to have a little more clarity or have it closer to home, it makes it easier for them. What kind of demand are you seeing? I mean, I understand you have the very large gas carriers, maybe 490 vessels, something like that. You tell me about the current environment.
Yeah, so we are part of a group which has just 490 vessels, but we have 44 VLGCs, as they call in our industry.
Yeah.
And we are the largest operator of very large gas carriers in the world. And our market has, for many years now, been fueled by the increased exports of LPG here from the States. And it's very much, it's a great investment story to tell on the back of that, because the exports here from the US, they look to increase, in the foreseeable future. We don't see any abating curve or anything, which is good for shipping.
Yeah.
And we do have also a limited number of new buildings in our sector, which are being delivered from second half this year and into late 2025. So the dividend yield story that we are representing in our sector is quite good, I would say. We paid out 98% of our earnings last year. Annualized dividend yield of 28%. Which is quite good. So
yeah, where is most of the product sent out to? Where are you seeing? Has the demand picture changed? You're talking about exports for the United States out. What used to be the biggest players, and where are we sending most of it now?
Yeah. So 80% of the volumes end up in Asia.
Right.
So you have this great dislocation between production and the demand side, which is good for shipping. So long distances going from the US to the Far East.
Yeah.
And last year we even had a disruption in the Panama Canal, which was quite dramatic. So we had ships sent around South Africa instead of the milk run via Panama, which absorbed 40 to 50% more capacity from the fleet. And the rates spiked on the back of that. So there is this wild card in our market, which is the Panama Canal.
And so when you think about the competitive landscape, I mean, you're still able to function, you're growing, you see the demand and paying out the dividend. What is the competitive landscape like for you? I mean, is there pressure on you? Because you talk about how you have to do rerouting, you talk about geopolitical issues. What has that been like for you trying to run a company in this environment?
Well, it's been quite volatile, I would say, but we have a fairly large fleet of vessels, right? The largest in the world, and the way we operate this makes us also reduce the, I would say, operational and commercial risk, and we do. I would say we do handle this risk very well because of the size of our fleet. We're not really affected by the Red Sea and the tension level in the Middle East. So for us, the main driver here is U.S. LPG exports, steady exports from the Middle East, and a very healthy demand side building up in Asia.
And we talk about what it is that you're sending along, right? With very large gas carriers is something you focus on. You focus also on ESG. Tell me a little bit about what's changing in your environment as well.
So we have, I would say, the privilege in our shipping segment to actually have technology which is dual fuel LPG run engines, which reduces emissions of CO2 and other particles, and also is a great cost saver on the bunker side. We save last year $11 million. It's like $4,000 or $5,000 up to $6,000 a day by burning LPG instead of compliant fuel, which is a great cost saver for us. So we have retrofitted 15 of our ships with this technology and have the largest fleet in the world with this dual fuel technology at the moment.
I like how you say it's a privilege. I mean, it also costs to get those ships up to that level, right? Because I've talked to many shipping companies and they have to pay to get their vessels up to those levels, to have less emissions, to be more ESG friendly and all that. I don't know how problematic that is, but it's nice when you get there and you have, I mean, what percentage of the ships are you working on to sort of move them forward to a carbon emissions levels or things that you follow more closely?
So we do not have any new buildings at the moment on order, where you can also get the same technology by building new ships.
Yeah.
And the reason for that is that we believe the ship prices are simply too expensive.
Right.
So, and
Sure.
shipping is a cyclical industry, so if you time these investments on the wrong end of the cycle, you're not able to harvest and pay out dividends as we do now. So we believe we have a good proven track record in investing at the right point in the cycle. And like I said, next time we're ordering new buildings, which is then of course we will make sure that we also do this with the latest technology available at the time.
Yeah, and are we running out of resources? Do we have endless resources? Where do we stand on that? And obviously the U.S. remains very competitive, right? I am curious about our footprint in the global story.
Yeah, so I think the U.S. plays a vital role as an exporter of this hydrocarbon, which is very competitively priced as an export product from the States, and is able to penetrate markets in Asia because of that. So, the commodity LPG is a great story because it's competitively priced, it's quite easy to handle, and it's readily available in the Middle East and here in the States.
And how, just quickly, I mean, when you see oil at $82 a barrel and all the other elements, the Fed may cut rates, I mean, labor costs, commodity costs, a strong U.S. dollar, any of those worry you, or what's on your radar every day? Are you watching yields every day? What do you watch every day?
Of course, we do watch, if not every day, at least on a monthly basis, what's happening here in the U.S. on the production side. I would say that what we do see that when big companies like the terminal companies are expanding their investments here in the States, that's a good sign for us.
Yeah, and you're seeing that.
We're seeing that.
Good. Okay, great. That's good news. Glad to hear it. Yeah, Christian Sorensen, CEO of BWLPG, here now, a dual listing, listed at the New York Stock Exchange today, and saw the ringing of the bell. Congratulations. Thank you.
Thank you.
Coming up next, we'll take a look at the disruptors. George Sillis is standing by. He's looking at ARM Holdings, a bullish analyst call there. He will give us all the details and an example trade as well next.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back back to Trading 360. I'm Nicole Petalides, live at the New York Stock Exchange. A look at developing stories. I'd like to bring in Caroline Wood, senior markets correspondent here on Schwab Network, taking a look at Tesla, which is in focus today, all about full self-driving. But, you know, everybody was so down on Tesla, it got as low as $138 at $194 today. Tell us a little bit about the story you're watching.
Hey there, Nicole. Yes, share is up more than 15% today. They needed a positive catalyst, so this seemed to be it. Elon Musk made a surprise visit to China over the weekend. He met with a bunch of high-ranking Chinese government officials. Tesla passed data security requirements, so Chinese authorities removed restrictions on its cars. And now, according to the Wall Street Journal, Chinese officials told Tesla that Beijing has tentatively approved the company's plan to launch its full self-driving capabilities, the software features, in the country. So full self-driving, or FSD, has actually been available in China for quite some time, but it's been with limitations. So this would offer the full capabilities of FSD. It's important given that China is one of Tesla's, or a key EV market. It's Tesla's second largest EV market and is facing, Tesla's obviously been facing sales slump and rising competition from China especially. We know that last week, Tesla cut the price of FSD almost in half here in the United States. So they're really trying to increase demand, and this should help with that. In terms of the partnership that Tesla's reportedly partnering with Baidu to use its mapping and navigation technology for the features, that would allow Tesla to tap into Baidu's mapping service license, which is a requirement in order to operate on Chinese public roads. So that should help clear some of the regulatory hurdles that Tesla could face. So that's also looked at as a positive. But shares up 15% on this news. Dan Ives out with a note last night calling it a major move or major moment for Tesla.
And Baidu shares up 5.5% too. It's a win all the way around. Thank you for all of that.
And BYD, I was checking because that's obviously a key competitor to Tesla.
Sure.
Up 1%, so not having an impact on BYD shares.
All right, thank you for all of that. A good look at Tesla. All right, thank you, Caroline Woods. Now we'll take a look at our disruptor. George Sillis is with us, senior markets correspondent, taking a look at ARM Holdings. So Wells Fargo raising the price target there. Tell us a little bit about the story, George.
Well, I think Wells Fargo is looking forward into 2025 for ARM Holdings, which is one of the largest chip design companies in the world. And in fact, if you look at the market share they have in smartphones, I mean, nearly all smartphones have some sort of ARM-based technology, especially their mobile application processing technologies. And so based on the population globally, about 70% use some sort of ARM technology. So this is a company that's generating consistent licensing and royalty revenues. And from a licensing standpoint, Wells Fargo actually sees pretty substantive growth going into 2025 on a fiscal year basis of about 40%. And so what they're doing prior to the earnings coming out next week on the 8th of May, they're basically maintaining an overweight rating, but raising their target on the stock to 115 from 100. And I think if you look at the stock as well, I mean, obviously, it performed quite well alongside the super micros and the NVIDIAs of the world, and that has to do with their networking business. The ARM is primarily a mobile application software company from a design standpoint, and they compete very aggressively with Qualcomm. But they also have industrial and automotive, as well as cloud computing technologies that are licensed to multiple vendors globally. So. Overall, their cloud and data infrastructure-based software has been growing, and I think this is also complementing the call from Wells Fargo.
All right, thank you for all of that. And then what about the example trade, George?
Okay, so one of the things about ARM is that obviously during the mid-April dip that we saw in the technology stack and even the market, ARM actually came down quite significantly, and I think there's still some valuation concerns that might create some challenges for the stock, at least in the near term. So just to point out that the 2025 earnings guidance that the company's provided already is around $1.52 in earnings, which puts that earnings multiple for 2025 at 66 times. So if you look at the price action, it's also still trading below its 10-period moving average, which means in the short run it might face some challenges. So what we're going to do is they have earnings on the 8th of next week. I'm going to go out to the end of next week with 11 days expiration and sell below the current price a short put. So I'm going to sell the $94 put. That's obviously below the price by about $7. You can actually earn about $4 a share or $400 a contract by selling that. So selling the put is still a neutral to bullish trade. We do obviously want to see the stock stay above the $94 area between now and expiration. That $4, by the way, is also about a 4% yield to the strike price between now and expiry in 11 days. So going into the earnings, the premium might start to erode away. But if you wish to hold it through earnings and the stock does fall, keep in mind that you will be assigned shares at $94, but your cost base is effectively $90, which is about $11 off the current price.
George Sillis, thank you for that. A good look there at ARM. We appreciate it. For our disruptor today. Thank you, George. Coming up next, we'll get you set up for a lot of these fast food stocks, names like McDonald's, Starbucks, and more. Our panel is ready to take a look at this group, Trading 360. We will be right back.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Ethan! How's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Ethan! How's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Trading at Schwab is now powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to Trading 360. It's time for our 360 round. RJ Hottovy is with us, head of analytical research at Placer AI, as we take a look at these restaurant names. When you look at names like Starbucks and McDonald's, the stocks have been struggling of late. Domino's Pizza, on the other hand, hitting some new highs. What's the big picture for this group? And then I want to break down, RJ, some of the specific names.
Yeah, I think the big focus right now is on traffic. It's obviously still an uncertain macro environment. A lot of consumers are pulling back on restaurant dining, but generally in the QSR sector, we see some strength. I think a lot of it comes back to menu innovation. We saw a little bit of this with Chipotle last week with some of the limited time offers that they had to better compete with the value priced grocers that are out there, dollar discount stores, things like that. We're also seeing that those chains that really invested in more suburban locations, so that would be a Chipotle, a Cava, a Starbucks, Dutch Bros. We're starting to see the impact of those stores that were open a year ago start to enter the comp base. And I think that's been also a success story here. But a lot of focus on visitation and traffic. I think that's where really the focus should be. And after a tough January start with weather, we've seen some rebound in February and March. So I think that hopefully gives some encouragement as we look to look for the remainder of the year.
Yeah, I see. I just was checking, and I see Cava, Chipotle, Domino's Pizza, which we could talk about some of the things that they said in their last earnings report. You know, those are all doing well when you look at this stock story. Are they bringing something different to the table?
Yeah, I think they are. I mean, a name like Chipotle, again, is doing a lot of things on the menu innovation front, bringing limited time proteins to the menu, carne asada, chicken al pastor. So doing some interesting things like that. Cava, just doing, largely is a new name for a lot of markets too, starting to expand. Just opened up in the Chicago market last week. I've done some really interesting things on that. So, first time a lot of people have been exposed to that. And really, it's the first Mediterranean fast casual concept that's really been able to expand at a nationwide level. Domino's doing some things on the innovation front as well. And I think that's really the name of the story. A lot of restaurants retrenched during the pandemic, really focused on just streamlining operations, reducing menu count. But this day and age right now, people are looking for some excitement, something new, something that drive them to those restaurants. And I think those that are leading are the ones that are doing just that.
Right. Also joining our conversation, Sia Destas with us, equity research analyst at CFRA. Thank you for being with us. When I was reading through what Domino's Pizza had to say, while the international environment seemed challenging, they're doing so well. They revamped the loyalty. They said Uber Eats helps with deliveries and pickup orders. Just the higher supply chain revenue, at least in part because of higher order volume. So you are seeing certain names in this group doing well. Which ones do you think lead and why?
Currently, I think some of the names that were just mentioned probably stand a chance to lead going forward this year. It's because of the average income cohorts that shop at those restaurants. So think of like Cava, Chipotle, Shake Shack, those companies that are really doing a good job of marketing and offering promotions to the right demographics and offer value-oriented menu options that are also healthy or relatively healthy or have high quality ingredients. I think those stand to benefit the most.
Yeah,
but
there certainly seems to be a consensus. Yeah, go ahead.
Domino's, we also thought had a very strong quarter with, as you said, the incremental sales from Uber, and then just their performance with the lower income cohort. So we also think value-oriented names like Domino's also will do well this quarter.
Right. Yeah, understood. They also did well. The royalties that they get from the franchises, royalties and fees, that also went up. Another plus for a name like Domino's. I know the coffee chains are in focus. RJ, you had Starbucks and Dutch Bros on here, but I'm also concerned about the labor story, California's minimum wage increase, things like that. Tell me a little bit about each thing. The coffee story and then the labor story, RJ.
Sure. The coffee story, both Starbucks, Dutch Bros, and Dunkin' as well, have really outperformed the broader restaurant category in terms of visitation this past quarter. I think a lot of that has to do with the shift in terms of the store footprint. A lot more movement out to suburban locations, a lot more drive-through locations for a name like Starbucks. Dutch Bros continue to hit some underpenetrated markets in the southeast, and I think that's really what's going to be driving success for these guys. There's a little bit of an element of return to work. We've seen a little bit of pickup in that early morning day part, but also we're continuing to see strength in other day parts like the late morning and early afternoon, which is really not been historically part of the coffee business for a lot of these chains. So some strength there. I think that's really helped out. If we're looking at California, it's been interesting to look at the data so far. Visitation data, it's very early. We only have about 2 weeks, 2 to 3 weeks of data since they implemented the minimum wage hike. But we have seen that California and most of the major markets in California have generally lagged the nationwide average for QSR and fast casual chains. So there might be some indication that consumers are starting to push back a bit. I think we're going to need more time to see the full development of it, but it's been interesting to look at. We do start to see a little bit of indication that consumers may be pushing back on that already.
Yeah. And Sia, any names that we should be buying ahead of the earnings?
Well, we have a buy rating on Cava and Chipotle currently. We had a relatively neutral stance on a lot of the restaurant companies in the space, just given the pressures on consumer budgets with the interest rates still higher for longer, so to speak. And the other than Cava that's going to release earnings, we maintained our buy rating on Chipotle, which released earnings last week. And they highlighted California wages, which I thought was interesting, impacting margins. Yeah. And I think that's going to be a trend this quarter.
Yeah. I see Wedbush lowering the price target on McDonald's, for example, this past week. Great to see both RJ Hadavi and Sia Desta. Great to see you. Thanks for being with me, friends, here on Trading 360. I'm Nicole Petalides. I'll see you at 2 p.m. Eastern Time for the watch list. Keep it right here. Fast Market is next.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 to $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device, for free. Schwab Network.
Traders, welcome to Fast Market here on the Schwab Network. I'm Tom White. We got a great lineup for you today, including discussions and strategies and more earnings names. We're going to cover PayPal, which is down about 11% over the last year into earnings tomorrow morning, and 3M, which is flat in 2024 into their quarterly report ahead of the open tomorrow. And like Folio, will break down consumer sentiment data on McDonald's, which has fallen about 9% since hitting all those all-time highs in January. Now let's take a look at the four major indices, which are off of session highs, but all still in the green slightly. The S&P 500 up over 0.2%. The Dow Jones Industrial Average up about 70 points. NASDAQ 100 up about 0.25%, and the Russell 2000 small caps leading to the upside on weaker yields. We've got the small cap up nearly 0.7%. To help me break down the market action, let's bring in my co-host, Kevin Hinks. Kevin, kind of a modest start today after a solid rally last week, broke a 3-week losing streak for the S&P 500, but we're seeing a little bit of momentum carrying over from Friday.
2.5 hours into a massive trading week, and so far it's slightly on the upside, but boy, it looks shaky.
Yeah.
Although, you know, I talked to Oliver Rennick this morning on his show about there is so much going on through this week with earnings, with economic data, with Fed. There's a lot to look at.
Yeah.
And so how do you do that? Well, you stay here.
Calm before the storm.
Yeah. But, you know, things are, I mean, you know, this Tesla move is, there's a lot of Tesla bears or Tesla skeptics doing 180. No, forget it. We like it again.
Yeah.
It's a big move.
Stock's up, 16%
but
today's
here's
session.
what it reminds us. It's China. It's all about China with Tesla.
Yeah.
You want an oversized move up and down? China.
Yeah.
That's what to watch. As long as the good news with coming out of China with Tesla, and this is pretty good news, Tesla.
Yeah.
Incredible.
We're going to cover that in a little bit here, but now let's bring in Kevin Green, senior markets correspondent here. Kev, I wanted to get your take here on the market moves because I was telling Kevin before we went on air, KG, that if Apple and Tesla weren't up today, I think we'd be in the red at this point because we've got some big tech names that are lower today.
Yeah, for the market cap weighted S&P 500, I would agree with you. We're trying to at least hold these gains for right now, but we are seeing some weakness when you're looking at the information technology space as well as the communication services space. So, you know, we're going into this week, as you talked about, with a lot of economic data. We also have earnings coming out for Apple, which we're talking about Tesla earlier. I mean, Apple is in that same type of situation. The market's really embracing for a really bad print when it comes to the China sales. Now, if they actually do beat the street's expectations when it comes to the revenues for the iPhone, then we could maybe see a decent rally, maybe similar to what is going on with Tesla. But under the hood, though, today, Tom, we are seeing breadth expanding in the market. We do have a pretty decent amount of stocks advancing compared to the declining stocks. We have consumer discretionary, utilities, real estate, those stocks that are really sensitive to the interest rate environment as the 10 years going down, catching a little bit of a bid here today as well. So I do believe it's really top heavy right now. That's kind of causing some of these cracks on a technical standpoint, hitting some key areas of resistance. But under the hood, or if you're looking at the S&P equal weight, we're actually faring pretty good so far to start off the week.
Yeah, 9 out of the 11 S&P 500 sectors are actually positive, Kevin. But we did fail at that 50-day moving average, which the S&P 500 has been below for about a week and a half. Hit right up against it, failed a little bit. We're still positive, though. I mean, what's your take here that's going to cause anything to move today? Because I know that we've got a lot of data and earnings and Fed meetings this week that are going to definitely provide some volatility.
Well, I think what could creep into the market this afternoon is hesitation on the rest of the week. Doesn't mean there's any big move, but you're going to look at. Remember, Jerome Powell has kind of turned a little bit. He's kind of pivoted towards more hawkish. What's he going to say on Wednesday? He's not going to come out dovish. How is he possibly going to come out dovish on Wednesday after everything the Fed speakers are saying, the data, and then he pivoted last week? So he's probably going to, the market's probably got to brace itself for a hawkish Jerome Powell on Wednesday. There's one. Then you got to deal with the payroll number that's looking pretty lofty again. And the wages number is looking pretty firm again. So remember, for our viewers, it's pretty simple, right? When we're talking about inflation, you want 0.2s and 0.3s, nothing above 0.3. 0.3 is like that middle ground right now on any month-over-month numbers. If you get up a 0.4 or anything above, that's no good.
Right.
That's the wrong direction, because do it times 12, right? 0.3s are about the equidistant. 0.2s, good. 0.4 is bad.
Yeah.
That's the way the kind of initial reaction look at any of these inflation numbers.
Yeah. I mean, you said that that he possibly should be hawkish at this point, just due to the data that we've gotten. He talked about seasonality issues. That's obviously out the window, because that 3 straight months of hotter than expected inflation. But Kev, when you look at that, nobody's expecting the Fed to cut a quarter of a basis point. It's all going to be based on his commentary. What's your take here on what Fed Chair Powell may say?
I'm right there with Kev. He's going to try to be hawkish. We know what happens with Jerome Powell after a couple of questions from the press corps. He tends to lean then dovish.
Yeah, he drifts.
He drifts, and that's when we start seeing these bids and equities, and people start to interpret his words completely different than what he actually does mean. And here's going to be one of the areas where we might actually see that type of reaction. If he does get a question around the GDP print last week, which was not a good print, it was sitting at 1.6%, a lot lower than the street's expectations. And then when you also have the PCE number for GDP also coming in high at 3%, that's not really a surprise for the broader market, I don't think. But if somebody does ask him about that, are we seeing economic slowing? And what he's going to have to tell them is, look, that's incomplete data, and we're going to see 2 more revisions. And because of the data points that we got on Friday with consumer spending, they're going to have to readjust that GDP print, and it most likely is going to be to the upside. So much so that the Atlanta Fed has Q2 GDP right now sitting at 4% for their estimate right now because of that print on Friday. And I think if he says that and explains just the mechanics and how that number is being printed, the market might say, oh, okay, like he's getting dovish again. We're good to go. And I think that might be something that causes a little bit of a curveball here during the presser.
Yeah, the market always tries to take what he says and twist it around to some optimism for the equity markets. At least 3 or 4 out of the 3 out of 4 experiences of him talking.
His history. Take Jackson Hole out when he gave his 8-minute tongue lashing to the markets. Besides that, he's been a really good delivery mechanism of data that the market has generally liked, right? Because, like Kevin said, even when he comes out harsh or more hawkish, he drifts back into neutral or dovish. Yeah. He does do that. So here's my question. Let's say I'm in the room. Somehow I sneak into the room. I get a fake ID. I used to have one. I sneak into the room with the Fed, right? I ask Jerome Powell, how in the world in an election year is any of this spending going to go down and you're going to be able to justify a rate cut?
Right. Yeah, exactly.
Into the election with all the money that's going to be spent.
And I think the answer would be he has to start seeing cracks in the data, and jobs should be number one, Kevin. And we got a lot of jobs data this week. Yeah. ADP, JOLT, non-farm payrolls on Friday, expecting about 230,000 job ads. We've beaten any estimate over the last 3 months as far as jobs data goes. So until he sees a crack there, he's probably not going to cut, Kev, at this point, right?
I don't know, Tom. I have this sneaking suspicion that we actually might still see a cut. And if we are seeing cracks in the labor market, I think those cuts would actually be accelerated fairly quickly. The market does not want to actually see the jobs market and the labor market actually cracking right now, especially with the inflationary prints that we are seeing, because then the fear of stagflation is all you really need to create a lot of volatility in this market. Now, maybe that's going to synthetically tighten up financial conditions and does a little bit of the work for him, but I'm not sure if that's going to be the number one base case right now. You do not want to see the job market crack. You want to see it at a pretty healthy level. Now, can it go up to 4% for the unemployment rate? Sure, but on a historic basis, that's still actually relatively low. I just don't think that he wants to see those cracks, because once you start having that question and you still have the inflationary prints going to the upside, what do you do then? How do you answer to the market? You want to handle inflation, which is already hot, or do you want to handle the job situation, which is starting to see some cracks in there? That's a lose-lose situation. I think the Fed will capitulate to the inflationary prints and try to save the job market overall. I think that's going to be the structure right now.
Yeah, the jobs market, if it does crack, is that a trend, a new trend that starts where they really have to accelerate rate cuts at this point, because savings rates going down, consumers still red hot spending at this point. That'll end relatively quickly if we start seeing cracks in the jobs market. Kev, I wanted to get your take here on not only the data that's coming out. Earnings season's been really good so far. FactSet says about 80% beat rate so far. So we've quelled some of that anxiety here about earnings, and maybe we should be rallying, even though in April all four of the major indices are in the red.
But here's the thing. We're coming out of large cap tech about another week, and then it gets very sporadic. And this is a big week. Right. Amazon and Apple, they have to deliver, because you can make the case that large cap tech has been pretty mixed so far. Netflix, Meta, a couple big misses. And
I don't even think they were misses.
No.
It's just that the bar was so high.
Yes, I agree with that.
Little bit of a relief.
I agree with that. But the bar's going to be high in Amazon Amazon. I don't know about Apple, but if Apple keeps rallying into the print, then the bar's going to get higher.
Right.
But this is still going to be a fun week. And with VIX sitting below 15 now. Right. Protection is not as expensive as it used to be. But remember, one last thing. Remember where you are on the calendar. Coming up to May 1st. End of spring, going into summer. Careful on volatility.
Yeah, we haven't had a sell in May go away in a while. Yep. It used to be the mantra. Kev, real quick here. I mean, we've got an upgrade on Apple ahead of earnings. He's buying it. Bernstein basically came out of the note and said, hey, you know what? I like Warren Buffett's type of investing when everybody's kind of downbeat on it. That maybe you should start scooping it. Your thoughts here?
Yeah, I think there is, especially what happened with Tesla last week. I think there's a lot of optimism that they can actually, exceed the street's expectations. It may not be as bad. The commentary could be a little bit better than what the street expects as well. And let's see if that's going to be the case. I think also a bright spot here today that's not really connected to this news is the Tesla news and their work with China and trying to roll out FSD. That shows a little bit of softening relations, and maybe that's going to be something that can translate over to Apple and some of its operations inside of China as well. That could provide a little bit of optimism. So, I think that's probably why we are seeing a lot of these bids going into these companies right now, even though the geopolitical landscape and the fundamental landscape still looks a little bit bleak in the near term.
All right, let's take a quick break here, guys. Tesla up 16% today and blowing the doors off of everything else in the market. All right, take a quick break. We come back, we're going to take a look at PayPal. Stocks rallied a modest 8% this year and reports earnings tomorrow morning. Expectations extremely low in PayPal. Fast Market will be right back.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
Welcome back to Fast Market here on the Schwab Network. We're getting into the thick of earnings season here. We're talking PayPal today in the fintech space. Let's bring in Caroline Woods, senior markets correspondent here on the network. Caroline, you look at these fintech names like Block and PayPal, they've severely underperformed, maybe the swipers and Visa and MasterCard. What are you seeing here ahead of earnings? Because it seems like expectations pretty low going into this report.
Hey there, Tom. Yes, pretty low, but according to the big banks that we've seen report and Visa reporting better than expected results, also Fiserv, consumers continue to spend, and I think that should bode well for a company like PayPal. So I think expectations are growing that PayPal can at least meet or beat expectations based on some of the commentary that I've been hearing. PayPal shares are up about 9% year to date, but they're a long way off those COVID 2021 highs of over $300 a share, trading at $67.09. So this one's been underperforming in that sense for quite some time. We know that PayPal is in the midst of a turnaround. They brought in a new CEO late last year around September, so still kind of early days in terms of progress there, but they have been in cost-cutting mode. They've been slashing jobs. They've been leveraging AI to increase efficiency and to enhance their offerings and operations. So it'll be interesting to see how this all shapes up for them. When PayPal last reported, they reported a 2% drop in active accounts and a disappointing 2024 outlook, and shares got absolutely punished. And that was despite a beat on both the top and bottom line, and despite the fact that although active accounts decreased, monthly active users actually increased, but Wall Street totally overlooked that. So we'll look to see if active accounts continue to grow or actually return to growth, and if those monthly active users continue to grow. That will be very important. And we'll also focus on payment volume for this one, because even though they actually lost active users last year, payment volume was increasing. So less users, but they were, spending more in terms of value and actually in terms of how many transactions they were making. So I think that will be important as well. In terms of the actual numbers that we're looking for, EPS of $1.22, that's about 4% growth year over year, so some modest growth there. Revenue is also expected to grow about 7%. The number on revenue is $7.52 billion that we're looking for. So PayPal shares today up about 1.7% heading into this report. PayPal reports tomorrow morning.
Caroline, you mentioned I thought that was really interesting. I read the same thing that you did about losing users, but better payment volumes. I'm trying to figure out what that means, because the street, they love to look at the users, right? Because they think that easily correlates into bigger numbers. But they had an innovation day, they called it, where they unveiled a bunch of new initiatives, and the reviews were kind of mixed. But a lot of people giving this new CEO, Alex Chriss, kind of a, he's trying a lot of things, throwing a lot of things at the wall to see if anything works. You mentioned the 3-year sell-off in this stock is epic. It's catastrophic. But what can they do? Is there anything in their pipeline to turn this around? Because some things are getting better, but you would think the environment, the cashless environment that we're in, you would think this company would be flourishing.
Well, Kev, fewer users but higher volumes means that people are actually, the people that are using their services are using it more, and they're using it to spend more money. So I think that PayPal would certainly like more users and higher volumes, so that will hopefully be the case when they report. In terms of comparing it to the COVID highs, not a single analyst on Wall Street is bullish enough to think that they will get back to those highs. I think that we have been seeing some price target hikes leading into this report over the past couple of weeks, but I do think it's important to note that despite some of those price target hikes, if you take a look at the median price target for PayPal heading into this report, it's $70, and PayPal is currently trading at $67. So only $3 upside from here, according to the majority. Well, they're kind of split in terms of it has the most hold ratings on the street, but if you take a look, not a single sell rating, so no one's all out bearish. There are 20 buy ratings and 27 hold ratings, so there are more holds than buys. But you'd assume that if there still are 20 buys, they're going to be looking for more than $3 upside from here. So let's see if we see any adjustments after PayPal reports. But I think that, as Tom said, the bar might be low enough, given the fact that PayPal's only seen, 9% year to date is not nothing, but it has had this fall from grace. So let's see where the bar is when it actually reports.
All right, great stuff. Thanks to Caroline Woods, senior markets correspondent here, breaking that down. But now let's bring back in Kevin Green. Kevin, when you look at this one, you talk about competition. You've got Block on one side. You've got Visa, MasterCard in that space also. But I'm thinking people are overlooking the fact that, hey, I can use Apple Pay on my phone. I don't need to use PayPal to pay for anything. I can use Zelle, which a lot of banks are in that network now, where I don't need to pay any bills or do anything using PayPal. So the slowdown in the fall in the user base, it's not surprising at this point, is it? Because the competitive pressures are all over.
Yeah, definitely. I mean, the competition is definitely in this space. And also when you're looking at their business model, they don't have any type of really big footprint when it comes to real estate or any type of like branches and things of that nature. So even though they are probably seeing a little bit higher costs when it comes to their margins and what they have to pay for those that have, deposits or those that are trying to transact with money and things of that nature, they don't actually have the overhead like we were seeing with the regionals there, Tom. But here's the thing that I would kind of focus on. I know Caroline just kind of talked about the optimism when it comes to the street. Just looking at other earnings announcements throughout this quarter and trying to just see a little bit of a trend. So we had Visa that had a really good report. They did pop and then they faded the news and actually are trading lower since their report, even though their transaction volumes were really healthy. You have SoFi this morning, had a really decent report. Now it's sold off around 10% in the market, kind of a fintech name here. And you have all the regionals that are out there, once again, reporting decent earnings, but they failed when it came to their guidance. So is the guidance going to be the hurdle here moving forward, especially when you're looking at the chart where there's around a $70 resistance level? And that's kind of the biggest thing that I'm kind of focusing on right now. So I know there's a lot of optimism, but I think the headwinds and how the market has been reacting to a lot of these earnings announcements are going to be something that's going to be a little bit of a challenge when it comes to PayPal here.
Yeah, and the difference may be that the bar was high for a lot of those names, especially like Visa, Fiserv, in that space. Also, we've got MasterCard that reports later this week. Bars high there, bars low, I think, in PayPal. Yeah. Kev, go.
Here's the good news on PayPal. Since the October lows, it's rallied significantly. The bad news is, so has every other stock in the stock market. Right? So, I mean, if you didn't rally during this, that's a pretty big problem. So, yeah, they're up, but so is every stock.
Yep, for sure. Kev, you got an example trade for us. The option market's pricing in about a plus or minus $5.50 move in the shares. How do you want to look at this one?
Yeah, definitely. So the example trade is actually looking at a bear put spread. Once again, kind of going back to the fundamental thesis that's been out there as far as the earnings announcements, as well as the technical thesis of resistance at around $70 here. So somebody might actually look at putting on this bear put spread, buying the $65 put, selling the $60 put, doing this for May 3rd, so the end of this week. There's a earnings type of trade here, and doing this for a debit of $1.50. Max loss would be the debit paid, $150. The max gain could be up to $350 if the stock does stay below that $60 strike by the time of expiration here, and the break even is at $63.50. once again, kind of a risk-reward ratio of around 2.5% to 2.5 to 1. And I know the IV was a little bit high here, but it was very difficult to try to find the right skew that would make it worth your while if you're trying to sell premium, knowing that there is some upside risk to this name. So that's really the trade in a nutshell there.
All right, we're going to break this one down. You're buying the put spread here, Kev, where you're buying the May 3rd, 4 days to expiration, buying the 65 put, selling the 60 put, $5 wide bearish, put vertical, paying $1.50. There's your risk, $150 per spread. Kevin, this has got a pretty good risk reward, but
because it's out of the money.
It's out of the money. Right. Go ahead and break it down, because a break even 63.50, you need it to go below.
Let's list the trade-offs. When you do a spread like this, if you're right, and remember, there's a $5.50 move on the downside. If you're right, you're going to get a multiple winner in terms of paying about $1.50. If it goes to $4.50 or $5, that's a triple right there. That's the good news. The bad news is this is a $2 out of the money. So in terms of probabilities, it's tough, right? But that's the trade-off in options. The person selling this, is going to sell it for $1.40, $1.50, and have the risk, but it's going to be a more high probability trade. Right. So this is one where this got to fit your opinion, and you got to understand if nothing happens, you lose. If it's down $1, you lose. If it's down $2, you lose. So you need a big win, a big move. You need it on the downside.
Yep. And Kev, you got 4 days to expiration, so it's an earnings type play example that we're looking at here. But to Kevin's point, this is all about probabilities and that trade-off between that and risk reward, right?
Yeah, definitely, and that's what the structure is there for, and I understand exactly what Kev is talking about. And when you're looking at the call side and try to do maybe a credit spread there just wasn't enough skew to be able to give a good risk-reward ratio as well. So it's kind of balanced out. I'm definitely looking for a move to the downside here, and once again, kind of looking at the previous reports and then also seeing their peers in this space. There could be a move, maybe there is not a move, but it is a limited risk strategy nonetheless with it, which is a key thing that we always harp, no matter what type of trade strategy we're looking at here on the network.
Yeah, bearish put vertical here, May 3rd weekly, buying the 65 put, selling the 60 put for $1.50 debit. All right, great stuff. Thanks to Kevin Green, senior markets correspondent here, joining us, breaking down markets and PayPal. But coming up after the break, Kevin and I are going to be joined by Andy Swan from Folio for discussion on McDonald's and the sentiment data on the stock moves. Fast food giant has seen its stock fall about 7% so far this year. They report earnings ahead of the open tomorrow. Stick around. Fast Markets coming right back.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Andy Swan. He's co-founder at Likefolio. Welcome back to the show, Andy.
Thank you. Happy Monday.
Happy Monday to you. So we're talking earnings really ramps up this week. We had a bunch of different names to kind of talk about. I wanted to hit on McDonald's with you just due to the fact that we've seen that pullback of nearly 10% from those all-time highs in January. Are you guys seeing deteriorating data for McDonald's that kind of supports this slide?
Yeah, I would call it more deteriorating data of the consumer and just overall, exhaustion with price increases. The other day I was watching TV and saw an ad for Chili's, and they were comparing the cost of one of their meals at a sit-down restaurant to the cost of a McDonald's value meal, not directly, but to fast food value meals. And I thought, man, we are entering just a completely different world here, where every other tweet you see seems to be somebody posting how much their fast food meal cost and how out of control that's gotten. I think, McDonald's has had to react in a really interesting way because they were trying to put out, an exceptionally high quality fast food burger, kind of compete with the Five Guys of the world in some ways, put a premium price on that. Well, it turned out to be really the wrong time to do that as prices started to explode. So now they've had to rewind a little bit and go back to, value meal pricing, trying to get people in the door with that and try to keep that ticket cost as high as they can. But there's certainly compression there. So when we look at Likefolio data, it's really very flat, a little bit of a deceleration in terms of growth of mentions. The one thing that I will say that McDonald's has going for it that I think gets them through these types of periods and why I think investors would be wise to look at pullbacks in the stock as opportunities is that McDonald's customers are very loyal. Consumer happiness levels at McDonald's, despite all of the hate that the company gets, the consumer happiness levels at McDonald's are driven by the consistency of the experience. And, it's only Chipotle and Taco Bell that outpace McDonald's in terms of consumer happiness, which is a real achievement, for a company that gets as much hate as they do and sells burgers and fries rather than burrito bowls and tacos. So I think McDonald's is an exceptional executor. I think they know their customer really well. They're pivoting to a new reality in terms of input prices and how they have to handle that with their customer. But this feels like one of those moments where McDonald's stock is getting beaten up a little bit for what are very good reasons in the short term, but is creating a significant opportunity long term for investors that want to bet on a proven winner.
Andy, if everyone that said they never went to McDonald's actually never went to McDonald's, the company would be a fraction of itself right now. Because everyone does, and everyone young parent that gets a Happy Meal goes, yeah, throw a quarter pounder on there for me too while I'm here because it's so easy. But tell me this, their business model, which is different from Chipotle, right? Chipotle's they owns all their restaurants. I mean, McDonald's owns 57% of the land, 80% of the buildings. 65% of their sales are beef, chicken, and coffee. That covers a big section. And because of their business model, I'm getting to my point. Aren't they more predictable and stable in their earnings than some of these other companies? Because, like the movie said, they do have a different business model.
Yeah, they do, and it's an exceptional machine. This is a company that basically invented the business model that they have. They've, basically perfected it. They've taken it global. They continue to expand by adding new stores. And like you said, people can talk bad about McDonald's. They can say that they avoid McDonald's, and I get that. But at the same time, the numbers don't lie. When you are in need of a known entity and a known quantity and you want it fast, that's the place you go. The other thing that McDonald's has going for it that a lot of these other competitors simply don't have, you've got Wendy's out there, they have to advertise, if you get our app, we'll give you a burger for $1. They're having to run some crazy specials to get people to do that, whereas in our universe and what we cover, McDonald's and Chick-fil-A are the two fast food companies with drive-throughs that people rely on the app and the loyalty programs in a big way. And so I think McDonald's has a built-in advantage over every other competitor other than Chick-fil-A in terms of consumer loyalty via that app program that they have. They do a phenomenal job of marrying technology, convenience, and food quality for fast food is at least consistent and on the positive side of neutral.
Andy, your mentions on volume compare the past 30 days. McDonald's about 44% of that pie at this point. And I saw some of the happiness numbers. Not surprising to see, Chipotle winning on that space. But, as far as foot traffic goes, I think that's going to be the key for McDonald's moving forward is the weakness that they've seen is some companies were starting to say that foot traffic was starting to lighten up over the first quarter. Do you guys see any of that data that might equate to this? Because Chipotle had a really nice quarter. Their same-store sales grew 7%.
Yeah, I think that there's probably more concern for foot traffic on a global scale. In the U.S. and among English speakers, we actually see that kind of negative trends starting to reverse and maybe flatten out. I think McDonald's has done a good job of coming back to the market with some more affordable options that they can showcase and get people in the door. I think that one of the keys we're going to watch for on this report, because it will impact the entire sector, is the average ticket size and how much that customer is feeling the pain, because I think it is starting to get substantial. We're starting to see that across some industries, but especially in food prices and the cost of eating out, whether it's McDonald's or a fancier sit-down restaurant. Customers are really feeling the pinch.
Yeah, definitely. You got an earnings score for this one going into the report tomorrow morning.
Yeah, unfortunately, we're completely neutral on this earnings, but I would say, long term, this is a company that you probably want to have in your portfolio. So if we get anything on earnings that gives you an opportunity to scoop up shares well off of highs, I think you take advantage of that.
All right, great stuff as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder at Likefolio. All right, Kev. Pretty surprising into an earnings report, even after Chipotle, that McDonald's is down on the year and from those all-time highs.
It's easy to do the math.
Yeah,
they're 10% off their highs.
Yeah, 302.
Now, yeah, 300 to 270. That's easy to figure out.
Right.
But I think this stock is just less volatile than other restaurant names because of the franchisee business model. It's more smooth, it's more predictable, and when they get these little sell-offs, this company does a nice job of being lean and adjusting the menu and doing all these things. And so the size of this company, how about this stat? 150,000 McDonald's employees, but 2 million people work at the restaurants. Think about that.
2
Massive.
million, yeah.
So they are incredible in terms of the scale and the expertise that they do. I had a big breakfast yesterday for breakfast. Loved it. Awesome. Loved it.
I haven't been in probably 10 years, but
just do the breakfast.
Yeah.
That's the key.
Yeah.
The breakfast, the eggs are great.
Yeah, in the city, I've got too many other things if I'm going to get a burger.
But anyway, looking towards this, you're right. I mean, the stock is $30 off its high.
Right.
So the paper money trade I looked at, going the 1 week. By the way, I'll explain why I didn't do more in a minute. I went in and bought the May 10th, sold the May 3rd, 280 call calendar for 60 cents. Now, the obvious thing that we talk a lot about in the show is why didn't you sell the put vertical against it and make it for, because the $5 put vertical is trading about 55 cents.
Yeah.
For $5. To get it up to 90 cents, you had to go $10 wide. Just very low premium.
And that would put more risk on to the downside.
Not getting paid for the risk. So this is a relatively inexpensive trade. Why? Because the difference in the implied volatility, 34 to 25, that's pretty significant in terms of percentages. And so this is a nice way to play a small recovery back in right at the expected move in McDonald's.
Yeah, I was just going to mention that the anticipated market maker move plus or minus $6.70 either way. That's 280 strike to the upside sets up with that. Buying the May 10th weekly 280 strike call, selling that same call on the May 3rd options that expire in just 3 days. Paying roughly about a 60-cent debit. There's your risk. $60 per spread on this one. Break evens on this one, Kev, go all the way down to 272 and about 288. Give or take $1 or $2 either way. So you've still got a nice wide range while you're still looking at that 280 level. So even if the stock stays right here, you can potentially profit on this type of trade. But this is just short-term basing off of those dispersion and implied volatility levels,
and
right?
Don't forget Chipotle's earnings.
Chipotle spiked on earnings
Yes.
After a good report, beating estimates, lowered estimates as far as foot traffic goes. So that's a good point to make going into this earnings report. You got some assignment risk on those short options that expire in 4 days also, so keep that in mind. But a good look at a neutral to bullish call calendar here in McDonald's. All right, let's take a quick break. We come back, we're going to take a look at 3M. The industrial and consumer stock is flat so far this year into their earnings tomorrow morning. This one, low bar on this one also. Fast Market's coming right back after this short break.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Welcome back to Fast Market here on the Schwab Network. Before we took a look at 3M ahead of earnings, let's bring in Ben Lichtenstein, Senior Futures Contributor here on the network. Ben, you got stocks, holding firm in the green at this point off the session highs, but pretty good session following up a good week for stocks.
Yeah, nothing compared to what we saw Friday into the end of last week, that's for sure. But holding on to those gains. I saw the SPX up to 51.23 this morning. The Dow got up to just shy of 38,400, and the NASDAQ above 17,800. It's dipping back below that level right now, but still up by 1/3%. And I just looked, Tom, you've got the Russell, which just made a new high right now. The small caps are trading up to 2020 here. So, again, big move up last week in the S&Ps and the NASDAQ, their biggest week since November of last year. This comes as earnings really helped and helped investors focus on quarterly results and not so much on those rate cut expectations, which had been pushed back, and that's why we saw the selling come into play off the all-time highs. I think also just watching rates kind of hold below 5% in the 2-year, that's a good thing for stocks here today. The dollar backing off some as well, but a lot of focus on earnings this week as well as eco data. You've got the Fed, you got the jobs report on Friday. So, yeah, definitely lots to stay on top of as you're looking at the indices this week and some of the potential catalysts, that's for sure.
Yeah, we got yields down today, Ben, but the dollar, the impact of that yen crazy move that we saw overnight, having a little bit more of an effect as the dollar's fallen here.
Yeah, nothing official yet from the BOJ, and it could be a while if we ever do get something from them. They tend to be very vague about these type of events here. But basically, I did see the Wall Street Journal quoting the finance ministry's top currency official, Japan's finance ministry top currency official, basically saying that they're not going to just stand by and watch these violent moves take place in the currency. They talked about how the impact they could cause for the nation's economy and they're going to respond to them. So ultimately, we did see the yen spike down to 34-year low, 160 against the U.S. dollar, and then right back to 155, 156 here. So, but this has been a long-term trend to the downside here, Tom. I'm not sure if this is necessarily going to put an end to that or stop on a dime type reaction. But yeah, lots to watch here in a week that's full of not only potential catalysts for stocks and stock index futures products, but also, again, for financial markets as well.
Yeah, crude oil down 1% now also. All right, great stuff. Thanks to Ben Lichtenstein. He's a senior futures contributor here breaking down markets for us. But now let's bring in George Tillis, senior markets correspondent here. George, talking 3M into earnings. This one's been, a choppy trade. They've had lawsuits against them, judgments against them. Spun off, part of their business at the beginning of April. What's your take here on 3M ahead of earnings?
Well, I mean, obviously, if you look at the stock, at least in the last 52 weeks, it's down about 11%. And it's starting to look a little constructive here because, there's been so many challenges for 3M. Obviously, what's going on with the company is it may be having its General Electric moment where they're starting to spin off divisions. They spun off and they finalized the spinoff at the end of Q1 or calendar Q1, beginning of April 1st. They'll be reporting the spinoff of Solventum, which is basically their healthcare division, but they still have, of course, their core divisions, which include safety and industrial, transportation, electronics, as well as their consumer business altogether. And I think, if you look at the sales growth for 3M, I mean, the quarter they're about to report, which will be inclusive, by the way, of the healthcare unit, going forward, they'll not include it. Their revenue is expected to be down about 0.5% to $7.66 billion, but their earnings are expected to be higher at $2.11 a share compared to $1.97 last year. So that's higher by 7%. I think, looking at the business, the other element behind the safety and industrial litigation they're facing is with their noise reduction ear technologies, including their traditional earplugs, but also their headphone earplugs, which have demonstrated some challenges, and they've been sued, which includes the Department of Veteran Affairs and other industrial litigation going against it. So that, estimated is to be about $6.5 to $7 billion. It looks to me, at the very least, if you look at their net income in the last 4 quarters, that it was down $7 billion. So they may have already taken the charge to that litigation early, getting ahead of it. So, looking at the stock overall, based on the spinoff, which again, by the way, 3M is still going to own close to 20% of that company, which they're going to divest slowly over the next 5 years or so. There may be a solid turnaround here based upon that litigation already being priced in, having taken the charges. Outside of any other exogenous factors, it may be a turnaround story.
George, it appears, now that this company, Solventum, which, by the way, is problem solving and momentum combined.
Okay.
Yeah. It seems like a lot of work, but hey, that stock is down about $8 since it spun off, and 3M has rallied. So is this kind of a green flag for 3M? Did they get rid of a troublesome part of their company that allows them to flourish? Is that what it looks like? That's what we're kind of witnessing here, George.
Yeah, so yeah, it's actually a great point to bring up. I think this is the case for many of these, divisional divestitures. When you have certain divisions, and maybe the healthcare division, wasn't as profitable as their other core divisions. The unprofitable division, or the less profitable division, let's put it that way, can encumber the multiple of the total company. So it appears to me, just based on your view in the analysis, is that the spinoff itself was more of a boom for 3M, because maybe the healthcare division was a little bit more troublesome. There may be also a component of debt that was spun off with it. So this may reorient the earnings multiple, and I think it's an important quarter because they're going to provide guidance absent the Solventum business, and I think that's going to be important going forward. And lastly, I'll say this: I mean, it's starting to look constructive from a technical standpoint. I like to put narratives and stories behind fundamentals, and of course some technicals to add. But it is trading as a stock above its 100-week moving average. The next level might be its 200-week moving average, which puts the stock around $108. So I'm just pointing that out. I'm not saying it's going to go there, but this is going to be a critical component quarter for investors who may still be on the sidelines. They may want to jump in based upon the guidance the company provides.
On the 9th of March, they actually came out at the J.P. Morgan Industrials Conference, and they upped their guidance a little bit, but just tightened it up to the upside of their previous guidance, George.
Yeah.
Is that the key for a stock like this that's, basically flat on the year, that, hey, we're not deteriorating anymore, at least we're, probably hitting bottom?
That's the thing. That's the key. If they can actually inch their guidance slightly higher, or at least reaffirm it, they may not inch it higher because they recently reaffirmed their guidance, back in early March, and they may have more visibility about the spinoff, and they also might have a little bit more visibility on, consolidating operations, maybe cutting back some expenses and shoring up sales, and maybe also, to be added to this, they have $6 billion in cash, so they could. I'm not saying they will, but they could, initiate some additional buyback. That's again another way to pacify those sideline investors. So just keep that in mind.
All right, great stuff. Great breakdown and backdrop for us. That's George Tillis, Senior Markets Correspondent here, giving us the backdrop on 3M. Kev, option market pricing in only a plus or minus $4.20 move. So pretty low expectations going into this report. Your thoughts?
The lawsuits that are well publicized, it appears what I've read, they're mostly behind them. Mm-hmm. So that could be good news. Maybe the kind of the theme we were going with, Solventum does have big debt. George was accurate on that. So maybe there is a little breakout coming here. And by the way, not that this is something we should talk about, but it's got a 6.5% dividend yield.
Yeah. Well, that kind of sets.
If they pay it.
Yeah, that kind of sets up into my example trade here, Kev. If that dividend continues to get paid, 6.5% dividend yield on this one. I noticed on the chart, Kevin, that the $65 level has not been breached, or confirmed over the last 10 months or so. So that seems to be a line in the sand as far as the stock that hasn't been above that level for nearly 10 months. So let's look at a strategy that takes advantage of yield. If you think that they're going to keep their dividend in place, it's neutral to bullish in stance. I looked at a covered call strategy. For every 100 shares of stock you buy, you sell a call against it, an upside out of the money call. I looked at selling the May 17th monthlies that expire in 18 days, the 97 strike call against that long stock, paying roughly about a $91 debit for it. So in essence, with the stock trading 92.05, you're buying the shares at a discount because you sold that upside call at the 97 strike, which is actually above where the one standard deviation move is to the upside, Kevin, on this one. So you're buying the shares at a discount. You collect yield there, but then the dividend also gives you yield if it gets paid out.
Yeah, your short call is about 5.5% above where the stock's trading right now. So you've got plenty of room where if it rallied up and got called away, wouldn't be the worst thing in the world. And oh, by the way, as long as that, we always have to disclaim about the dividends because they're not guaranteed. Mm-hmm. But as long as they keep paying it, 6.5% dividend. That's a big matzo ball out there.
Yep. And as you get closer to expiration over the next 18 days, you have that ability to roll or adjust that short call. So the thing that a lot of people look at, Kevin, in cover calls is, I don't want to get my stock taken away. I want to keep my shares so I can potentially collect that dividend. But at the same time, there's ways that you can manage this
kind
trade.
Kind of a naive way to look at it.
Right.
Because extending duration is part of understanding options. It's when you become a beginner options trader to an intermediate big options trader, you understand that you don't really get called away unless you really, don't pay attention.
Right. And if the stock goes above that 97 level, you're going to make enough money on your stock. So your profits are capped because you sell that upside call, but at the same time, you can adjust or roll that short option as you get closer to expiration in the next 2.5 weeks if the market's open and liquidity is provided. Kev, real quick here, thoughts going into the end of the day as we firm up?
Let's see if the market gets jittery or holds these gains. Like I said, big week of data, big week of earnings on the horizon.
Yep, expect some more movement, I think, in equities and other assets classes. All right, that's going to do it for Kevin and I today here on Fast Market. But make sure you download the Schwab Network app, available in the Apple App Store, and tune in 24/7 on schwabnetwork.com. Stick around, Next Gen Investing is coming up.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Jenny Horn, and today joining me is Ben Lichtenstein, who's filling in for Alex Coffey. Well, he's on some well-needed time off all week long. So we have some strength in the markets today, and we've been pretty much trying to hang on to a nice session here to kick off the week, Ben. But as we know, we have, as Kevin Hinks put it, it is like taking a bite out of an elephant. I've never forgotten that. He said that this morning, I think, because there's so much to get through. You have like economic data. You have, hey, I'm not necessarily saying that was the first thing that came to mind, but now I can't stop thinking it. And we have earnings.
Yeah, we'll leave it to Kevin to toss out the old saying that kind of confuses you yet provides clarity at the same time, I guess. For me, I sort of started thinking it'd be tough to get through the skin of the elephant first and foremost.
You went too literally, I think.
I was trying to understand where we were going with this one. But yeah, the market's higher today, continuation of the bid we saw into the end of last week. The S&Ps and the NASDAQ had their best week since November of last year. I mean, it really speaks to the strength that we saw in Microsoft, Google's Alphabet, some of the names that really pulled it off towards the end of the week.
No kidding. And thank goodness, I guess, for Microsoft and Alphabet, which earnings then sort of saved the overall market to kick off or to end last week, which was a volatile week to say the least. But as always on this show, we'll focus on the individual movers. We'll kick things off with upvote and downvote. We'll chart and trade our upvoted names. And today, FOMO is, of course, Tesla, pacing for its best day since January of 2022. And all of a sudden, Tesla chart looking a little bit more compelling. So we'll get more into that name as well as everything that is obviously bringing shares all this optimism today. We'll also be looking at SoFi post earnings. They were released this morning. Shares are down over 9%, but PayPal's tomorrow morning, and we get Block. Wanted to say Square so bad, but that's later this week. And then we'll end the show here with under 30. We'll be looking at AT&T up about 2% after an analyst got more optimistic following its earnings last week. So, Ben, as always, with the upvote and downvote segment, these are not recommendations, rather a very nice earnings theme across the board for our first bunch of stocks on the show today. But first name today is one that we already discussed, but it's hanging on to a pretty nice day today. That's Domino's Pizza.
Yeah, Domino's definitely delivering some pretty good results, to say the least here, just like the crust, right? This quarterly report was loaded, to say the least here. The news sent the stock pre-market to 540, yet to get above that level. That was pre-market, again, before the open. So revisit that on the open, but again, unable to take that out. I think that's important. We're looking for some follow-through here at this point, not just a big spike up, but the chart and today's move, I feel like a reflection of our everyday lives, Jenny, and how Domino's has benefited from a strong economy with tight labor conditions, how we continue to make choices with our discretionary spending dollars, and we're choosing convenience, right? I most recently was on vacation and, traveling out at the beach, and I was kind of wondering what I was going to do for dinner. I'd gone out to eat the night before, saw a Domino's car with the, easily identifiable logo on top of the car drive by, and I thought to myself, okay, it's not going to be necessarily my pizza of choice coming from Chicago. I like Lou's, little Malinati's, or maybe Giordano's, or something a little bit more along the lines of a deep dish type variation, but definitely I thought, hey, this is going to be something that I know exactly how it's going to taste, what it's going to come, it'll get here fast, on time, and have to be honest, I think the last time I had a bite of a Domino's pizza was about 25 years ago, and my kids at like their Calvin's 5-year birthday party or something. But I got to be careful. I got to tread lightly here because I know if you upset Jenny, she feels very strongly about Domino's. So
I do. They revamped their menu in the last 25 years.
Yeah.
My goodness. It's a whole different menu.
A lot of add-ons, that's for sure. I don't get into the add-ons so much. I'm just a straight pizza guy.
No, okay, me too, and I can respect that. Although I have to think, while you were talking, I was thinking about the seasonality of this name because I haven't been ordering, but I have to imagine that this past quarter spanning over the end of the NFL season, you have a ton of sports on right now. I have to imagine that's to me like my idea of a good night is watching some good game with a good old Domino's pizza. But obviously, nice move up to the upside today, up now about 5.7%, adding to its nice almost 30% run this year. Next name today, very closely related. And actually, now that we're confessing, I did have McDonald's like 3 days ago on Friday. So our next name is McDonald's, which has earnings out tomorrow morning. But this is a restaurant chain that has 40,000 locations. And everyone knows how gigantic McDonald's is. But when you put it like that, it's just truly remarkable. Now, what has been a major headwind as we go into this print is the weakening of major currencies against the U.S. dollar. Obviously, this company is fairly exposed to some of the geopolitical and international headwinds we've seen. But We also are expecting continued growth from its overall initiatives. It's been really pushing out its drive-through delivery services, and it's expecting that its overall net restaurant expansion will contribute to about 2% of its system-wide sales this year. Over the long term, they're targeting around 50,000 locations by 2027, so they're only planning to get bigger.
Yeah, blanketing the country with McDonald's locations, that's for sure. A stock that hasn't done as well as Domino's. And for me, I can understand why. Jenny just said she was at McDonald's 3 days ago. I think Friday, she said, I've been at McDonald's 3 times since Friday. So just to give you an idea, this is my kind of wheelhouse. So I've had real consistency issues recently. I just mentioned, again, Domino's. I was like, okay, I see the cargo by. I know what's going to come in the box. There's something very predictable. McDonald's has been a lot of ups and downs in terms of what you get and some of the variations thereof. But today, just kind of grinding lower off the highs that we saw on Friday. They were trading up around 276. Started out the month of April around 282, traded down to 265. So kind of hanging out in the middle of that range right now. Not a lot of conviction over the last year or over the last month for the most part. Last year, the range I saw was around 300 to 245. I've gotten below the 50-day moving average, below the 200-day moving average since March, and down almost 8% year to date. So a stock, again, that's not performing as well and not delivering to the same extent that Domino's has.
And McDonald's has gotten expensive. I always feel like every time I go, I'm humbled by,
more and more.
Which granted, maybe I'm getting more food every time, but every time it feels like it's not the cheap alternative it used to be.
Yeah.
But hey, maybe I need to scale back my overall eating at McDonald's. But next name today, we're shifting gears here. We're looking at Paramount, which had lots of news today, but also earnings out tomorrow morning, today after the closing bell. So we have Skydance Media raising its buyout offer by $3 billion in cash for Paramount to pay down their debt, buy back stock, as well as fund other initiatives. According to some reports we got just about an hour ago, Paramount also did announce plans to replace its CEO, Bob Bakesh, with a cohort of existing division heads on earlier today. The decision does come as they're closing on this merger agreement with Skydance Media. But the large concern is what does this continued sort of navigation look like without Bakesh, who has been one to really speak out against how this deal is going to better Paramount and not just benefiting, obviously, these acquiring companies. Because I think now that's a concern. Without the head of the company, what does this look like? I guess we're not really sure, but hopefully we get an update on that later today. But Paramount seemed to like this news as we're up around 3.4% on the session.
Yeah, I don't have as much for this one, Jenny. After I noticed we were going to cover this name today, I was reminded that I have to cancel my subscription. I think I bought it back in for football, as far as I remember. It was one of that. It was either that or
probably a free trial that you've been paying for 6 months.
Or for the Bear. I can't remember, one of the two. And, I remember getting it, and I said I would cancel, and now 6 months later, here I am still paying for it. But I did notice the stock has struggled, right, recently, slightly higher on the day here today, but coming off a bit year to date. So definitely one to keep an eye on here. But, yeah, losing some momentum. Started out around 14. It's just been kind of grinding lower.
It has been grinding lower, and it's a relatively disappointing chart on a year-to-date basis, so maybe earnings could provide that necessary lift. But last name today actually already had its earnings. That was last week. Roku, which it was not so positive of a reaction, as shares are now down about 10% over the month. But today, Seaport did upgrade shares to buy from neutral with a $74 price target. They highlighted the stock's risk and reward being attractive for a company central to the connected TV advertising market, which they believe should grow its advertising in the low double digits this year. They said that the news of Roku facing this increased streaming competition and connected TV advertising competition is not new, but the company's also been cutting its costs accordingly. So for that reason, perhaps some cost control offsetting the obvious competition. I mean, Roku as a streamer to me, Ben, has always been a bit of a mystery. It's the hardware. It is not what I turn my TV on for.
Yeah, Roku for me, as I look at the stock, one that's really been struggling. We saw a big move lower on Friday, kind of retracing some of that today. Curious to watch how the week pans out, but a good start to the week, I guess, for the bulls. It's done nothing but sell off this year. It was up around 100 to recently below 60, below the 50, below the 200-day moving average. I looked at the chart basically since the middle of February. Stock gapped lower on earnings, down through 85, struggled to recover. So it's not just Jenny that's not really excited about this one. I feel like the bulls in general have had a lackluster approach towards trading it. Stocks, no stranger to big moves, though. Reaction to quarterly results, saw that back in July and October of last year, and then again February of this year. So, yeah, it can move, but definitely, you know, tough to get excited about a stock like this that's been steady lower, and again, one that's struggled to kind of regain composure at this point for a long period of time as well.
Yeah, for a long period of time. I mean, we haven't been near highs in this name now in, gosh, it's been, I mean, this name traded over $490 a share at its peak. Of course, that was its pandemic high, but still important to keep in mind how long of a downtrend this has been to now where we're currently trading. But we'll be diving more into the charts as well as some example trades in our names that have yet to report earnings, those being McDonald's as well as Paramount. We'll be looking, of course, into everything we can expect in both of these names ahead of their reports. Stick around. Next Gen Investing. I'll be right back.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's time for our Chart Master segment. So breaking down the charts for us today is Ben Lichtenstein, and we have both names ahead of their earnings. McDonald's, of course, tomorrow morning, Paramount today after the closing bell. We'll start off with McDonald's, which I know has gone a whole lot of nowhere, but hey, this is seen as like one of these value names. It's not supposed to be volatile, right?
That's a good point. And if you're looking at the longer term chart, it has gone higher over the long haul. So the bulls have been rewarded for sticking with this one, but I guess it really depends on what time frame you're looking at. Let's dive into, first and foremost, a 5-minute candle chart. You're going to see some strength here as well, ending last week on a good move higher, all the way up to just shy of 280 from around Wednesday afternoon, Tuesday afternoon, 265, and you can see how we've just kind of gone a bit sideways here, currently holding below 275. Let's just move away from this 5-minute candle chart here. Just wanted to show you the bit of a rally we've seen over the last couple days, but how we've kind of tapered off and lost some of that momentum to the upside. Now, I mentioned how, depending on which time frame you're talking about, you're going to see a little bit of a different depiction. And we've gone from a 5-minute candle chart and looked at, again, that rally that we saw, a little bit of sideways consolidation off recent lows. And you can see that's just a small part of what's been playing out. If you look at the hourly candle chart, and we're going all the way back to the highs that we saw up around when the stock was trading around 302, that was in the end of January. So in this instance, you can see a little bit more of a situation playing out where it appears as if the bears are in control here, if anything. I've got my eye on this 280 level. I think that's kind of a line in the sand, because here you can see value's been moving to the downside. We've got 292 where we were a bit horizontal, 280, this overlapping rotational price activity, high conviction to the downside, transition into that horizontal phase again. And so the bears were looking for that to continue, that staircase type pattern to play out and value to form at a new lower level. In fact, this is exactly not what they wanted, right? They didn't want to see a lift here, but still holding above, or I'm sorry, below 280. So maybe not all out loss at this point, but fairly random here. As long as we hold below 280, hold up above that 265 level. Now, hourly candle chart showing a little bit of weakness. We looked at the short-term strength. So when in doubt, I always say zoom out. Let's do just that. And you're going to get a little clarity here in terms of McDonald's. I mentioned I've seen some inconsistencies at the drive-through window, but it's been pretty consistently higher. If you take a look at the longer-term chart, again, going back to the rally we saw back in March, if you remember, back in 2020 off the lows, pandemic lows around 124. All the way up to, well, recently around 302. You can see we struggled to take out a couple highs here, so not surprised to see a little bit of consolidation playing out. I wanted to show you what my eye was drawn to as I looked at this daily candle chart. Again, you can see areas of consolidation. You can also see the significance associated with this 280 level. Get back up above that. You've got some room to kind of work a little higher, but still be in this range below 302. Holding above 246. Notice that held back in the fall of last year. That was a key area that the bulls did not want to get below. And again, that's one of the things that I look for in terms of not only these areas of value, but key tests thereof. Look at this. Back in February of 2022, we held above 220. That was a key area back then as well. So yeah, it looks to me like longer-term bulls in charge here in terms of McDonald's, and they're McLovin' it.
They are McLovin' it. It's been a hot minute since I have heard that. But as far as some broader term trends you're watching now as we go into earnings, I know you laid out that long term, hey, clear stair-step pattern to the upside, obviously. But how about what we watch ahead of their earnings?
Well, let's look at a daily or a weekly candle chart, I should say, and we can pull up a longer-term look here at McDonald's, kind of pinched below the 50, above the 200-day moving average here. RSI is somewhat limited to the upside here in terms of participation, but yeah, just kind of watching a stock that's meandering, somewhat sideways, relatively contained here, and limited in terms of real high conviction to the upside, but still in a bullish pattern, that's for sure, Jenny.
Yeah, still looking relatively strong. I know we haven't exactly seen the year-to-date performance of, we were comparing it to Domino's, but still relatively strong. So with this in mind now, I'd like to welcome in Rick, of course. Usually our chart master, we're doing like musical chairs on Next Gen today, but now today our example trade master. So walk us through what you're thinking when looking at trading McDonald's ahead of their earnings.
It's great to be here on this side of the studio here.
I'm all thrown, honestly.
Exactly. But, you know, Ben had looked at a range recently. We had a recent range between like 270 to 265 here. And that's the area that I wanted to focus on for this example trade that we're doing. So we do have earnings coming up, so this would take into account the earnings move that we would expect to see either to the upside or the downside here. But this trade would be looking for an upside move here. Neutral to bullish play, -1, May 17th, 270, 265 put vertical at a $1.50 credit here. So 18 days out, giving us a little bit more time here. And, you know, like I said, centered around that range that we saw recently. So we could see that, you know, we're looking to just stay above 270 here. It's kind of a softer target when you're selling a put vertical as opposed to, you know, buying a call or buying a put or anything like that. That's more of a hard target here. So roughly 1 to 2 risk reward, 150 max profit, 350 potential max loss here. And the expected move for this option series is about $10.50. So that could take us beyond that long strike there, but we're risk defined, so we don't have to worry about that too much here, the risk of an adverse move here. So basically just looking for things to move more toward the upside after this earnings event here, Jenny.
Yeah, and I think that would be obviously welcome here and on trend with some of the restaurant stories we've seen already from earnings like Chipotle, Domino's. But now shifting gears and looking at Paramount, which is in the midst of all of these various discussions of how this company is going to look once it's acquired or under new leadership. That doesn't matter to us as much, though, because we have earnings.
Yeah, and we also have a bit of a downtrend also as well. So I think investors are voicing their opinion about how they feel about the uncertainties and what we've seen in terms of streaming and some of the consumer trends as of recent. Let's begin with how in this name we're seeing a very similar situation in terms of McDonald's. Depending on which time frame you're talking about, you could see a bit of a different picture playing out, different scenario, but when you look at that longer term, it becomes very clear. Let's start off with a 5-minute candle chart, high conviction. You can see over the last week or so, and a bit more sideways recently, more so than not, but again, a big move up here into the end of 2 weeks ago Friday, and take a look here, as you can see on this 5-minute candle chart, 1240, basically the two phases of development. High conviction on the left side of your screen, and then just random price activity since. So we're overlapping rotational. This is investors sort of taking a bit of a breather, waiting for the event, and I don't think that we're going to stay in this range after we get the results here. Take a look here. I wanted to take a step back and show you again the mirror image of that big move up we just looked at on the 5-minute candle chart. As we take a step back and go to an hourly candle chart now, and some of the price activity we've seen since February, and the stock was trading up around $17, $18. It sold off all the way down to those lows back in March. We took those out in April down to around that $10 level, but you can also see how for the most part we've been kind of sideways, hanging out right around this 1150 area. And again, just kind of that mirror image of the chart that we just looked at. We've gone from high conviction to the upside, sideways consolidation to high conviction lower, and then that same pattern playing out here, balancing around 1150 if you're going back to what we've seen since the beginning of the year. Let's take one more step back. I want to show you what's playing out, because I said that when you get into the longer term chart, it's pretty easily identifiable who's in control at this point. And in my opinion, when you see something like this, top left, bottom right, it is the bears. And again, they've been voicing their opinion. Basically, a disappointment, I think, is the best way of summing this chart up. Areas of migration, or areas of value that continue to migrate lower, currently balancing around 14. We're holding below that right now. Now, I do want to point to the fact that we're in a bit of a range. So while you're in this range, there's the tendency to see kind of random price activity. We can get above 14, back down below, but you stay within those upper and lower extremes, those parameters. And then, again, the line in the sand for the bears is really around 20. They don't want to see this thing back above there, because that invalidates the working assumption that we're trending lower, right? They want to see us establish a new area of value at a lower level, not take areas that were established, take areas out that were established on the way down. So, yeah, in a range right now, bigger picture, trending lower. Again, time frame specific whenever you're talking about any of these stocks, any of these products that we look at.
So some takeaways here as we go into their earnings today. I mean, what are you watching as far as some of the recent momentum? And I know it's not a secret, of course, that Paramount has been struggling. I think the thought was that this deal of this M&A could revive interest. It's kind of doing that today, but what are you watching as far as big picture here? Yeah, just the fact that this is, again, a stock that's very kind of lackluster, range-bound, that's for sure, for a while. Seems pretty comfortable where it's at right now. In a holding pattern, waiting for that next catalyst. The bears want to see that catalyst provide a breakout below $10. The bulls want to see us take out key areas that we established on the way down, as mentioned a minute ago, but pinch between the 50, the 200-day moving average. Even look at the RSI. It's not really providing a lean one way or the other. I guess this is about what you expect to see headed into a big event such as this. Yeah, absolutely here. And we're up 3.5%. So now when we look at trading this name here, Rick, walk us through your thinking, because I will say a lot of the pessimism I feel like we did see last week following Netflix's report that was disappointing. And now we have, I mean, this name, Netflix was 2 weeks ago at this point. My time frame's all thrown off, but now we have Paramount, which is in an interesting position because we're up 3.5% already ahead of these results.
So, yeah, a bit more of a bearish read on this one. So I was thinking more of a contrarian play. And the trade, the example trade that we put together for this one is a short-term earnings play here. And, we're looking for a call vertical here. We're buying +1 May 3rd. 13/14 strike call vertical at a 25-cent debit here. So only 4 days for this one to play out. And this is an earnings play here. And the reason that we were looking at the 13 and 14 strikes is those are the two recent high points that we established on our chart there. We hit just below 13 about a week ago. The next high point was just below 14 near the beginning of the month. So these seem like natural boundaries here. You'd be looking for a bit of a breakout beyond that 13 area, and then for some resistance to come in near the 14 strike here. So I wouldn't think you were too crazy either if you just eliminated the short strike altogether, because it wasn't terribly expensive to bank on the long 13 options here. But I like to include spreads in these examples here because it helps defray some of the cost here. And it also, I mean, it's not going to go up to infinity. 14 seemed like a reasonable place to start looking for some resistance anyway, and that would be the cap on the profit for this trade here. So risk reward is about 1 to 3, pretty common setup that you would be looking for trading in general here. So that seems agreeable for for the risk reward balance here. Expected move is $1.37, so the break even is within the expected move. We're not looking for some kind of crazy moonshot trade here. This would be more within the expected parameters here.
More so just hoping that we see a nice move after earnings, we hold. At least we could, obviously, this is short term for earnings, but expires Friday. But hoping for some of that momentum, at least that we're seeing today, to continue. But we will leave it there for our Chartmaster segment. Now, coming up next, it's time for FOMO. So naturally, we're looking at Tesla because there's no better day to look at Tesla when it's up 15% as it won big in China, given Elon Musk's surprise visit. We'll dive more into what's driving this optimism coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all of your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
All the need-to-know info from every trading day. I'm Renita Young. Earnings, data, the biggest headlines that move the market, all condensed into a few minutes. Download the Schwab Network app and join in on the latest market trends, available anytime, anywhere, on any device, for free. Recap your trading day with the wrap, right here on schwabnetwork.com.
Welcome back to Next Gen Investing. It's time for FOMO. So we're talking, of course, Tesla. It's now up almost 16% here. Actually, it just crossed over 16% in real time. So obviously having a stellar day. But here to tell us more of what's driving all of the enthusiasm in Tesla to kick off this week is Caroline Wood, Senior Markets Correspondent for the network. So Caroline, walk us through everything good that happened in China. I know this was a surprise, but gosh, who would have thought Tesla would rally 16% here on a Monday?
Yeah, maybe not some of the people who sold it maybe last week or the week before who might have FOMO based on these gains. As you said, Tesla shares up 16% on the heels of Elon Musk's surprise visit to China over the weekend. He met with a host of high-ranking Chinese officials. Tesla passed data security requirements, and that was important because Chinese authorities removed restrictions on its cars. And then, according to the Wall Street Journal, Chinese officials told Tesla that Beijing has tentatively approved the company's plan to launch its full self-driving software feature in the country. So full self-driving, or FSD, has actually been in China for quite some time, but it's been with restrictions. So this would be without those restrictions. And that's important given the fact that China is one of the largest markets for EVs. It's Tesla's second largest market. And we know that Tesla has also been trying to entice adoption of FSD. Just last week here in the U.S., it cut its subscription price for that in half in hopes of increasing adoption there. Meanwhile, for these efforts, Tesla is reportedly partnering with Baidu. Tesla will use its mapping and navigation technology for the FSD feature. The agreement would allow Tesla to tap into Baidu's mapping service license, which is a requirement for intelligence driving systems to operate on public roads in China. So its fleets will be able to gather data about traffic and road signs and routes, and partnering with a Chinese company could help ease some of the regulatory concerns that are, could be broached in terms of data security risk. So that is seen as a positive, according to some of the reports that I'm seeing. So Tesla shares up about 16% today. Baidu shares also up about 6%. If you take a look at the other EV makers in China, the Chinese ones, BYD, XPeng, Li, NIO, they're all seeing significant gains today as well, the U.S. listed shares of those companies. So not necessarily having taking a hit because of this win for Tesla. But I think the takeaway here is that there's still very much demand issues for Tesla. There's still falling sales and rising competition, but FSD has really been seen as a growth driver, and this is a win for Elon Musk and Tesla, and in turn, Tesla shareholders. Shares now up more than 16%.
Yeah, Caroline, I'd argue one of the takeaways also is priorities, right? It's pretty clear where Elon Musk has put his. He said he's a big fan of China. He also said that he also has a lot of fans in China. He said basically the feelings are reciprocal, but he just canceled his trip to India. So, I mean, pretty clear where his priorities lie.
Yeah, and I think there was some concerns about potential retaliation over the ban of TikTok, and that doesn't seem to be the case, at least from China right now. I think in terms of the priorities, too, Adam Jonas over at Morgan Stanley was out with a note just a bit ago saying that this trip it's a small gesture, but it shows his commitment to Tesla, because there was some concern that maybe Elon Musk wasn't all in on Tesla. We know that he has, a lot of projects up his sleeve. There was some talk about, given the compensation issues, that, he could form, a separate AI company, and that could have been weighing on shares as well. So he showed that, he says that this trip kind of quelled those concerns that Elon Musk is not all in. Also said Elon Musk's visit to China means far more than seeking approval for self-driving tech on Chinese roads. Whether Tesla's CEO is sleeping on a floor or on a plane, the message is clear: he's back, and kept his overweight rating $310 price target. Another bull when we talk about Tesla, of course, is Dan Ives. He's lowered his price target. It's down to $275. That was pretty recently, but still has an outperform rating. He says this is a major moment for Tesla. While the long-term valuation story at Tesla hinges on FSD and autonomous, a key missing piece in that puzzle is Tesla making FSD available in China, which now appears on the doorstep. So definitely some positive commentary out of the bulls, and Tesla, the best performer in the S&P 500 today by far.
No kidding. And Caroline, you made such a good point, and that's the concern over his commitment to Tesla. I mean, I think even I was a little bit concerned because I listened to the earnings call, and when he was asked directly, like, where does your heart lie? He basically said, well, Tesla's really prosperous. It was a really weird, obviously, like, trying to side skirt the question. It was just like an awkward response, but it didn't exactly settle my concerns. It just sounded like, hey, well, Tesla's making the most money right now, which I guess I can understand from like a business perspective. But you mentioned Dan Ives, Adam Jonas. As far as the street's concerned, are we seeing a ton of reaction from the analysts today, or is everyone sort of just standing their ground?
I mean, I think I haven't seen any actual changes to ratings. When you actually look at the breakdown of ratings, there still are more holds than buys. Tesla has always had mixed analyst coverage. Obviously, 19 buys, 21 holds, 10 sells, median price target of $167.83, which of course Tesla is now trading at $195, so significantly higher than that, and just with today's move. So I haven't seen any actual changes to ratings, just some positive commentary. And then of course you go on Twitter, or now called X. I think I'll forever call it Twitter, and there's definitely some hate going on towards the shorts, and then some of the people who have been bearish are saying, oh, China threw Musk a bone, kind of covering their tracks after, advising to sell. But, one day doesn't make a trend, as we know. Tesla is still down on the year, down about 21% year to date, but it's certainly a win for today, and let's see what happens from here.
It is certainly a win for today, and I agree. If you go on Twitter or X, it's a whole myriad of opinions, as there always is. But I feel like everyone has a lot of feelings when it comes to Tesla, which naturally is warranted by the 16% move. But great insight as always, Caroline Wood, senior markets correspondent for the network. So now, Ben, when we look at charting this name, we look at this. I mean, this is a pretty interesting chart, I have to say. For as much flack as Tesla gets, it's becoming one of my favorite charts to look at, especially today with this nice clear gap up to the upside.
Yeah, you've been hyped up on this one for a while now, Jenny, and I can understand why. I mean, we are seeing a bit of a recovery here, and it's got to be exciting whether you're participating in this one or not. I mean, just as students of price, I always say that this is the kind of activity that we look for. High energy, high conviction, and we've certainly seen that. Let's break down a couple different time frames so we can look at the recent rally. Caroline mentioned here back up to around 200. She was talking about how we've seen some positive commentary for the bulls recently and how that's helped quell some of the concerns. I think the real question here is that going to quell some of that selling we've seen from Elon Musk himself, because he was unloading shares at a feverish pitch here, and I think it's tough to absorb that kind of supply anytime it comes into the market. But just taking a look here at the most recent price activity, the 5-minute candle chart shows the rally we've seen over the last few days, reaction to earnings, the news in terms of China, and I feel like Elon Musk has really just pulled it off once again, right? Has the focus on exactly where he wants it to be and off of the negative and on the positive. Take a look here as we step away from the 5-minute candle chart, some of the price activity we've seen the last few days and how this just absolutely reverses in the face of the bears here, the pattern that we had been seeing to the downside. I mean, this is a rip higher from 265 back in the beginning of this year all the way down to recently around 138. I mean, we basically lost 50% of this stock's value over a short period of time. I mean, it must have been tough to be long this one, that's for sure. We saw a negative reaction to earnings, if you remember, in the end of January, and a stock that's really struggled to recover since. Again, I think it's important right now. Are we going to start to see some long-term bulls come back into this, some initiative-type buying, or is this just possibly short covering? And again, as I mentioned, some of that supply easing. But let's take another step back away from the 1-hour candle chart. I wanted to show you longer-term bulls do appear to be in charge here. We just came off a key level. That was around that 130, 140 area, a retest of those lows that we saw back in January of last year. So here you can see we're still just kind of in a range. Bulls want to see this one take out 270, get back up above there, and we could open up a door for a retest of 420. I mean, if we could get some of that Elon Musk, momentum, that energy back into play, I feel like, as long as he doesn't do any more podcasts, with, who is that, Joe Rogan, as long as we don't get, kind of back into the weeds there. If he can just stay focused here right now, this is, everybody says when you're buying Tesla, right, you're kind of buying into Elon Musk. And it does seem like he's a little bit more on track. This China trip, to Caroline's point, kind of, favors that discussion in many ways.
Whoa. I liked the Joe Rogan podcast. I liked 420 Elon Musk. I think bring more of that back. I was a more relaxed Elon Musk. So, I don't say do away with maybe do away with like the incessant tweeting. That might be a good call. But now it's time to shift gears here and bring in Kevin Green, senior markets correspondent, for everything that Kevin is watching this week. Kevin, it's a busy week. I will not bring back the statement I said earlier about an elephant being this week, but I think we can definitely all agree there's a lot to get through this week. What are you watching?
Yeah, definitely. We are seeing a little bit of a lull here going into this week as well, with the S&P 500 really just kind of range bound right now. But we have a lot of economic data hitting the wire, and then also we have earnings. So from the economic data standpoint, we are going to have the ISM manufacturing as well as the ISM services data points coming out, and then we have the Fed decision on Wednesday. It's not going to be so much a decision on trying to pause or raise rates or even cut rates. It's going to be the commentary coming from Jerome Powell, and is he going to come out being a little bit hawkish, or is he going to have more of a dovish tone? I think that's where the market's really going to focus on, and that probably could set the tone for the remainder of the move for the week. And then we have the initial jobless claims on Thursday, and then last but not least, jobs on Friday. We are actually looking for non-farm payrolls to actually show adding around 243,000 jobs for the month, as well as the unemployment rate staying unchanged at 3.8%. I think the biggest highlight there is also going to be the average hourly earnings. That's really an inflationary gauge that has tracked really well when it comes to CPI. And so if we continue to see that print at a healthy clip to the upside. That also could provide maybe a little bit of anxiety, to say the least. But that's from the economic data standpoint. And then also from the earnings, we have Apple and we have Amazon. We have Apple on Thursday. We have Amazon on Tuesday. Bar's pretty high for Amazon, to say the least, because of not only the e-commerce business, but also when you're looking at AWS. And then when you're looking at Apple, bar's kind of low, similar to what we saw for Tesla. So are they going to be able to beat and exceed these sales expectations when it comes to iPhone in China? That could also determine the broader equity market as a whole if they're able to beat and provide some pretty decent commentary.
Yeah, and I think really well put. And of course, the good setup for this week is it feels like I have to operate in like the front half and the back half, because there's so much to get through. It's like you can't all digest it at once, or at least go through it all at once. But great breakdown of what we could be watching all week long. Kevin Green, senior markets correspondent for the network. Now, coming up next, it's time to talk fintech. We got SoFi's results this morning. Shares are down 10% in real time. We get PayPal out tomorrow morning and Block later this week. So everything weighing or perhaps lifting, depending on how you look at it, in the overall fintech space coming up next.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's time to look at a couple of stocks in the fintech space with Renita Young, senior markets correspondent for the network, and of course Ben Lichtenstein is here with us. And we're starting off with, unfortunately, the one that is the laggard of the three. That is SoFi, of course, down 10 and now 0.25%. I mean, they had earnings, Renita, so walk us through what led to this selling.
Well, earnings came in better than expected, and so did the full year outlook. The company actually boosted it, but it was that second quarter outlook that sellers are selling on today. The company is looking for the second quarter adjusted revenue of between $555 million and $565 million, and then net income of between $5 million and $10 million. But analysts had expected adjusted revenues of $580.8 million, and then net income of $13.9 million. Far above what the company said that it may bring in. And if we look at earnings, though, adjusted earnings came in at 2 cents versus the 1 cent estimate. Revenue also beat expectations at $580.65 million. And the company said that 2024 remains a transitional year, and it's as the tech platform and financial services segments together are expected to drive some growth. They expect it to increase from 38% of total adjusted net revenue in 2023, and then approximately about 50% for the full year for 2024. So they're setting these expectations for themselves. We'll find out if they actually get a chance to meet them or if they'll cut the expectations down for a while. But SoFi's guidance, though, it assumes that the lending revenue is going to be between 92 and 95% of the prior year's level. So that's another thing that analysts are looking at and that traders are looking at too.
You know, Renita, earlier in the show we were talking about, I said it's tough to get excited about a stock like Roku, one that's sold off so significantly and then it's just been sideways for such a long period of time. I feel like SoFi kind of falls in that category, right? It's come off that, hierarchy, those upper levels that we saw, and has recently been somewhat limited in terms of real conviction. If we could just pull up this chart, I think this is a pretty good example of, we're teetering around the 50, holding around this 200, just below both of these moving averages, holding about some key lows, I would argue, around that $6, $7 level. But again, I feel like tough to get excited about a stock, not only this one, but this whole space in general. Here's SoFi, but take a look, because now you've got SoFi on the left, I've got PayPal in the middle, and Square on the right. I mean, here's what I'm talking about, coming off those upper extremes here. These are weekly candle charts. We're going all the way back to the summer of 2021 in each three of these examples. But yeah, I mean, you can see how this has been a bit of a disappointment for those that have been holding on to these stocks and the bulls in general.
I think it has a lot to do with the competition in this space. It's so much more crowded than it was when each of these companies came out with their own unique services. But when we look at PayPal, investors are closely watching this turnaround story for the company with its new chief executive, Alex Chriss, and whether or not he's making the moves that analysts feel like are the best for the company. So a Jefferies analyst said that it's still early to determine how he's doing, but sentiment has improved pretty significantly after the fourth quarter. That's what Jefferies says. And also they've got excitement around the Fast Lane, which is their online checkout service. It's supposed to be a faster service, but analysts expect adjusted earnings of $1.20 a share. That is a little bit higher than last year, just by about 3 cents. And then they're looking at revenue to increase more than 6% to $7.5 billion from last year.
So now when we look at, okay, PayPal is up, say, like 9.75% on the year. SoFi is now down almost 29% on the year. But then Block, which I think changed your darn ticker. I want to call this Square.
I do too.
So
I want to call it Square too.
Oh, it's so frustrating. Square, Block, whatever it's called, that's down now about 2.5% on the year. So what can we expect from them? I know they have earnings later on the week, I believe Thursday.
They do.
They're like the newcomer to this space, not new as far as SoFi is concerned, but new for PayPal. And they just have not been able to steal market share as if they've planned to.
And that's why they plan on going on both sides of the transaction. They want to dominate both the consumer buyers and the merchant sellers, and they have products designed for each. So the earnings do come out on May 2nd, and analysts expect earnings per share to increase more than 50% to 62 cents a share. And then they're looking at revenue to jump about 15% to about $5.73 billion. But investors are also looking at what's next for Cash App. Its merchant business is key to performance. And not just the merchant business of Cash App, but the merchant business of the overall company, Square, Block. I want to call it Square again because it's SQ. But they're looking at what happens with the merchant business specifically.
Because I think we all want it to, like, Square was they need to go back to that old identity, right? I can understand Meta, shifted their identity and it was a good thing. I don't think that Square Block's transition to this new identity has been a good thing.
No, I don't think so either, because certainly we're still calling it the wrong name. So.
And certainly shares are still down 2.5%. So that's also one argument to be made. But we will leave it there. Renita Young, Senior Markets Correspondent. Appreciate the insight as always. Coming up next, it's time for AT&T, which is seeing some love from the analyst community after its earnings last week. Shares are up slightly on the session, but also are in need of a lift this year, as we're only up about 2% on the year. We'll discuss more with George Tillis coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope, Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes up to 25 stocks in just a few clicks.
Welcome back to Next Gen Investing. It's time for Under 30. We're looking at AT&T, which is up around 2.2% on this session. So here to tell us more on some of this analyst news as well as their earnings last week, I'd like to welcome in George Tillis, Senior Markets Correspondent for the network. So George, making a nice move to start this week, no doubt about it, but not exactly a strong performer on the year. I know we're pretty much like in this new range, but walk us through what you're seeing.
Yeah, I mean, I can talk about the range first. I mean, just in the last year, you can see it's trading between $20 and around $14, and I think it should. And the reason I say this is you have to think about AT&T as essentially a traditional now, after they spun off their Time Warner division, telecom, especially, cellular telecom as well as broadband company. And these are, again, its core roots, essentially. And effectively, it's not growing very much, and it's not a bad thing. One of the things you won't see in the chart, per se, unless you adjust for it, is essentially the dividends that the company's paying out, which is really what this company is investable for. If you consider last week, just to give you some context, the earnings per share were actually down about 8% year over year to 55 cents. Sales were also down about 0.4%. They actually missed by about $530 million, coming in around $30 billion in sales. But they did denote in their earnings conference call that they're actually seeing some better margin capabilities, especially in their enterprise wired communications division. They also see in their wireless services division growth of about 3%. And effectively, I think this company, it's really overlooked from the standpoint of its price action per se, because if you look at it from the last 5 years, and this is also inclusive of Verizon, these are the two largest telco service providers in our country. They've been down about 30%, but they have been paying dividends that entire time. And if you look at AT&T's conference call statement, they denoted about $18 billion in free cash flow, low capital expenditures, and they're paying about half their earnings out in dividends. So holding this stock, you'll earn about $1.11 on an annualized basis in dividends. That's about half their $2.20 a share in earnings estimated. And that yield is about 6.7%. So obviously there's going to be a risk premium to owning an AT&T stock for the dividend, but you're also earning essentially a little bit more than you would on a risk-free return basis, let's say a short-term deposit or a U.S. government treasury bond.
George, I'm looking at the stock here, and before I get into the chart, I just wanted to point to Barclays actually upgraded AT&T, citing the mismatch between valuation and improvements in growth, quality, and execution. They now have the stock with an equal weight, from equal to overweight. They left the price target unchanged at $20, but take a look at the chart here. I just wanted to show you T-Mobile. This is, again, one of those stocks that's come off that upper level. It's really been struggling to reflect the broader market strength we've seen in terms of some of the other major indices. But I looked, and just kind of a comparison, T-Mobile, you mentioned Verizon, a similar pattern, right? But I also pulled up T-Mobile. So we've gone from AT&T to Verizon. I'll bring them all up here so you can see them side by side. On the left, AT&T, in the middle, Verizon. What's T-Mobile doing right that the other two aren't?
So here's the thing. If you look at the three major telco providers, all of those names I mentioned, AT&T, Verizon, and T-Mobile, T-Mobile is actually still growing their network. And effectively, when they spun off their Sprint division, they generated a lot of cash that they use to finance their towers. They've been expanding their core network in the United States, and they're playing catch up in that regard. But they generated a lot of money from the sale of their Sprint division, which was years ago. So they're still growing, and effectively, what's happening here is that they're not paying the same kinds of dividends out to shareholders as AT&T and Verizon are. So keep in mind, you'll see outperformance in T-Mobile because they're retaining much of their capital for reinvestment versus in AT&T and Verizon, which actually have less CapEx needs because they have a more established cellular and broadband network. So they're paying more out in shareholder patronage in the form of dividends, maybe even share buyback. So that, to me, explains the differences between the three stocks, and particularly T-Mobile versus the other two. The other two, to me, are more of a mature company, and therefore you have to treat them differently from an investment standpoint.
Yeah, and I think that's a good call, George. And we also have seen, I mean, like that price performance that's followed both of these names quite differently over the past several, I'd say, months, if not the last year or so. But we will leave it there. Great insight, as always, George Tillis, senior markets correspondent for the network. And Ben, I have to say that usually we do a check on the markets, but markets look exactly pretty much where we started the show.
Well, speaking of where we started the show, you were talking about eating elephants. We were talking about Tesla. The question I have is, did Musk bring home a panda from China?
I hope he didn't eat it. I hope that's not where that segment
You're not allowed to do that.
No, you definitely are not allowed to do that. No condoning of eating the I'd say maybe extinct animals. But we will leave it there for Next Gen Investing for this Monday. And Ben is joining us all week long for the fun on this show. So look forward to that. But that'll do it for us today. The Watch List with Nicole Petalides is coming up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide. No overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Trading the trending names every day.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome to the Watch List. I'm Nicole Penelides. It's 2 p.m. Eastern Time. We're coming to you live from the New York Stock Exchange. We have a big show for you because it's a big week ahead. Of course, the Federal Open Market Committee's rate decision is due out this week on Wednesday. The meeting begins tomorrow, and we'll get you ready for Fed Day. And Tesla in focus. It's jumping 15%. Elon Musk took a surprise visit to China this weekend, securing approval for FSD, full self-driving approval in that country, and what it means for investors. And last but not least, our panel is standing by, ready to talk about all the semiconductor names and earnings, including onsemi and NXP Semi, just to name a few. In the meantime, taking a look at stocks. Last week was the best week for stocks since November, thanks to the end of the week where we saw some great moves by some of the tech names. And today, ahead of a big week of earnings again, S&P right now 5117, up 17 points. That's 1/3 of 1%. The NASDAQ also up about the same in percentage terms, 17,789. The Dow is up 157 points, 38,397. And here's a look at the Russell, up 0.86% at 2019. Oil and gold are mixed as oil pulls back. It's down about $1.30, while gold is gaining over $6 today. U.S. dollar 105.49, and Bitcoin pulls back. That's down 1.2%, and the VIX is sitting at 1475. In the meantime, Kevin Hanks, senior equities contributor of Schwab Network, is here with us to talk about the big week that we are facing here. What are you paying extra attention to? What should we be watching? Of course, we have a big week ahead. We'll have the Federal Open Market Committee meeting this week. We'll have earnings from AMD, Amazon, Apple, and a jobs report, just to name a few, as yields are pulling back. The VIX pulls back too, and giving the opportunity for stocks to move higher. In the meantime, as you take a look at the sectors, pretty much a lot of green. I mean, I see communication services to the downside, but other than that, mostly green across the board, because you have consumer staples, utilities, and real estate leading the way. Let's get back to Kevin Hanks and get some of his thoughts. Kevin?
Yeah, I'm back, Nicole. Yeah, so a big week that will give traders not only large amounts of high-profile earnings like Apple and Amazon, but you've also got McDonald's and Starbucks and a lot of good names, big in volume, big in high profile. But we've also got the Fed. And how is Jerome Powell going to come out of this meeting? Is it going to be more hawkish than some of his meetings in the past? And all that will lead up to Friday's non-farm payroll number, expected to be another strong number, between 250,000 and 300,000 jobs with a 3.8 unemployment rate. So a lot going on there, Nicole. There's something for everyone this week, as you know, and we're going to look for earnings, Fed speak, economic data. It's all going to set the tone for how we're going to trade this week. So far, though, stocks are strong. VIX is down. The dollar is also lower because of some Bank of Japan intervention there with the currency. So a lot going on, Nicole, as you know.
Oh, yeah. I mean, finally trying to support the yen after 34-year low. You know, we're hearing a lot about maybe Bank of Japan stepping in and trying to give some support to the yen. Very interesting there. I agree. What about Apple?
Apple's having a nice day today. I've got it up just over 3% on a Bernstein upgrade. They upgrade, it's interesting, they upgrade the stock to outperform, but they leave the price target unchanged, but it's at $195. It's still $20 higher than it is right now. They think some of the weakness in China is more cyclical than structural. He thinks China business in general is historically more volatile than Apple is overall in general. He thinks the replacement cycle tailwinds are starting to hit. The iPhone 16, he said, is set up for a nice recovery. An iPhone 16, and his phrase, buy the fear, Nicole. All the fears, all the worries that are going on in Apple right now that this had the stock trade under $170, buy the fear is his message.
All right, y'all, I'm back. Did anybody take Z-Tesla? Z-Tesla. I don't think you did. I'm sorry I was going for that long. I stopped. I had to make a few pit stops, grab some lunch. I am sorry for being so going so long, but guess what? Man, I almost did not leave because of TSL. Wow. TSLY. This was the trade of the day. We said 100, the moving average. I want to see if we can get about 20% out of this name, and that's that option. 200 calls were just about in the money.
But in this inflationary environment, I would expect that sales are higher, and so you really want to maybe scrutinize some of these numbers. Is it from selling more products, or is it from selling maybe the same or less amount of products at a higher price point?
I'm so frustrated, but you know what I mean. Sometimes you gotta do what you gotta do. It's, you know what I mean. Like, some days you just can't trade. I just didn't feel comfortable in trying to manage my position behind the wheel and this, that, and the third. So it's unfortunate. It is what it is.
You can set the market on fire in a good way again. There'll be price to pay for that.
Be able to do some good this week. Noticing the weakness in Microsoft. It's just sitting down here. Sell off this morning. Just like I said, I just got in. It's 2 o'clock. Give me 10 minutes. Let me feed my cat. And we'll get the show back on the road, y'all. DJT broke up above that level. Clear strength. Again, we were a bit neutral. I was neutral on this name. We look for it to run to the top of the, look for it to get to 50. With the stop loss underneath 45, like 44.70 or so, 44.75-ish. You know what I mean? There's your stop. Get in, see if it gets back in there, and if you can't, take another stab at it. You know what I mean? That's what I would do. I would look to see if it possibly gives you another option, but it's actually turning that into resistance. See, it may just consolidate here. I mean, again, that's up to you guys. Maybe you get another test of that 50-day, but I think if you reject that whole move and take that whole move back, something going on there. Like, I mean, I wouldn't feel too good about that position. Nvidia, did the semis go higher? Nah, not really. Look, Nvidia's just right around where it opened. So that was a good no trade. Trade of the day, Tesla, guys. Gap up, nice little double bottom here. Bang, bang, rally, pull back. I gave you guys these two dotted lines for the entries. I'm trying to bring up my laptop died, so just give me 1 second. Let me grab something to drink, and we'll get back to business. See if we can't do something. What did the overall markets do? Nothing. We said that. We said that we might just consolidate and wait for some of these earnings and just consolidate. So you may, if we sell off today, I may try to get long. I'm gonna be honest. We had a big run Friday. Friday was easy to see, in my opinion. Like, we were just screaming for 506. We had to either go higher to go lower, or go higher because we were going higher. Like, if that makes any sense. Because we were not going to drop, because we got short Wednesday afternoon into Thursday, and then Friday it was like we opened up down at 500 and some, and it was just like you had to go higher to go lower, if you know what I'm saying. It had to go back to retest 505, 506. You guys can see it here. 504. It had to go higher to go lower. So here we are. Looks like the S&Ps are in between the 50 and 100 day. All right, looks like we have a normal market going on here, except the 20-day below the 50. I know I have a lot of lines. I'll get that straightened out here in a little bit. That's a nice little hold of the 20-day moving average. So see if you continue to hold this level, and then I would look for a nice little shot at, you know, did we already get the 512 yet? No, 512, 514, 515. Man, I'm so upset about Tesla today, man. That was my winner. That was my trade of the day that I was going to hang on to. It is what it is. Got to move on. You know, for anybody that's new here, I don't know if we even have anybody watching, but you gotta get on and ask questions. I tell you guys, what's up, buddy? Yeah, man. Sorry, Basic. I don't know when you sent this, buddy. How's your weekend, bro? How you doing, man? I had to go. I had to go run some errands. I grabbed some lunch. I almost did not leave. I almost didn't leave, but my laptop. I gotta get. Oh wait, let me throw up OBS. There we go. My bad, gang. Yeah, I'm not sure when you guys sent this. You guys will have to get... Oh, sick. That's what's up, bro. Yeah, guys, give me 10 minutes. Give me 10 minutes, and I'll be right back. I'm just going to go feed my cat. I'm going to go grab a bottle of water. It's a little warm. Yeah, I'll be right back. Give me 10 minutes. Give me like 5-10 minutes. If you have questions, throw them in the chat. If you traded something today, what did you trade? I want to know, man. I want to hear from you guys. Let me throw on Squawk Box and everything and get some stuff going. Everything died. I gotta use the restroom.
And what do you make of what we've seen in Q1 so far? That's a great question. We would always advise our clients to try to take that longer term approach. But
I hope nobody got hurt today. You know, I didn't know if we were going to sit sideways. I mean, I figured we'd have, you know, a little upside, maybe a pullback. We got the pullback to 509. Nice little dollar move there, but we're pretty much right underneath of where we opened today. So we haven't, the markets really haven't moved, and it's understandable why. And we'll cover that. We'll cover earnings. We'll cover all that fun stuff. All right, give me 10 minutes. I'm gonna use the restroom, and I'll be right back. DJT, $50, gang. See if it can break out to a new high here. See if it can break out to a new high.
eliminated completely for this year. So that will be something to watch. And then the biggest thing is jobs.
Let's see. See if it can make a new high this afternoon. I don't really see the volume on this whatchamacallit, but I'll be right back.
Anytime, anywhere, on any device, for free. Schwab Network.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools and support to secure your financial future.
I would love to see Microsoft back at 406. I might try that. I might try it, but man, Microsoft is weak, gang.
Trading the trending
406
names every day.
Look for that upside on Microsoft.
Host of Fast Market.
It's
ready
an
for
idea.
You, ready to go at 12
Appreciate
p.m.
all the
Eastern
likes, the
on
whole 4
Schwab
likes.
Network.
fucking love y'all, man. I'm telling y'all, I fucking love y'all. I do this for y'all. I don't do this shit for me. I do it for y'all.
Welcome back to the Watch List. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. I have some more movers for you in the market to keep an eye on right now. Well, there's SoFi reporting second straight quarter of profitability this morning. The financial technology company said it expects second quarter revenue $555 million to $565 million, forecasting $581 million. SoFi, though, down about 10% today. It was the quarterly guidance that put pressure on this name. And Tesla, well, that's jumping big time. Elon Musk visited China and the backing of its full self-driving software rollout, and that's good news there. And China's Tesla's second biggest market gave tentative approval on this FSD rollout, and the company will deploy its autonomous driving services on mapping provided by Baidu. And by the way, Baidu also higher, so Tesla's up 15%. I saw Baidu up about 5%. And Paramount shares higher today after Skydance raised its buyout offer of about $3 billion in cash in an effort to pay down debt. The revised bid is also aimed at attracting investors who were skeptical, and the initial deal would enrich Shari Redstone and the daughter of Paramount's founder, right? Paramount right now is up higher by about 3.5%. Domino's trading higher after reporting first quarter earnings that beat on both the top and bottom line. The company saw same restaurant sales increased by 5.6% year over year, driven by carry-out and delivery orders across all income groups, and Domino's is up over 5% today. Certainly a clear winner, a two-year high there for Domino's. And Bitcoin, well, right now, Bitcoin is sitting at 63,345, down 1.5% today. Let's continue our market talk here because Luke Lloyd is with us, Senior Wealth Advisor, Strategic Wealth Partners. I'm glad you're here with us. So, how are you feeling about the market, the big picture?
The big picture is the Federal Reserve needs to remain higher for longer, and the Federal Reserve cares more about inflation than they do about the overall economic growth, as we saw last week when we saw bond yields on the U.S. Treasury 10-year rise after that slower than expected GDP report. So my overall thought process is the Federal Reserve knows that the economy might be actually slowing in the long term, but they care about getting inflation down to 2%. And frankly, a lot of the areas in the market, some look stronger than others, and we're really taking a focus on what areas look stronger than others, and also where are discounted. What areas are discounted relative to the median where they usually trade at, because something is going to break eventually towards, I think, the end of this year.
So, I mean, if the Fed right now sort of stays in this higher for longer, less likely to do any cuts anytime soon, often the market can run up ahead of the cuts, right? It's just the thought of the cuts coming sometimes fuels the market. And look, now we're not really seeing any cuts likely even into September. Maybe the market can sort of climb this wall of worry. What do you think?
I think it's actually the opposite. I think cuts are going to be actually bad. I think the market might run up into the cuts or the perception of cuts, even though we might not get any this year. We might actually get conversations around another hike. I think it's possible, considering again that the Federal Reserve cares so much, I think, about getting inflation down to that 2% target, and they would risk even breaking the economy and jobs market to do that. So I think it's going to be actually the opposite. You'll see the market have a negative reaction to whenever that cut comes. I truly think we're in 1973 right now, if you want to bring the 1970s conversation into the equation, where we had a rebound in inflation. And I think that, in 1973, we saw GDP go from a growth rate of 5% all the way down to negative by 1974. We saw unemployment jump up 3% in 1 year from 73 to 74. And we also saw inflation tick back up from 3% to 6% by 1974. So instead of the inflation jumping up this time around, I think the Federal Reserve learned the lesson from the 1970s and said, we're not going to risk lowering rates like we did in 1970, where we saw the uptick and rebound back in inflation. We're going to keep rates higher for longer, and we're willing to either break GDP, economic growth, or we're willing to break the job market to get inflation down and make sure that there is no rebound. So I think you really need to pay attention to the job market. I know that we haven't seen any uptick. The economy is going to remain strong. We're learning from the government right now. We're borrowing new debt to pay off old debt. That's what consumers are doing with credit cards, personal personal loans, things like that. I think that as long as that remains the case, the economy is going to remain strong until someone loses their job. Again, I know we've been saying this for a long time. Eventually, it's going to happen and the dominoes start to fall.
Yeah, you're concerned about a hard landing. Do you think people, I know you have some stock picks for us, and I do want to get to those. Are you thinking that people should be saving money now, extra money on the side?
Yeah. So the hard landing conversation, we kind of got away from that for a while until about last week. I think after last week's weaker than expected GDP report coming in at like 1.6%, when 2.5% was expected, almost a 1% miss. And then you saw bond yields rise on top of that with a hotter than expected inflation PCE deflator number. I think that brings the hard landing definitely back into the conversation. So, when you talk about saving money or investing money, I'm not saying you should go all cash or anything like that. I just think you have to be aware of where you're placing money into the stock market. And when it comes to extra savings, I mean, the key to everything in life is, paying off debt as quick as possible. Those that with a lot of debt, that have a lot of obligations, a lot of payments, when they lose their job are the ones that are going to start to default and continue to see defaults rise in the loans, automobile loans, mortgages, things like that. So at the end of the day, it's all about having some extra cash on the sidelines to save, to be able to deploy and live off of if something bad were to happen where you lost your job.
With Meta, a name that you've been watching, and you said, look, if it pulls back and keeps falling, then we would take a look at it. I mean, some of these Mag 7 names, maybe you feel like they're too frothy or run up. What about Meta? When do you get into Meta?
Well, it's interesting the dynamics right now in the market. I mean, Tesla had really pretty bad numbers, and the stock was up over 10%, and up another 10% on top of that after earnings, trading at like 185 now. The Meta had some really good numbers and is down over 10%, right? And 2022, Meta investors absolutely hated the fact that they were investing so much in research and development. The whole metaverse thing. People were worried that they were spending too much money on these unprofitable areas. Then 2023, they stopped focusing on that and started focusing on the cash flow business advertising. Investors love that. And then on the recent earnings report, when they brought up AI and artificial intelligence and investing money into these unprofitable areas to try to make them profitable, investors again didn't really like that. And I'm actually very surprised by that, because AI is actually going to add productivity, is going to add dollars to the bottom line eventually. Metaverse, I wasn't so convinced. I don't think many investors were very convinced that Metaverse was the path we're all heading down. But we all do know AI is here to stay and is something important for all of us that every business owner is taking a look at. So, I think that a lot of investors are eventually going to like the AI kind of play within Meta. You're going to see a valuation jump because of that as we reprice that into Meta's platform. So if the stock were to continue to take a drop, maybe down to $300, $350 area, we would definitely be taking a look at buying that.
Right. And look, I mean, one of the reasons it was pulling back was the thought of how much they were going to be spending on AI going forward. And Tesla got the jump because he talked about the idea of the robo-taxis and also more affordable vehicles. That being said, how about other names that you like? Primo Water and UiPath. How much potential to the upside do these names have?
I think they both have about 25 to 30%. That's really what we take a look at when we typically take a position in any kind of stock. UiPath being the first one. I mean, it's all around what we just talked about, artificial intelligence. They really help workflows within businesses. So think like the HubSpots of the world or the Slacks of the world, the ServiceNows of the world. They're implementing, the coding AI essentially to make the processes for businesses more efficient, right? Even like the Salesforces of the world as well. Very similar to kind of those kind of tech stocks, but it's also trading about a 10 to 15% discount compared to those. And it's also been investing in artificial intelligence for about 5 years and has a proven track record of their artificial intelligence. So this is kind of an under the radar, not kind of too cute name that a lot of people love. I think that since it's trading at a discount, 15, 20%, compared to its peers, has a really good artificial intelligence play to help small businesses, large corporations more efficient. Because I think roughly 70% of 70% of his executives out there said that AI-driven automation is here, and it's very important for them to implement. I think UiPaths is going to be a main player in that, and I think they're going to greatly benefit. In regards to Primo Water, this is another under the radar kind of not cute name again. where it's just water. Water is like a $27 billion industry here in the United States, and Primo Water has invested very heavily in growing out of the United States into Europe. I think one of the things that people don't know about Primo Water is they're a reoccurring revenue stock. So people love the reoccurring revenue side of things, and every corporation, a lot of corporations, I know we even have Primo Water, where you have those jugs of water that all the employees go to fill up, intraday to stay hydrated. Primo Water is essentially the player there. So you basically, they have people come around refilling this water for corporations, and it's a reoccurring revenue spot that actually generates a lot of cash flow, and they don't have a lot of debt outstanding. So the focus on Europe is going to drive the stock higher. We think it's going to be a 25 to 30% winner from here as they explore and expand that European focus.
Yeah. Luke, it's great to see you. Thank you so much. Luke Lloyd, Senior Wealth Advisor, Strategic Wealth Partners. Thanks, Luke, very much. Great to see you. Coming up, those magnificent 7 names. Of course, what's going on with Elon Musk and that surprise visit to China makes it the top performer now for Tesla in the S&P 500. How about some of the other names? Amazon, Apple, earnings expected this week. We'll be right back.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 to $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all of your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Knock, knock. #1 broker here for the #1 hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. I'm Nicole Petalides. We're watching the Magnificent Seven and so many other names. Of course, Mag 7 names are making headlines. For example, Tesla's the best performer in the S&P 500 with its full self-driving approval out of China. And Meta still under some pressure. I mean, in fact, that's one of the big laggards in the S&P 500 today, in the top 5 losers. So let's get to David Dietz, Managing Principal, Senior Portfolio Strategist, PPAC Private Wealth Management. Thank you for being with us. So I know you're watching all of these names and you have some reasons in your notes to be cautious on the markets. You also have some stock picks for us today. But let's start with the big picture. I mean, everybody's so focused on these names. Are there winners among them? Can you still find value in the Magnificent Seven? If so, which names?
Yes, I think you can. So our top name here, let's go right to the top, would be Meta Platforms. Now, why Meta Platforms? Obviously, they got spanked the other day, even though they had blowout numbers, beating on the top line, beating on the bottom line. But it was the degree of their capital expenditures on AI, exactly when that could yield them some profits, that spooked investors. Of course, the stock has been up about 80% over the recent past, so it was probably right for some profit taking. But here's the thing, it had tremendous echoes to me of a couple of years ago when they wanted to go big into metaverse. Well, they ultimately got hit hard by Wall Street too, and the stock price went down, and they scrambled. They were very agile, and they scaled back their metaverse ambitions, did the year of efficiency, and the stock came right back. So here, I think that they can win in either way. If they're successful in figuring out a way to monetize AI, and I wouldn't put anything past Mark Zuckerberg, he's the best CEO out there in terms of the Mag 7 in my book. Great. If not, they have shown the ability to come back and punt, basically scale back those AI ambitions, get more efficient again. And I think their underlying businesses where basically it's, digital advertising is so scalable and is so transferable across the globe, a world where 1/3 of the people still don't have internet access. I think it's blue skies ahead. Plus valuation matters. You're at the lowest valuation in terms of earnings per share of any of the Mag 7. So that's right at the top of my leaderboard here.
Yeah, look, I mean, you talk about what you like of Mark Zuckerberg. You seem to feel he's got a good road ahead. I mean, at the same time, you question the leadership sometimes of names like Tesla and Apple. Are either one of those a buy?
Well, so, Tesla, my hat always goes off to Elon Musk. And just recently in the news, of course, he pulled another rabbit out of the hat. He was the one that went over to China, got the big meeting, got the regulatory approvals to take have a key role in terms of rolling out self-driving in China, got a key partnership with that internet giant Baidu. My hat's off to him. However, here's a stock, of course, that's at 49 times earnings, almost double the PE of Meta. And of course, what really drove the stock the other day was his willingness to start making cheaper EVs. And I have to tell you, being in this business for a long time, I like to see companies have more expensive products with fatter margins. I don't want to see essentially a car company start competing with the Chevy Volt. I don't see the margins there. And so he may sell a lot of cars, but will he make a lot of money? Will he cheapen the brand name of Tesla in the process? That remains to be seen. Investors are in there because of the self-driving technology, but when is that going to happen? My experience with Wall Street is an impatient place. They don't want to wait 5 to 10 years to see the money hit the bottom line. And I think that's the problem for the Tesla investor today.
All right, let's get to some of the other names. You have BHP and Pfizer. Tell me about those two. How much do you think those can move higher?
Yeah, so Pfizer was a stock that was a company, of course, that together with Moderna got us out of the pandemic with this COVID-19 vaccine that partnered with the BioNTech on. At that point, investors loved Pfizer. The stock was well above 60. But investors now are like, well, where's the encore? And they've driven the stock down now to well below 30. Of course, you got a yield now of over 6%, 4 times the S&P 500. But I think what investors are overlooking is they do have a blue chip pipeline. They just bought Seagen, a $43 billion acquisition. It's going to give them a whole panoply of cancer-focused drugs, which, of course, is what the market wants to see. They've also got a blue chip sales force, not just in this country, but worldwide. They're going to be the partner of choice for smaller companies to join up with when they want exposure for whatever they find in their pipeline. And I think what investors are waiting for is their own weight loss remedy. I know they're working on it. Investors have been disappointed that only Novo and Eli Lilly have it for the most part. But if Pfizer can get a decent product to market, you're going to see this stock, it could certainly get back up to where it was during COVID-19, above 60.
Yeah, all right. So we'll watch for that because it's at $25 now. You said you like small caps, international, emerging markets, financials, real estate. Final thoughts on these groups? Why are some of these your preferred sectors?
It's all about valuation. I actually kind of like the market because as long as we don't see a recession, the earnings are going to carry the stocks up. The one wild card is recession. It's devastating really to the market when it occurs. The problem is it's so hard to figure out. But what the risk is, of course, you've got very high multiples on those large caps. So we're suggesting to investors to diversify overseas, diversifying to smaller caps, diversifying to value caps, where the valuations are more consistent with what history has shown them to be. And that way we think we can ride out if there's any volatility ahead because of bumps in the economy.
David Dietz, Pete Beck, Private Wealth Management. Thank you so much. Always great to have you on the show. Really appreciate it. Thank you. Still ahead, the offer of investing is your superpower. Joins me right here at the New York Stock Exchange and wants to help you to prepare for the investing approach that you should be taking this spring. We'll explain. We'll be right back.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets.
All right, let's see what we got going on here. There's something, check the dollar. Dollar. Bada bing, bada boom, bada bing, bada boom. Man, I'm like so close to. Oh, was there a auction? What time is it? It's 2:30. Yeah, they don't do that type of stuff this time. All right, so go over the. Let's go over some of the data. Delaware, Germany, Delaware. 2.2% right in line, just underneath. That's good. Good. Not sure if the dollar moved. You could check. Check. Treasury refund, financing estimates. Did not check that out either. 2:30. I wonder if that's what it is. 3 p.m. Treasury refunding, financing estimates. I gotta turn a fan on. My biggest fan. Hold up. So I don't know if that's a move to front run the move. That's the wrong button, gang. It's the wrong button. All right, throw a little fan in here. We holding out on the AC. It's not bad in here. It's kind of chilly. Not chilly, but it felt good last night. So I was able to capture it. When I go from outside to inside, it still feels nice and cool in here. Because I do have a cat. Treasury refunding. So I thought I just had the SPY up. Alright, so we just had a pullback here. Put in somewhat of a new low. And this is okay. It's no big deal. I don't think it is, at least. My thoughts were a test of 406 or 506. 507. 506, 507. Remember, like, months back when I was telling you guys, like, yo, we keep making this thing resistance, but back when we first got up to the 500s, if you go back and look, you might be able to do it on a 15-minute chart. I'm not sure. That's a nice bear flag there. You have some volume with it. And I'm thinking about grabbing some calls because we were hanging out nicely to... I was just getting ready to go over earnings and everything and kind of see where everything is at. The dollar's still hanging out. I feel like the dollar should get another pop up here to 105.8, 105.79, and then see if we can't get it to pull back a little more. What's gold doing? Let's go to like an hourly chart. Oh wow, this could be a nice little rejection for gold and get this thing to pull back to 2200. Let's go to treasuries, or the 10-year. 10-year is kind of pulling back. It's in an uptrend, but it's pulling back off of that level. And look, we put this box way back here, guys, to see, hey, if we would retest it. Here we are a year later, just about a year later, right up in that range again. So this wasn't not to be expected. Oh, come on, bro. Okay, so where am I at here? All right, so we have this coming up here at 3 o'clock. I wonder if they're getting in front of the move. So look at this bear flag you have here on the S&Ps. And you can see that this is a rollover. Like these rollovers right there, top left, you can see that that is definitely a rollover. I would look for some support down there at 507 if we could get there. I mean, you know what? Even 508. Now I know somebody's going to comment, well, you should have looked at the week. You should have looked at the monthly chart. You need to start doing this and that. I'm just playing, gang. I'm just playing with him. You know, I had to just mess around a little bit. You know what I mean? They want to try to poke fun at one trade that I watched the first day I watch it. But they don't want to talk about the other ones. They don't want to talk about stuff like that Tesla call today. Yeah. Let's see what happens. So that's a failure of the 20-day. What do we have? We have Friday's close, which is down here at like 508. All right, that's an area. We technically are still holding on to this 20-day. Let's see here. So if I pull this up, you have a nice base. Boom, down, up, down. Yeah, let's see if we can't. It's a nice little breakout. See if we can't pull it back and just like kind of hang out inside this area to 506 or so. But I don't think it's anything major. I really don't. I think you still have a little worry. I don't know if... Let's look at the earnings real quick. Because if we have like... I know we have like McDonald's, Starbucks, SMCI tomorrow and stuff like that. MicroStrategy at the end of the day. PayPal, Coca-Cola, McDonald's, 3M, Marathon tomorrow, Molson Coors. Alright, so it's not until... Okay, no, we have Amazon tomorrow after hours, along with AMD. Tomorrow's a pretty big earnings day. Tomorrow afternoon, going into the Fed meeting. This is going to be a wild week. Man, I would have kicked it off with Tesla. I'm so upset, bro. I almost did not leave just to take Tesla and pay up for it. I almost didn't go, but I had to go. I had to. Let me reset this. So, you know, you guys can see down here, even a 506 test is not, you know, that would be bullish. If we could just hold, right? Hold these levels. I will say this, there is a huge gap between the 50-day and the 100-day. That is almost a 495, 410, 15, 20 point, 15, 16, 17 point difference. So, yeah, let's see if we can't get this pullback here to like 506. And we do have a gap from Thursday. Last Wednesday into Thursday. So we have that. Here's the retest right now, guys. We're getting ready to find out what it's going to be. I gotta make this brighter or something, or like darker, so I can see the price action. I know it doesn't look that good, but here we go. Nice rejection there. That's a low volume bounce. This is a 3-minute, correct? Yes, it is. 1403. You guys can see, right? Watch them break above it. Watch them break the trade line and extend higher. That's a beautiful bear flag if I've ever seen one. I'll tell you that right now. Look at that. Look how beautiful that is. Boom. Boom. And then you get the breakout, false breakout, gets short, get that area to be resistance. But watch, it looks like it's trying to hold on to it. Looks like it's trying to hold on. If I see that pop, I knew it. I knew motherfuckers was going to try and take it right there, and it pops, shake and bake, and pull it back. Why is my volume bars getting screwed up? What is going on here? Is it really that low of a volume type of day to be doing all that? Yo, there's these random, like, high volume buys and sells. Like, the end of the day, Friday, like, look at the volume on that. That's wild. Look at it. Like, I can't even really put the volume, like, on my chart to be decent because it was so crazy. But we won't worry about that. Hi, Turkey. You say hello. Are you warm? Are you okay? I'm worried about her. I need to go ahead and I might turn on the AC for her for a little bit to cool it down in here. Okay, Daddy will turn it on. I know it's bad. I don't want you overheating, love. Are you saying hi? Alright. Let's see if we can't bust a move here, guys. Let's see if we can't bust a move. QQQ. Let's go back to the actual chart. Let's go back to the chart. So the Qs are making up their... Hey, come here. Come here. I know, sweetheart. Come say hi to everybody. You say hi. Daddy, little girl, come say hi to everybody. Say, get the money, gang. I need treats. I need treats. I need toys. I need nip. I need my nails did. You need your nails did, girlfriend? Alright. IWM. Alright, so are you okay? Daddy's gonna turn it on. I know. It's starting to, Daddy's noticing it's starting to get warm in here too, baby. Alright, so that's there. The Dow. Okay, so the Dow did get to the 20-day. There's no way I'm going to see that. I knew it. Oh, wow. It's all the way down here. What are you doing? What did everybody trade today? Oh my gosh. I'm sorry. Hold on. I don't even have the live chat up. Yo, I was really loving Tesla today. Again, the only reason I did not take it and pay up for it, and I told you guys to look for that thing to get close to that 20-day, if not put in like a 18, 17 to 20, you know, close to 20% type of day. And we were looking at the 200 calls for this week. They were right around, we saw, the lowest I saw them was like like in the 150s. And then they were hovering around 175, 180. You know, when I was out grabbing lunch, I went and looked at them. They were like 4 something, I think. Yeah, like right now they're 380. So that's actually what I've had here while I've been gone in the time and sales for those. And so we'll keep an eye on those for the rest of the week. Microsoft was pretty weak today, in my opinion. So let's keep an eye out for this treasury stuff. You know, this is technically holding the level, but I'll tell you what, man. What other stocks are red like this? There's a lot of stuff red. Let's go to the heat map so we can get an idea on what is going on today. Google's down. So Apple's up. Tesla. Apple and Tesla were your stronger names today. Obviously Baidu, I'm sure. Yeah, look, Baidu is up 6%. I was looking at Alibaba. Verizon. I was looking at Alibaba yesterday, but I just couldn't. Copper, FCX. Freeport. Is that who? I didn't know Freeport. Yeah, Freeport McMoran did copper. I thought they did like gold and stuff. I thought they did like a lot of different stuff. I thought they were like metal, and I guess you could consider copper. Copper is a metal, but y'all know what I mean. Banks are weak. Take notice. A lot of things are weak, even energy. Like things are turning. Like this is a picture of flat. Not up, not down, but we just came from a nice week. We may start to turn it around, and look, what's green? Utilities, safety, copper. It ain't safe, it ain't safe. Let's go look at the scanner, see what we got going on. I want to find out more about this treasury stuff. I don't know if it's something even to look at, but with the SPY selling off like it did there, was not like it sold off, but like if we can just get some type of bounce, guys, I really want to look at some calls, but you have to understand 402.50. I got to get above it in order for me to want to do that. The volume is clearly been to the downside after earnings.
Income from operations 18.6 and then net income over 20. Those look great, except if you dig in, you'll see that a lot of that is due to the increase in U.S. Franchise and royalty fees. Also, they had a little bit of increase due to the better than expected supply chain issues that they've seen in the past. But our big reason for staying away from this name is the debt. $5 billion in debt, $2 billion in total assets, and then it looks like they've got about $700 million looking to roll in 2025. It's also not cheap. 28 times.
Sorry, hold on one second. Let me just go ahead. I'm gonna bring up
28 times for pizza. Next up, SoFi Technologies. That one, despite posting a better than expected earnings for the first quarter, shares.
I'm gonna go ahead and just bring up the SPY.
10% today after a disappointing outlook.
I'm gonna clean these charts later on tonight and just delete them. Delete all the lines. I thought about buying that dip too. Part of me wanted it, but I wasn't gonna make that much money off of it. I mean, I don't know. Let's see.
It's still a bank, and it trades pretty rich, 1.3 times book, which is traditionally the way banks will trade. I'll give them the extra, value due to having some increased technology and growing their user base. But at the end of the day, it's still a bank, and unfortunately, at these levels.
Yeah, let's go look at. Did anybody look at regionals today, like KRE or anything? Did anybody look at credit default swaps for any of these banks? Y'all on your grind or what? Huh? Y'all looking for that opportunity or what? It's all good. I got y'all. I'll do it. I'll do it. I'll put in the work. Boots on the ground, baby. Boots on the ground. Yes, I am repeating myself because I'm warm. I'm tired. And this. Let me do this. And let me do that. So let me do this. Do that to do this, to do this, to do that. That's what we're doing here. All right. So where are we? What am I looking at? KRE. KRE. I wonder if this is the start of a possible downside move. It's already sold off a bit here. Consolidated, I should say.
Thank you very much, Quint Tatro. We're going to take a quick break.
I've always been driven to get my money back. As a kid, I watched my mom struggle financially. Her sacrifice allowed me to pursue my dreams, to create generational wealth. I'm partnering with SoFi because they care about making your money work for your ambitions, just like my mom did for me. Recognize a generational player. Join the official bank of the NBA, SoFi. Get your money right.
I was just watching this SoFi commercial. Alright, so KRE. What did everybody trade today? I need to take that off. Okay, so you have this area right here. I'm going to delete these. I'm deleting these right now. Gone. Y'all are done. Get it gone. Get rid of that. Now, the reason I'm looking at this because I guess there's a bank near me in my area that kind of got taken over. The feds crashed a place, and they took over. Give me 1 second. Hold on. HWH.
I have time to give. And a million stories to share. If that's not rich, I don't know what is.
The key to being rich is knowing what counts.
Welcome back, everybody. The AI gold rush has sent chip stocks soaring. Nvidia up 200% in the past year. Supermicro 750%. But don't worry if you missed the boat on those. There may be other AI opportunities far removed from chips, and Seema Modi's been looking at some of the industrial names.
Tyler Leslie, to make big tech's AI ambitions a reality, one of the most vital tasks is preventing data centers from overheating, which can result in damage and stress on the system. That's where cooling technologies manufactured by Carrier Global, who Quinn just mentioned, Trane Technologies, and Johnson Controls play a role. Analysts at Melius Research also point to their top pick, Parker Hannifin, which specializes in a fluid connector. Dover's industrial-style pumps used in liquid cooling. You'll see both stocks are up double digits this year. Jefferies analysts point to Caterpillar and Cummins backup power engines that nearly all data center players use. While GE Vernova CEO Scott Strazak shared with me its smart grid business is also benefiting from the AI craze. Just in the past quarter, the recently spun off company saw increased demand for high voltage switchgear equipment and transformers both in the
Wow, it's
US
fucking hot in here. Let me go get this real quick. I'll be right back, okay? Just give me 1 second, guys. I'm sorry. If you guys have questions, throw them in the chat. Hit the like button, subscribe if you haven't already done so. Leave me comments. Let me know what I can do better, like talking to you guys right now and figuring out what's going on with this 3 o'clock data set. So watch the market. Things are about to get a little froggy. They could get froggy at 3 o'clock. On the dot, I'm in my drop top. Y'all ain't know. Y'all didn't know I had that in me, huh? All right, let's see. You're gonna rip up, man. Just like this rip through these areas of like. So I'm watching 509.80 ish. 509.80 ish. 509.80 ish. Nah, we'll call it. Yeah, we'll go with that. There's a little gap here between like 509.60. 509.80. So there's like a 20-cent gap there on the S&Ps. That is, I'm talking about the S&Ps here. You guys can see it right there. I love how they use the excuse. It's not as big as them. Okay, and that's good. Just because they're big doesn't mean that it ain't happening to them. Bro, if it's happened to the small ones, it's happening to the big ones too. I promise. I promise.
Thanks for watching Power Lunch, everybody. Closing bell starts right now.
All right, let's close it. Whoa, whoa. Look at that, gang. What the heck? Hold up. I need to grab something to drink. Just give me a second. I gotta grab some water. Dude, the SPY. That treasury stuff, I'm telling you, that's what it's moving on. Let's see. Talk of the tape. Let's see if they cover it. Let's ask Dan Greenhouse. Let's ask him.
Higher following the best week since November. Even as cautious comments continue to flood the street today, we'll ask our experts over this final stretch whether that's warranted or not, as another big week is about to heat up. In the meantime, your scorecard with 60 minutes to go and regulation looks like that's. We are green across the board, and it's Goldman and Boeing among the names leading the Dow today. Apple is too, after an influential analyst comes off the sidelines for the first time in some 6 years. He upgrades the stock. Interest rates, they're slipping today, probably helping with those green arrows. There's your treasury curve today. It does take us to our talk of the tape. Rising stocks, falling sentiment, and what that tells us about where the markets might be heading. Let's ask Dan Greenhouse of Solus Alternative Asset Management with me here at Post 9. Welcome back.
Thank you, sir.
That's interesting to me that we have this resilient market coming off the best week since November, stocks rising again, and I feel like sentiment is slipping, deteriorating. Is yours? Are you bullish still or less so? What's the story?
I think I feel pretty much the same. We had talked the last couple of weeks that the market was, I hate saying due for a correction because that of course means nothing, but it felt like the internal technicals suggested that perhaps we were running out of steam, and we did, and we were down, call it a little over 5%. I thought we were probably going to get down 6 or 7%. That would have been a more substantial decline, although really what's the difference between 5 and 7%? We're splitting hairs here, but it feels like the market wants to stabilize at this level. Earnings season is coming pretty well, but obviously you have the Fed on the horizon, and that's sort of a
a broader damper.
I mean, I've got, technicians out today saying, well, we're going to fail and turn lower. RBC says the pullback may not be over. JP Morgan's looking at summer drawdown risk, looking at a year ago and saying, maybe we're going to be in a similar scenario. That's sort of to my point of, well, I mean, the market bounced back pretty sharply, but yet it feels like sentiment is offsides.
Well, I think we spent 2 or 3 months going straight up. And all of a sudden we were down 5%. All of a sudden may not be the right way to put it, but
it felt like that, though.
It did. And I think people got a little shook, and there's a feeling like, as I just articulated, maybe we need a little more than a 5% pullback. And so the fact that the pullback is, quote, only going to be 4% or 5% or 5.5% might be insufficient for a lot of people, which is why they may feel like I need a little more.
I want you to listen to something that Adam Parker told me today on halftime about his new note. The headline is, and then we'll play the sound, the headline, our recommendation had been that the bull case was far more probable than the bear case, driving our judgment that there was material upside to the S&P 500, but now our view has changed. He told me why.
The 3 pillars to the bull case were easy financial conditions, gross margins expanding, and a belief that earnings are going to grow. The 3 pushbacks we always worried about were kind of a tightening set of conditions, slowing consumer, and a China recovery that's pumped. We could get some cyclical pressure on inflation a little bit. 2, the consumer is definitely slowing, and you can see that through some of the corporate earnings and macro variables. And then 3rd, we scoured every word of every earnings call transcript year to date for any mention of China growth, China demand, China initiatives, and it really hasn't picked up.
What do you make of this? Do you think the 3 pillars, to use his phrase, are weakening?
I understand what Adam's getting at, and Adam's obviously one of the best market watchers there is. I mean, my view of things is over the last week and change, let's say, revenue expectations with reporters has only gone up, called 50 basis points, but EPS expectations have jumped by well over 200 basis points. So from the margin standpoint for the market as a whole, you've seen some support right here. Now, granted, a lot of the heavy lifting last week was done by Meta and Google, et cetera, very large companies. But when you look up and down the spectrum of sectors, I don't really notice, other than healthcare, which is suffering from the Bristol-Myers issue that I think most people know about by now, most of the sectors seem to be holding in there pretty well on an EPS expectations basis. And that, I think, has a lot to do with margins. So at least from that standpoint, I think the market's doing pretty well.
Pasquarello over at Goldman put a note out that says, he expects the market to chop around a bit. You're going to have, maybe volatility pick up a little bit. He says, quote, there's times to go for the brake and times to go for the gas. Superficially, my instinct is equity people should be tapping the brakes. Yeah, now, this is a person who's been pretty bullish, too.
Sure. And listen, I think Tony's great, and I think he's probably right. And what I'm leaving aside what Solis is doing with the fund or not, when you look at the size and the scope and the scale of the rally off the October lows, and then you layer on top of it the stickiness of inflation and what will probably be an ongoing shift in the Fed's narrative coming from Jay Powell at the meeting later this week, I wouldn't be surprised to see some dampener on the market for a little period of time.
Is that what you think? You're going to get a change in tone or a change in language?
Well, I think you've already had it. I think what it's shifting to the Fed meeting later this week, and we're going to bring in someone else.
It starts tomorrow, so it's right. Going to be front and center here.
Sure. But I think it's going to be hard for him to say, as he had been arguing, that the data was going to shift in a way to give them confidence that inflation was returning back to 2%. And when he has the press conference on Wednesday, my expectation, and I think everyone's expectation, is that he'll make a dissimilar comment, which is that he doesn't have that confidence right now, and that's going to continue the shift in the narrative away from we want to cut by, or what sounded to us like we want to cut by the summer, to something that'll be interpreted as we just don't have enough data to cut by the summer.
Well, I mean, let's bring in our expert, Steve Leisman, our senior economics correspondent. So, Steve, how about that? Are we expecting a change in language from Chair Powell this week? Are we going to hear things like a lack of confidence that we're heading back towards the level we need to be?
Yeah, I think he has to skew more hawkish about the current data. But I got to throw something back at Dan, because I actually don't know the answer to this. The thing I'm interested in here, Scott, is and this may sound second derivative, but does Powell have the confidence that he will get the confidence? In other words, does his forecast remain that inflation will come down in the future? That is the forecast of the FOMC. Do they feel secure about that? And so it's really not a matter of are they abandoning cuts, because I don't think they're doing that. I think what they're doing is they're delaying them. I think there's a big difference in that for the market. So I suspect he's going to hold on to the confidence that he has inflation will be coming down. I don't know if he'll put a time period on that. I don't think he'll abandon that. What he will do is skew more hawkish in terms of not having the confidence right now.
So then why don't you come back then at least? I mean, if he does skew more hawkish, what happens to stocks?
Well, first of all, I think everything Steve just articulated is largely correct. The confidence is not there, and it's amazing that even one data point like the March CPI is sufficient to cause that shift, but I don't think he has the confidence now.
PCE is different than CPI.
It is most certainly different and much more relevant.
More on PCE if that's what the Fed focuses on. Why are we still fixated on the last three CPIs?
I think, and I imagine Steve would agree, obviously the PCE coming in more or less quote unquote in line is very helpful, and it could have been a much more difficult conversation right now if PCE had been 0.4, let's say, instead of 0.3.
Well, I'll say so.
Sure, but I think, and I imagine Steve, you'll agree, it's the totality of the data, and so I think when you put the PCE along with the CPI and the idea that the economy is holding up, I think they're going to come down on the side of what's the rush.
I'll tell you where I'm working now, Scott, in terms of my thinking, is the idea that has he now, look, you go back a couple years to Jackson Hole and maybe a little before that, Powell was fairly convinced the economy had to slow below potential in order to bring inflation down. That didn't need to happen and didn't happen. And now we get to this last mile question. And I'm wondering right now if Powell's at a point where, hey, we can't do it. And I will tell you, we asked this question in the Fed survey, and we said, do you think we can get to the target, can the Fed get to the target without below potential growth and without the unemployment rate rising by half a point? And 50% say no, we can't do it without those things happening. So that may be where we are right now. And I don't know, and hopefully we can explore on Wednesday the evolution of the chair's thinking that, hey, we got this first part. It was mostly and largely supply chain improvement with a little bit of Fed tightening on top of it. And now it's all going to be on Fed tightening. And if that economy does not run, remember, Scott, today in our poll or survey, look, it's opening days or the opening bidding on the Q2 numbers. But basically, we're looking at still above potential growth for the second quarter here. And that's been a string of above potential growth. So I don't know if we can get back to that 2% target without that. And I don't know if the chair believes that yet.
Wow, I mean, then you're potentially saying we could be setting ourselves up for another 8 minutes of hawkish. I mean, that's alluding back to what you were suggesting about that now famous Jackson Hole speech, which I think was like literally 8 minutes long, but that's all it had to be because the Fed chair was as hawkish as he could possibly be within those 8 minutes.
Yeah, that's right. I don't know if he's going to be 8 minutes on it. I don't know if he's gotten there yet, but there are a couple people out there. I mean, Barry Knapp had a nice comment in our survey where he said, look, we can't do it without fiscal tightening, or at least less fiscal input here. And guess what? The chair won't say anything about that and has no control over that. So if the fiscal deficits are going to run the way they are, and if that indeed is a major source of the inflation, the Fed chair has to deal with that. He's going to have to lean against that. That just appears to be a reality, which brings me to another topic that we probably shouldn't miss. We might get a QT announcement about slowing QT on Wednesday, and we get maybe an equally significant Treasury funding announcement. So, Scott, whatever you're going to be drinking Wednesday morning in terms of coffee, I would double it up and be prepared and put your seatbelt on. It's going to be an interesting day.
Well, I mean, I'm looking right as we speak. I think this just moved on these Treasury quarterly financing estimates about the number to which they're going to have to borrow, and they look to me to be higher than prior estimates. And I wonder if that's why the stock market's lost like 100 points almost in the last 5 minutes, and the S&P now is, I don't know, about a range of a 10-point swing. It was up, and now it's lower too. So, I mean, I guess the point, Steve, is there are a lot of moving targets on a lot of different things.
It is a multivariate equation, and Dan Greenhouse will smile when I say that, I believe. And the Fed is really just one of them. And not only, you have the one good thing we have going, Scott, is when I look at the economy, My assessment at this moment is we have risks, but there do not at the moment appear to be evident weaknesses. I know you had Parker on talking about the weakness of the consumer. Well, you don't see that in the March consumer spending data that the government put out. You don't see it necessarily in our CNBC retail monitor or some of the other things. Yeah, there is some talk about the weak consumer, but we've had that talk for quite a long time. There are risks out there, but not weaknesses. And so all of that is part of the reason why I think the Fed can lean hawkish and will lean hawkish and keep this idea of these higher rates, which, by the way, don't forget, they are restrictive. They are very restrictive. And there's an argument that the Fed could trim a little bit without really have much effect on that restrictiveness. It just won't because of the optics of it.
Yeah, just to give more context to the headline at the bottom of the screen, too. I mean, I remember the last estimate that came out was below expectations, and that maybe took a bit of a simmer off of where yields were going, and the stock market definitely got a jump on that, because I remember I was here doing the show the day that happened. So it works both ways. If the estimates come in above the funding estimate, you're going to have a little bit of leakage in the market, but we'll follow it. Steve, the next couple days are going to be interesting. You'll be all over it, and we'll hear a lot from you, and I look forward to that. That's Steve Leisman. Let's bring in Shannon Sakosha now, Neuberger Berman, NB Private Wealth Chief Investment Officer. It's nice to see you as well. So, game out this market in what is a especially pivotal week yet again, the busiest of earnings season, Fed meeting, jobs report, everything.
Yeah, there's tons of push and pull here, Scott. So it's macro versus micro, it's past versus future. Coming into this earnings season, it wasn't all that demanding from a top line and bottom line perspective. And so when we think about what the market was really looking for, is that we've been looking for that guidance. And so a lot of people are pointing to earnings season not being that bad and probably better than expected. Yada, yada, yada. We see that all the time, especially on the bottom line, and especially with a lot of the cost cutting that's gone on over the last 12 months. But if you look forward, we're really looking at guidance. And, what are people guiding for? Are they guiding for this reacceleration of manufacturing? Are they guiding for middle income and high income consumers to remain engaged? And I think when you think about the Fed, Powell can go hawkish in the Wednesday meeting. In our view, he's not going to hike rates, right? Whether we're at peak rates from a Fed perspective in our view. And so I think that it's the pace that you talked about, confidence. The confidence is going to come with not the past, not the Q1 GDP number. It's going to come in some of this data that's coming on a week by week basis. PPI was lower, was in line. You talked about PCE already. You're looking at reacceleration in the manufacturing economy. Does that offset the consumer? I think that, prospectively, we need to think about where are earnings going to go, and more importantly, with inflation a little bit stickier, Scott, maybe we don't see those top line declines. Maybe the comps aren't quite as bad as they were, given the fact that we're going to see a little bit of that upward pressure on the top line.
I get it, but so then distill all that down to me on what your market view is now, and whether you agree with an Adam Parker who says, the bull case was far more probable than the bear case, driving our judgment that there was material upside. I'm quoting from his note yet again. Our views changed. Pasquarello, as I said again, I'll read to you. Times to go for the brake, times to go for the gas. My instinct is equity people should be tapping the brakes. Have things changed even incrementally or not?
In the short term, I think that as we get further along in earnings season, Scott, there is more risk to the equity market. Earnings keep investors in their seats. They can look at the results, they can read through to the micro, and they get a better sense. Once we get out of earnings season, we get into that no man's land. And frankly, that no man's land is the Fed going to cut? Do they feel really concerned? What is this next economic data point? And the Fed has really backed us into that thinking. So outside of earnings season, we're being just as data dependent as the Fed is. And that's not good for the equity market. We need to keep a longer term view. The second half in areas like financials, banks in particular, is slated to be stronger. But if everyone is thinking about what does it mean the next few weeks, yes, at the end of earnings season, that macro takes over. And right now, macro isn't that supportive, especially with the Fed not having that confidence.
Shannon, I'm going to disagree with you, because I think the idea that somehow the market being more data dependent is a bad thing would be true if the data was moving in the wrong direction or wasn't good. And right now, as Steve alluded to earlier, you've got stronger than expected GDP. Earnings season, as you mentioned and I mentioned, is going better than expected. Steve talked about some of the strength in the consumer. You're also not hearing any weakness from Visa or American Express, who reported about the consumer. So I think to the extent that we move past the next Fed meeting, obviously inflation is going to be a concern, and that's something to which we have to pay attention. But the data underlying the growth in the economy and the data boosting the stock market has been, for lack of a better word, pretty darn good. And I don't, at the risk of starting an argument here, I don't know why focusing on that better than expected data and strong data would be a bad thing for investors.
Because the S&P 500 is dominated, continues to be concentrated in the top end of stocks that sell at a higher than much higher average valuation. And so for me, it's a multiple perspective. The multiples for that higher end of stocks, which are impacted by rates, which are impacted by inflation, that's where you're seeing that shorter term weakness. And I think that if you look at the overall valuation of the market, that's where equity bears are going to pin their concerns because of this concern about inflation. So I don't disagree with you. The fundamentals of the underlying economy are still strong. I disagree in some ways with Adam in terms of the consumer. Yes, credit card delinquencies have moved up, but auto loan delinquencies have not. They are not back to pre-pandemic levels, even though credit cards are. So there is an undercurrent of growth. And to be fair, and Steve made this point last week, Scott, on the show when you weren't there, we wanted growth to slow down a little bit. Like, this is a more supportive environment for inflation. But I do disagree. I think that as long as the market is looking at CPI, I think that's going to be an issue in terms of adding some additional volatility to the equity market.
I mean, bears would have you believe that growth is slowing too fast, inflation is getting too sticky, mega caps are overvalued, blah, blah, blah. And at each sort of train stop on the way, the trains left the station without them. I'm looking at Nick Timmeros right now, Wall Street Journal, okay, puts on social media some 13 minutes ago. The New York Fed's measure of inflation persistence, okay, declined to 2.6% in March, from a downwardly revised 2.7% in February, and from 3% in January. So don't tell me that we've got some, overly either sticky inflation problem or the fact that we're trying to tick in the other direction, because at least by some measures, it's not happening. And inflation is still trending, by virtue even what the PCE reported, in the right direction. Yet, you have the naysayers who look at the CPI, the last few, and say, see, I told you.
And let me add.
Yeah,
I'm sorry, Shannon. I meant to address that to you specifically.
Oh, okay. Thank you. Scott, clearly, if you look at what we think inflation is going to be lower by the end of the year. The challenge right now is that we started with 6 to 8 rate cuts in November and December. Then we went to 4, and now we're, little under 2 for expectations. And so I think that there are still folks in the equity market that are looking at the potential for rate cuts to be the accelerant or the justification for some areas that.
I'm trying to figure out, is that bad that we've taken down the number of rate cuts?
The market went up 20% the whole time.
No, absolutely
We've taken up the expectations on the economy.
Yes, and I think that is where, if you look at that tipping point, we're in this tipping point where the second half of the year is likely to continue to be supported by the trend of improving economic growth, perhaps not as hot, because there is likely to be some slowing, but that slowing will allow the Fed the latitude to be able to move. And so our view is that by the end of the year, interest rates will be lower, the economy will continue to be positive, and that we won't see a sharp uptick in unemployment. However, in this very short-term period, which, Scott, is what you asked me about, I think that there could be some volatility in this period between now and, say, mid-June.
Listen, Shannon's right about a lot of what you just said. I agree with a lot of it. The one thing I'll just reiterate from before about the larger stocks and interest rates, the reason why you care about interest rates and tech stocks is because they are what everyone jokingly calls longer duration assets. What does that mean for investors? It means your earnings are further out in the future. So if you are a riskier stock and more of the value of your company is in the terminal value, then lower interest rates is better. But for a Microsoft, for a Google, for a Meta, all of whom reported 17 20, 25% EPS and revenue growth, there's earnings right now. In the case of Google, obviously now you have a dividend. There's cash return that happens right now, and those companies are much less susceptible to interest rates. And I would just argue, and I don't think Shannon necessarily disagrees, that in this type of an environment, those companies should get a premium multiple to the market. And to be clear, in the case of Meta and Google, the broad market's trading at, let's just call it 20 times forward earnings. Google and Meta are trading at like 22 or 23 times forward earnings. So it's not exactly, the group as a whole is not exactly screamingly expensive relative to a market which is trading by itself above its previous multiples. So I think, and again, I don't think Shannon disagrees, I think there is something to be said for those stocks getting a premium multiple, being insulated from the interest rate environment, the data underneath the economy and the stock market being relatively strong. And while I agree with Shannon, and I said earlier, you're probably going to have a bit of a choppy moment here while we sort out the Fed and the inflation story. At the end of the day, if those tailwinds remain in place, then all else equal, the bias for stock prices and risk assets should be to the upside.
Shannon, last word.
Yeah, listen, with the shorter term versus longer term, by the end of the year, rates are lower. We think growth remains intact, and our view is that there are opportunities. We just think those opportunities are in sectors outside of big cap tech, and I felt that way for some time.
So I'm just going to ask you one more question then, because I feel like it's open. It's left open. By the end of the year, if you want to talk about where rates are going to be by the end of the year, or rate cuts and what have you, where's the S&P? Is it higher or lower than 5,100?
I think there's a possibility that it remains higher. I mean, that could go higher, but I think that it really relies on the fact that we need to see kind of this economy remain in this consistent groove. And I think that this manufacturing uptick, Scott, that we don't talk nearly enough about globally, I think that's going to be a helpful catalyst to some of these more cyclical sectors.
Shannon, we'll leave it there. Thank you, Shannon Sikoshis, Dan Greenhouse. Appreciate it as well. To Christina Partsenevelos now for a look at the key stocks she's watching into the close. Hi, Christina.
Hi, Scott. Well, consumer fintech company SoFi plunged today, even after beating the street's expectations for the first quarter. And you're wondering, why is the stock down 11%? Well, Wall Street was looking for second quarter revenues about $580 million. But SoFi said they can only expect to post revenues of a range of 555 to 565 million. All you need to know is a lot less than what the street was anticipating. The company saying that 2024 remains a, quote, transitional year. Hence that 11% drop. Domino's may be used to putting toppings on its pizza, but today they topped Wall Street earnings estimates for the first quarter while posting revenues that were in line with estimates. U.S. same-store sales grew 5.6% during the quarter, which the CEO attributed to the company's 5-year Hungry for More plan. Investors are clearly hungry for more of this company. You can see shares up 5%. Scott?
All right, we'll see you in a bit. Christina, thank you. Christina Partsenevelos. We're just getting started. Up next, navigating the tech trade. It's a big week again. Amazon and Apple results are front and center this week. Plexo Capital's Lo Tony standing by with what he's going to be watching from those reports. Joins us right after this break.
Shares spiking here, 60.84 now. The company was the subject of takeover rumors. No news as of yet.
Which has been built with the same sort of craftsmanship and performance as an elite sports car. For complete website and digital solutions, go to AmericanEagle.com.
As an independent financial advisor, my promise to you is simple. As a fiduciary, I promise to put your interest first. Always.
I promise that our relationship will go well beyond just investment decisions.
It's the intersection of your money and your life where we can make the biggest difference.
Charles Schwab is proud to support the independent financial advisors who are passionately dedicated to helping people achieve their financial goals. Visit findyourindependengadvisor.com.
It's a beautiful day to fly.
We can see right through them. Ooh, a window joke. So funny. She's such a pain in the glass. I guess living over there isn't all it's cracked up to be.
It's All American Roofing Spring Sale. Install your new windows now and pay later with no payments and no interest until 2025, or save up to $300 per window.
Looks like it's DSLR. All-American Roofing.
NASDAQ giving up earlier gains, hovering just above the flat line this hour despite a boost from Apple this morning. That stock climbing after getting an upgrade from Bernstein. An analyst there who was on the sidelines for some 6 years, upgrading that stock today. We are keeping a close eye on both Apple and Amazon ahead of this week's earnings report. Here to discuss, Plexo Capital's Loeb Tony, a CNBC contributor. Welcome back.
Thanks for having me.
So before we look ahead, let's look back. I mean, what was your takeaway from last week from these big tech reports that came out?
Well, like I said, AI means both artificial intelligence and additional income. And what we saw, I think, from the big three that I focused in on in Alphabet, Microsoft, and Meta, the first two, Alphabet and Microsoft.
NASDAQ giving up earlier gains, hovering just above the flat line this hour despite a boost from Apple this morning. That stock climbing after getting an upgrade from Bernstein. An analyst there who was on the sidelines for some 6 years, upgrading that stock today. We are keeping a close eye on both Apple and Amazon ahead of this week's earnings report. Here to discuss, Plexo Capital's Loeb Tony, a CNBC contributor. Welcome back.
Thanks for having me.
So before we look ahead, let's look back. I mean, what was your takeaway from last week from these big tech reports that came out?
Well, like I said, AI means both artificial intelligence and additional income. And what we saw, I think, from the big three that I focused in on in Alphabet, Microsoft, and Meta, the first two, Alphabet and Microsoft, really delivered, and I think they've given a very clear articulation of how they're looking at the opportunity in AI to drive revenues, and at the same time have really articulated a little more clarity around how the return on investment from the investments that they're making into their infrastructure to support AI are going to play out. Now, I think even though Meta did deliver great returns, the lack of clarity around how their investments are going to drive additional revenue, I think, needs to be further understood. In fact, when you look at Meta, they announced that they're going to invest an additional $5 billion or so into infrastructure, kind of bringing that to about $37 billion for the year. And I think investors are having this eerie sense of reflecting back to what happened to Meta stock when they announced heavy investments for AI, the artificial, the virtual reality, right? And so I think this metaverse investment that Meta did that didn't quite play out yet, I think investors are looking at AI now and wanting to just have more clarity from Meta around how those investments are going to drive growth.
Was Alphabet the standout? And I ask you that also. I mean, the fact the stock's up 10% over the past month. And also, it continues to trade at what some would suggest is a much more reasonable valuation than some of these other names with, not nearly as much of a premium as a couple other names that you could easily point out.
Yeah, no question. That's a great insight, Scott. Well, look, first of all, it doesn't help when a dividend is announced along with a share buyback. But putting that aside, I think looking at the comments around the CEO for the infrastructure that Alphabet has across its business units, they're very bullish that that's the best infrastructure in the business to be able to deliver on the promise for AI. So I think going back to your comment, yeah, I think Alphabet is very well positioned and, again, has clearly articulated a return on investment strategy that we feel will deliver at least a 50% return on investment on an annualized basis. Look, I think it also shows that the search business, the YouTube business, those core businesses for the revenue drivers and income drivers for Alphabet are showing a lot of resiliency. And, as we look towards this environment where we may see, increasing or at least no rate cuts, normally, that environment is devastating for growth companies. But, as your guest alluded to, that's because a lot of these,
revenue streams are on the back end. But when you look at a company like Alphabet, they're delivering cash flows with the dividend share buyback and delivering revenue right now. So I think it's very well positioned.
Let's talk Amazon and then Apple. But what are your expectations here from Amazon this week?
Yeah, I think Amazon is going to deliver solid results. I think what the market's looking for and everything that I'm seeing is, the analysts feel like there's more that could be delivered from Amazon stock. And when you look at the fundamentals, I would have to agree. I think there's more that Amazon can deliver based on, what we're seeing with these trends at some of these other companies around the cloud business.
And then Apple, which I mentioned at the very top of our program, gets this upgrade today by Tony Sacconaghi over at Bernstein, who hasn't had a buy or outperform on that stock low in 6 years, but finally comes off the sidelines and says, quote, buy the fear.
Yeah, well, there's definitely a lot to fear when just thinking about well, look, first of all, I mean, the analysts are expecting probably $1.50 on a little over $90 billion in top line. And those are solid numbers, but there's a little bit of a drag because of what's happening in China. I think the interesting takeaway that I had from the Bernstein analyst was, a lot of people are concerned that this drag in China is because of shifting consumer behavior, especially amongst the younger audience, coupled with the fact that some of the domestic manufacturers in China have really made strides to add 5G technology along with more advanced features that are at a price point which competes with some of the lower end iPhones that Apple is selling in China. Now, this Bernstein analyst has more of a contrarian view. He doesn't, kind of feel that he feels that that's just cyclical, right? A lot of that is because of the pressure that the Chinese economy is under, and kind of once that pressure is relieved, then the consumer's taste will shift back towards this higher end price point that iPhone delivers. I'm not sure. I think if we think about the cycle, we didn't really see a lot of consumer demand from the 5G upgrade. It was really more of the push from Apple to make sure that the functionality, the foundational functionality will be in place once some killer apps come through, maybe in the form of artificial reality. We'll have to look at those vision numbers, but perhaps we'll see a return to normalcy with this next upgrade cycle when much anticipated will be some of the AI functionality built into the phones. Maybe that will have a little bit more of a consumer pull.
Going to be a fun week. Thanks for previewing
Absolutely.
it. Lo, I appreciate it. We'll see you soon. Lo, Tony.
Sounds good. Take care.
Up next, was last week's choppy trading just a temporary setback or a sign of a bigger pullback ahead? Top technician Jeff DeGraff will give us his take just after the break.
I will never again lose to my brother, decided Asa, because I've switched to consumer cellular, and now I get the same coverage he's got for up to half the cost. I'm the one who wins. Birds, when freedom calls, we're here to answer.
What makes a comfortable retirement? It's having the money to retire on your terms. That means having a smart plan for how your money is invested, how long it needs to last, and perhaps where it will go when you're gone. Creating a retirement plan with Fisher Investments gives you the confidence your money will last throughout your retirement, or perhaps become a legacy. You'll also have a team of specialists in investing, retirement income, estate planning, and more.
Call for your free Fisher Retire Right Kit. 3 guides to retirement income, paying for health care, and providing peace of mind for your loved ones. Call now, 1-800-340-6251.
If you're planning to retire or already there, Fisher has the answers you need, and our fees are structured so we do better when you do better.
Call for your free Fisher Retire Right Kit. Call now, 1-800-340-6251.
Shouldn't you retire the way you choose? If your portfolio is $500,000 or more, call us today.
Doorbusters here!
Granting up to a $45,000 cash voucher study was sold for the Class E3.
They must have ordered 1 inch by 2 inches.
That's Samuel.
I hate it. I wish I had my angry eyebrows on.
told him to use Uprinting. The people at uprinting.com don't just help you print, they help you print like a pro. So whether you want to impress your fans or grow your business, choose Uprinting. When it has to be right the first.
Mullen, more highs now up 73% at the high. Michael, uniform in November.
Mizuho was there. The Hawaiian Clean Energy deal. We were there too. Anywhere you need a corporate and investment bank, we're there. Mizuho Americas. A name worth knowing.
The S&P coming off its best week of the year, still on track though to snap a 5-month win streak as investors debate whether the pullback from the March highs has run its course. Joining us now, Jeff DeGraff. He's the chairman and head of technical research at Renaissance Macro. It's good to see you again. You look at this snapback, we'll call it the bounce. Do you believe in it? Should we, from a technical standpoint?
Well, I think so, Scott. I mean, it's not a lock. There's three things that we look for a good, what we call tactical lows in an uptrend, and no doubt we're still in an uptrend, so that's the good news. We look for an external oversold condition. We look for an internal oversold condition, which both of those we've had. And then we like to see a sentiment flush. We like to see a rise in put-call ratios and some of the other high-frequency data, which we haven't really seen. But we did get that external
Knowing.
The S&P coming off its best week of the year, still on track, though, to snap a 5-month win streak as investors debate whether the pullback from the March highs has run its course. Joining us now, Jeff DeGraff. He's the chairman and head of technical research at Renaissance Macro. It's good to see you again. You look at this snapback, we'll call it the bounce. Do you believe in it? Should we, from a technical standpoint?
Well, I think so, Scott. I mean, it's not a lock. There's three things that we look for a good, what we call tactical lows in an uptrend, and no doubt we're still in an uptrend, so that's the good news. We look for an external oversold condition. We look for an internal oversold condition, which both of those we've had. And then we like to see a sentiment flush. We like to see a rise in put-call ratios and some of the other high-frequency data, which we haven't really seen. But we did get that external oversold condition. Our oscillator got down to an oversold level that usually provides some type of bounce. I think the risk is when you're in an uptrend, if you wait for all three conditions, it's great to have them. It obviously improves the probability that good things are going to happen. But if you wait for all three to happen, the risk is that you miss out. And so when we get 2 out of 3, as Meatloaf said, it ain't bad, and we stick with the trend.
I get you, that we were due for a bounce. I think everybody would suggest that we were. But that doesn't necessarily mean that the risk reward for stocks in the near term, at least, hasn't changed, even if it's just an incremental move. You start talking about words like stagflation, et cetera, maybe that's a difference maker.
Well, I mean, there's no doubt, and it's been the case for at least 6 months now that we think the biggest risk to equities is elevated 10-year yields. That translates specifically into elevated real yields. We're right at the cusp. We're right there. When we get to this 2.25% in real yields, that starts to push against equities. It's not dramatic, but it certainly gives us more of an elongated pause until you start to catch your breath there. So we'll see what happens. But I think absolutely, if you had to say what is the biggest risk to equities here from a valuation standpoint, all these things filter back to real yields. And that's one thing that I think can keep a lid on things. But keep in mind, we are in an uptrend. And usually what that means is that you're going to go into a consolidation, you're going to pause, you're going to refresh, and then you're going to break out higher again. And I think that's what we're doing here.
Differences are obviously what helps make a market. I find it kind of interesting that whereas Adam Parker puts out a note suggesting he's less bullish, at least right now, because maybe China is not recovering like we expected it to, whereas you say you're becoming more strategically bullish on China. How so?
Yeah, that's interesting. I know Adam, but I don't read his research. But that said, we made a tactical call on China back in early February. Now, I will be the first to say that was luckier than it was good. I mean, there are obviously signposts that we used to buy, and it was really very timely. That was a tactical call. Now, sometimes, and this is one of those times, that tactical call will turn into a strategic call. That's because we start to see evidence that the trend's changing. We saw a breakout in Hong Kong. Obviously, that's the kissing cousin to China. We're now seeing a breakout, a 65-day breakout in the Shanghai 300.
The 50 days not yet through the 200-day, but the price is through the 200-day moving average. So incrementally, build by build, we're starting to see better things happen. And I think it's really reflected in some of the metals that we're seeing globally, right? I mean, copper is broken out. It acts well. Maybe what we're seeing is these interest rates here are going to end up putting a lid on the inflationary pressures, on the growth pressures here domestically, but at the same time, the baton gets passed to China, and they actually start to help elevate or at least buoy global growth. We'll see if that happens, but we think the equity markets in China have turned. They are turning, but we are actually making the case that they're turned.
All right, we'll see you soon. Jeff, thank you.
Thank you.
Appreciate your time. Jeff DeGraff up next, tracking the biggest movers into the close. Pippa Stevens is standing by with that. Hi, Pippa.
Hey, Scott. One streaming name is popping after a call. The stock is oversold. We've got all the details coming up next.
Trial. We're 15 from the bell. Let's get back to Pippa Stevens now for the key stocks she's watching. Pippa.
Hey, Scott. Philips is surging after the medical devices company agreed to a $1.1 billion settlement in the U.S. for personal injury cases linked to the recall of some of its sleep apnea devices. The company did not admit any fault or liability or that any injuries were caused by its devices. Those shares up 26% at a 2-year high. And Roku is in the green after Seaport upgraded the company to a buy. The firm said the stock was oversold on fears of streaming competition, but that Roku is central to the connected TV advertising market, and the risk reward is attractive. Scott?
All right, Pippa, appreciate that. Pippa Stevens still ahead. Tesla shares are surging today. The automaker reaching a key deal with China, marking a major milestone for its driver assistance service. The details and what one top analyst is saying this could mean for the stock, we'll tell you next.
Off your first order.
Coming up next, NXP reporting top of the hour. That stock seeing gains of more than 30% over the last 6 months. So can that momentum continue? We will discuss when we take you inside the market zone next. Bell Market Zone. CNBC senior markets commentator Mike Santoli is here to break down the crucial moments of this trading day. Plus, Tesla heading for its best day in more than 3 years. Phil LeBeau, of course, on that. And Christina Partsinevelos looking ahead to NXP earnings coming out in overtime. Mike, I obviously turn to you first. Okay, earnings are important this week. And I suppose not whether the Fed chair is going to be a little hawkish. It's how much. Yes. How hawkish is the question.
How much? Will he hold out hope that he still thinks that inflation on its own is going to moderate? Is he still going to focus on the lagging indicators within the inflation? Kind of be helpful to them at some point along the way. And yeah, as Steve was saying earlier, how much does he really think you have to slow the service economy down in order to get the job done at this point? And really, if he shows any tolerance at all for PCE inflation being in the high 2s, which is kind of where the committee thought it would be around right now too. So all that does matter. I feel like we got a nice little shakeout multi-week in the S&P, stabilized off of that. Market found its footing. Earnings do look okay in aggregate. That's not really a part of the story that you're worried too much about at this point. It is about what you pay for it. So you see some little sensitivity to the moving yields. At the top of the hour, you're mentioning the Treasury refunding report, which is so silly that the equity market is fixating on this. The bond market barely budged. And yet there was nothing else to focus on until 4 o'clock. And so there you go. It actually takes a shot. But I do think that also shows you the lingering trauma of last year. We're fighting the last war where it was Treasury supplies running out of control, yields are going to 5%. That was the story of late summer last year into October, and I feel like everyone's kind of making sure they're not going to be caught off sides on that again, even if it doesn't seem like as much of a threat.
How are you thinking about Apple this time around?
Yeah, I mean, it's interesting to me. You're up a little bit less than 3% on the Bernstein upgrade. The upgrade seems to me very logical. Like basically the stock had a lot of risk come out of it. The valuation is lower than it was. People have not really been expecting much fundamentally out of it. So it feels like it's fine, and it's interesting that it and Tesla bouncing today. It's kind of like the losers at the Mag 7 are carrying things, whereas you have the other ones are backing off today. So it makes some kind of sense. I don't know if it really makes too much of a thing about earnings at the later part of the week, because it's not that much of a business bellwether, because it's its own thing,
Sure, we will see. Tesla, by the way, best day in more than 3 years. Phil LeBeau and Adam Jonas likes seeing Elon Musk over in China, doesn't he?
He does. You'll hear from him shortly. Let me quickly explain what the China deal represents, the significance of it for Tesla. And it's all about the potential for future revenue growth, especially as it tries to offer full self-driving, or does offer full self-driving technology on a subscription basis or on an outright sale basis in China. This deal expands the driver technology ability within China, and it does clear the path for full self-driving rollout. Remember, it's not fully autonomous. It's just full self-driving driver assist technology, but they haven't offered it in China. Sources also tell us that Baidu will providing the mapping data. Regardless of the fact that it's unclear when Tesla might be able to tap into the potential revenue of FSD in China, Adam Jonas at Morgan Stanley likes this. He writes, whether Tesla's CEO is sleeping on a floor or on a plane, the message is clear. He's back. And because he's back, you got another pop in Tesla shares today. Keep in mind that the market cap, which was down about $460 billion just last Tuesday, now topping $600 billion. Gives you an idea of where we are in terms of the market and how quickly things can change, Scott.
Yeah, back in terms of, his takeaway is that he's focused on Tesla, all in.
Yeah.
The words that he used, Phil.
Yeah, he believes that. And look, if you take the conference call with analysts and you take the news over the weekend, these are the two best days. If you're a Tesla bull, the two best days that you have to hang your hat on to say, yeah, we have a vision for the future here. You didn't have that for the last month and a half or so.
I got you, Phil. Thank you. I appreciate that, Phil LeBeau. To Christina now on NXP. What does the setup look like here?
Well, I'm going to use onsemi, a competitor, as a setup guide, and that they guided actually below estimates this morning, reflecting softer auto as well as industrial end market inventories. Luckily, though, for NXP, it's less exposed to electric vehicles because it made sure not to overship just over the last 3 quarters. It also has fewer shares shorted than onsemi, according to FactSet. The concern, though, is NXPI, or NXP Semiconductors' exposure to China, given China was NXP's biggest market, contributing over 30% of total revenues as of last year. So watch out for any comments or slowdowns for that market. But both Evercore, ISI, and Mizuho are boldly betting the bottom is in for the auto cycle and anticipate improvement in the second half of this year. NXP also suggesting at their analyst day, which happened back in November,
All right, guys,
that they would revise their current growth.
Oh my god, that's so loud. Sorry, I had to take a nap. I have a migraine. It's hot. Cool down a little bit.
Reported 29 cents. That's
I think I'm gonna try and
for Lima Sandy Charlie. Paramount Global announcing Bob Backish stepping down.
Fuck.
That's Papa Alpha.
I'm not gonna be able to get calls unless I can get a pullback. I'll wait a couple minutes till after the market closes. I was really wanting to buy calls down here at 507. I said, during all this, that we'll pull back to 506, 507. This is still okay. It's nothing to be concerned about. So what I was just looking at was to see where the Euro market is. And you can see here the Euro market is pretty much, in my opinion, if I throw up a 15-minute chart,
MSTR MicroStrategy reporting
MSTR is out. Hold on 1 second.
a loss of $3.09. The estimate was a loss of 2 cents.
So
Revenue of
the Euro market's up there somewhere. 520,
121 million.
516 or so. So that's why I'd like to see if I can grab some calls right now.
SANM
And I'm going to get rid of,
reported
it's not going to give it to me, is it?
revenue of 1.83
You got to
billion.
be shitting me, bro.
858 billion for Sandy Alpha.
What's today, the 29th, the 30th?
93 cents in earnings. The estimate was $1.20.
I was really hoping for a pullback.
With their earnings report.
I gotta go back through all these levels and redo my charts, guys. I do apologize. Sorry for being tired today. It's been really warm and I was exhausted. I was exhausted today.
Market with their production order supporting mounted and handheld thermovision systems. Kilo less for Papa November.
Yes, well, I think Backish was expected to step down if that deal were to go through. So this would be part of sort of a transition here.
These 513s look good.
Paramount reporting revenue of 7.685 million versus 7.685.
Not really. You'd have to expect to lose 100% on those.
7.82.
Close to 100%.
So that's below estimate for Paramount. A loss of 88 cents. The estimate was 31 cents in earnings. 62 cents adjusted on Paramount. So that is ahead of estimate for PARA.
Okay, I was gonna say, hold on. 1, 2. I gotta hurry up before I run out of time.
Reporting 58 cents. The estimate was 58 cents, so that's in line. Revenue 361 million is ahead of estimate. 354 million the estimate for Kilo Foxtrot Romeo Charlie K.
That's so ridiculous. Unbelievable.
AMKR, Ampor. Ampor reported 24 cents. The estimate was 11 cents for Alpha Michael Kilo Romeo.
They are expecting a close to a 9% move on these.
LTRX, Lantronix. Lantronix reporting 11 cents. The estimate on Lantronix
Yeah, that's exactly right, Morgan. And I think what investors are going to be focused on, obviously, Apple, Amazon are big news
was
this week.
10 cents, so that's a penny beat for Lima Tango Romeo X-Ray.
Very different Jay Powell that we have seen over the last couple of sessions. Last couple of sessions, he's been very
FFIV, F5
that you're going to see rate cuts.
reported
Look at the consequences. We've had financial
$2.91. The estimate was $2.86. That's a beat for Foxtrot India Victor.
Let's go over MST earnings real quick.
Revenue that is short of the $684 million for Foxtrot India Victor.
I guess we got maybe a preview of that when Powell was in Canada, but how do you think the market's really going to react to that? How much of that?
A logic to acquire Endomagnetics for $310 million. That's Hotel Oscar Lima X-Ray. HOLX.
So they're pricing in a $61 move. Lately, these moves haven't been moving, even close to it.
WWD.
Oh, this might be close.
Reported $1.56. $1.62 adjusted for WWD.
From this economy, and particularly the labor market, wage growth is still running just under 5%. That is very strong. That is not consistent with a 2% inflation environment. So we need to.
All right, guys, I'm gonna head out here. I'm sorry for the stream today. I really am. Tomorrow will be better. A lot better.
Sales of $835 million versus the $807 million estimate for Whiskey Delta.
That's all I'm gonna say.
And it's recovered somewhat since then. Of course, we got Apple and Amazon too. But how much of those are just really their own stories now? That on the Amazon side, we've already gotten the cloud results from Google and Microsoft that were pretty strong.
Man, I just felt so dehydrated there for a minute. Excuse me. I think I just put down a whole bottle, man. God damn, son. Anyway, I'm so beat. I'm scared to turn on the camera. I'm so beat. I was gonna say bye to y'all, but I'll let you see me tomorrow. How about that? Is that a fair deal? Cool. All right. You guys have a great night.
And it's recovered.
I will see y'all right here, bright and early in the morning. Y'all gonna wake up, and we'll get a game plan together. I'll look and see. I'll get on my game plan tonight. I'm going to do my best. I am going to keep myself busy to not fall asleep. That way I can sleep all night tonight and be up bright and early, ready to rock and roll tomorrow. If you ask me, I think this market may end up gapping up tomorrow. Not really off of anything in particular. But MSTR here. Q1 2024 EPS $8.26. Gap 2024 gap EPS $3 may not compare to the 55 estimate. Sales 115, 115.2. That is a miss of 121.7 estimate. Q1 revenue. I guess they're saying more than 115.2 million. That's first four. Whoa. Oh, okay. I thought he was talking about doing a split. That was weird. They hold 214,400 Bitcoin. MicroStrategy, 1 quarter loss per share, $3.09. Q1 loss of a share, $3. That's so ridiculous. This fucking thing is bleeding money, y'all. This thing, a loss of 53.1 million. I wonder why. That's so weird. Alright guys, I love y'all. You guys have a great night. Again, I do apologize for the stream today. And again, yo, I tried to get on the stream last night, but I got back late. And there just really wasn't much. What did Baba do today? Let's see. Alright, so we got to the highs. That's exactly what I was wanting to look for. But I figured we could, like, get up there sooner than just all day. I guess that is a big move, but you never know. It could just continue to break out the highs. But I was looking to get short this thing, possibly. I'm not going to just short a something that's in an uptrend, or it looks like it's trying to start an uptrend. Alright, you guys have a good one. I'll see you all tomorrow and or tonight. But you guys have a good one. I'll see you guys tomorrow. Peace out.